day this is going to be. Speaking of the kind of day, let's pull up the graphic and show the type of show we have in store today. You and I are going to talk about markets this morning at 8:30. We're going to get Liz to join us a little before the opening bell and through the opening bell. And then we got Dr. Jim coming on solo, doing the Inside the Trade. Then we have some tasty research that'll show up at 9:30 Central Time. Then we have at 10 a.m., be Chris and Liz doing live trades. And then 11:30, something we started yesterday, and we're going to continue once again, yourself, me, and Errol doing individual trades, as well as Brent Kochuba from Spot Gamma.
It's going to be great.
Yep.
Love it. Yeah, we will be trading all day, and we're waiting with bated breath for the Google and Tesla earnings tomorrow. We wrote some earnings previews on the News and Insights tab on Tastylive if you want to check that out. But yeah, I think Google is going to be interesting. You've got 19-point implied move, and I think it's really going to be interesting to see what happens there, all things considered. You've got Texas Instruments also. I put on a calendar spread yesterday in there. That one is going to be potential barn burner here. $284 stock, $28 implied move, but only a $32 implied move for the next week. So that's why I went with this calendar spread, long the 10-day, short the 3-day. We also have Tesla, of course.
That was your Texan trade, right? Wait, can we pull those Google earnings back up once again, the preview? It's just interesting to me now just how much they have to focus on, not only cloud revenue, but I wonder at what point in time of the day they start talking about like data center revenue or something like that with these companies, But those are the big numbers, right? Like cloud revenue, cloud margin, CapEx. I mean, or if you're nasty, CapEx, however you want to say it. I don't, whatever. But these are the things that really matter now in a lot of these big tech names.
Yeah, I think these numbers are going to be astronomical, both on the revenue side, but also on the CapEx side or CapEx side. I haven't decided if I'm nasty yet.
I know, me neither. Right?
We'll have to see what happens there, but that's really that's going to be one of the driving needles of these moves in the stocks. But
yep.
Tesla had a big red day yesterday, as I predicted many moons ago. Tesla's selling off, finally fulfilling the prophecy. I had this wild assumption that Tesla would sell off when SpaceX IPO'd, but it seems like they're both just going straight to zero.
This stock's been really quiet, honestly, over the last several months. I don't even know why. I mean, it's not like I don't pay attention to it that much to know if they had any bad numbers, but I don't remember. But yet and still, I think maybe just the hype has died down some. Mm-hmm. Maybe that's what it is. And yet and still, the options are still like what? No, in the top 3 every single day. People still trading like crazy, but it feels like the stock really hasn't gone much of anywhere.
Yeah. Still super volatile, but a 23-point implied move for the 3-day cycle. And that, clocks in at like 6%, I want to say, for the stock price. So definitely some opportunity there.
Speaking of going down, Apple yesterday, right? After touching highs, and it has been the really good story more recently as far as the Mag 7 goes. And big turnaround yesterday. You wonder if that's going to continue. There's a lot of questions to be answered over the next couple of days here as we're starting to roll into these earnings.
For sure. And then, of course, you have IBM. That's going to be a really interesting one because they shot themselves in the foot and sold off 100 points in 3 days, 4 days last week. So definitely going to be wild to see. That what would be crazy if they announce earnings and then the stock just like rips back up. Yeah. That would be kind of wild. I think I might want to play for that, something like that. The news is out, the stock's down, then they report and they're like, "Oh, just kidding," and it goes up half the distance.
That's kind of my thought. I put on a short put that day. Was it the day on that day or the day after? I can't even remember, but I still have it on. Still deciding whether I'm going to keep it or just turn it into a different type of trade. Like you said, like in case it makes a real big move and I can play upside even better using like a diagonal calendar. We'll see.
Yeah. But lots on the docket. We've got Chris Vecchio on the line. I'd love to bring him in. I know Chris is a big Canadian wine guy, and we saw a headline this morning that your Canadian wine might get a little more expensive, Chris. How you doing this morning?
Not great, because apparently my Canadian wine got 50% more expensive overnight.
Yeah. Sometimes it be like that,
I didn't know Canada made wine.
I mean, I didn't know neither. That's what I was just saying to him. I didn't know that was such a thing. It's a delicacy, Canadian wine. Really?
Yeah,
Well,
I'm gonna sound like a fool here, but I feel like Peter Griffin in Family Guy when he's like talking to Brian. He's like, "Hey Brian, you know what I learned today? Dogs don't lay eggs." So
You got to say it like he
kinda
would
how I
say it.
feel right
Hey
now.
Brian, you know what I can't do it right now. But you know what I'm
Don't
getting at.
honestly, there are some pockets that have some really good. One of my favorite wine regions is Austria. Austrian wine is very good.
Yeah.
It's like a Pinot Noir on steroids.
Pinot Noir and steroids. Huh.
My wife went
sounds
down the
like
path of taking the sommelier test a number of years ago, and so it was a real shame having to go through all the wine tastings to help her practice. But like some of that Central European wine, so petrol-y, just not for me.
It's fair.
It just tastes like gasoline.
Well,
Now we sound really pretentious.
yeah.
We're talking good wine.
Can go further.
I know we can.
I wonder if
Certainly
there's
We
can.
don't drink Long Island wine in this household for what it's worth. That stuff is save that for the horses, okay?
Yeah, right.
Full circle.
Oh, you Westchester people.
How about this move in silver? Up almost 4%. Doubling,
Yeah.
quadrupling the move in gold.
I mean, hat tip off to Ilya yesterday for pointing this out. I mean, if we put all the pieces together, the dollar was stronger yesterday, yields were up, oil was higher, and that has been a really toxic miss for the metals in recent months. And yet they kind of just took it on the chin and kept going. So today, maybe perhaps a little bit of relief here. I'm still short gold right now. My cost basis is around 41.62. I'd like to get an ad below 39.55 if we clear out the yearly low, but we just haven't been able to push down through there yet. So depending upon what happens over the next few days, I'm fortunate enough that my guidepost for trading short gold right now has been the 1 month moving average. Something that we've closed below every single session since May 13th and rallies back into it. End of May, middle of June, here at the end of June, beginning of July, they haven't crossed that threshold. So if we were to get a daily close through there, just from my view, not that the 1 month matters, but in terms of the character of this downtrend, something has broken, and then being short would no longer be appropriate. So that's kind of what I'm watching for right now in the gold and silver space. Silver, on the other hand, as I was talking about yesterday with Ilya on overtime, a close through 58 should be a golden ticket for a move higher. The fact that I woke up today and it was blasting through 59 makes me feel like maybe I'm missing the boat a bit. So I'm in dip buying mode here right now. But something may be changing here. The fact that gold and silver, I mean, these catalysts that have been on the board have really, really hurt them in the recent weeks and months. They are just not responding negatively, and that does pique my interest.
Is there any scenario you would, excuse me, is there any scenario where you would remain short gold but long silver?
Probably
Yes, I found
not
it.
right now in the short term. Particularly if the AI trade is retrenching and we're going through all this tariff jazz again, silver beta is far too high in that regard. But Jermal, I mean, like even the past 2 days, I'm looking at this rebound from the lows that we had on the 16th. So we've gone from like 55 up to $59. Volatility is not expanding. One of the hallmarks of a sustainable bounce in the metals is volatility expansion alongside higher prices. And it's just not materializing right now. So I remain cautious here. I'm going to still stick short gold for the time being. Get us north of 4,100 and we can have a different conversation.
Fair.
Yeah, I think a lot of these, even though we're seeing a nice rally today in silver, a little bit of a rally in gold, it's been such a far fall. There you go. Far fall.
I was with you. I didn't notice
Falafel.
it.
Yeah. So yeah, I think if you get a continuation though, it's just like anything else, right? It's like if silver has a move like this today, another move like this today, another move like this today, then you're going to get the vol expansion for sure. So it's kind of
Much
let's
like
see
oil.
if this is actually something real and substantial and sustainable.
Yeah, much like oil.
Right.
And, go ahead, Chris.
I mean, you got to look at what's happening with yields in the dollar, broadly speaking, right now. ZB, ZT, ZN. I mean, look across the curve. They're all falling. Volatility is not going bonkers right now, and obviously volatility in the treasury space typically is low. But ZB, not for nothing, maybe through 110.5 today. ZN is getting closer, pushing towards that 108 level. Fed rate hike odds, they started to creep back up as well. The SR3s, for example, we're now pricing in a 20% chance of 2 hikes this year. There was a point just last week where we were talking about like a 75% of only 1 and a 0% chance of 2. So these odds are starting to swing a little bit more. Mike, I'm going to assume that you guys think the same way. Whatever's happening right now in rates and oil probably can be subsumed by whatever happens with earnings tomorrow, with Alphabet, with Tesla, because those are just such significant components of the NASDAQ that, yeah, if yields go up another 10 basis points, but earnings blow out, the NASDAQ is going to run higher and kind of sweep this problem under the rug for maybe a little bit longer.
Yeah. I think it's a slippery slope, though, if they falter and they have some, slowing down issues, or maybe the CapEx is too big. If the market thinks the CapEx is too big relative to revenue, that could create a big downside move. But I mean, we're just gonna have to wait and see. Today's an interesting day because it's like a waiting pattern.
That's the thing. We're in a waiting pattern, and I don't know about you guys, but like, how do I want to say it? I don't want to say there's really like there's been a lot of dispersion we've seen. We've actually made a play on that. And there was some note that came out the other day, and it was literally yesterday. I retweeted it. And, it was a Cboe note. And it was talking about how there's just been this underlying rotation into consumer staples, et cetera. And, I retweeted and I was like, we've been talking about this every day for 3 weeks. And somebody was like, who's we? I was like, who the hell you think? Like, you follow me, you should know what I do, and you should know what's going on here. I did get a little annoyed. I'm like, what the hell is going on here? Like, dude, I feel like every single day we talk about this thing, but my point is it seems like it might be changing a little bit right now. I don't know if that's just the earnings thing and things start to scatter, things start to change because of earnings, but it feels like it might be changing a little bit. We saw on Friday how we had that, consumer staples were moving up, and then all of a sudden they reversed, and then just about everything was down. And yesterday was a little bit weird. That's what I've been noticing over the last couple of days. And again, I don't know if this is just because it's earnings, but things are starting to get a little bit weird. And now, to your point, Chris, you talked about what's going on with the dollar, and that's the guide for what's going on with gold and silver. But as much as they're poking up right now, and I have this trade, I might close my gold trade soon, which is a long MGC versus a short call spread in the GC contract, because I'm winning on both right now. But I do think they're kind of weak, and it doesn't seem like it might hold. So, and then you got the oil situation, and things are just a little bit strange as of now to me, it seems.
Yeah, and the news flow, I don't want to ignore the news flow. China put out some news overnight that was aimed at helping stabilize their stock markets, broadly speaking. So Chinese stimulus, what does that typically do? I mean, look to the copper right now. Mike, you could go over to copper futures, HG. They're having another nice day, up 2.5%, crossing 650. The China-sensitive assets are the ones that are up today. And so you put those into a bucket, then you look at what's happening in the treasury space and the oil space, and you kind of scratch your head and go, is this a one-off? So gold hasn't crossed any thresholds for me. I'm going to remain short, looking to add in more below 39.55. But the pieces there that should bring it lower, not necessarily dragging it lower right now. The reason why I'm looking at bonds, though, instead of oil necessarily finding more follow through here, I mean, let's not ignore what Trump just did with these tariffs. The Section 338 of the 1938 Tariff Act has been used never before. He's trotting out a 96-year-old law that lawmakers put on the books and decided, this thing's kind of a piece of crap. No reason to use it. And he's using that to justify these tariffs against Canada. So talking about like scratching and clawing and looking for anything to enact his particular economic policy, it does add to more inflation. So ZNZB, yesterday TP and I were talking. We both were sitting in long put spreads in ZB. I was sitting at max profit, so I got out. There was no reason to be in that with just 4 days to expiration. I'm looking to get back in today. That's actually one of the first things I'm doing. I'm trying to find a setup here at the long end of the curve, which bigger products, so maybe TLT is the appropriate way for traders to think about this. It's a little bit smaller, different duration, about 15 years instead of 20. Point being, though, 31 days to expiration right now, something like the long 112, 111 put spread here, maybe even something like a 111, 110, looking for continued downward drift, risking one to make one effectively at a 50% probability of profit. I'm comfortable with that. It's obviously not a vol sell play, but the way that the yields are moving, you got to kind of not ignore them at this point.
Yeah. Oh, you got TP in a long put spread? I love it.
He got me into
the world is getting better every single day. I love it. We've gotten them. We've gotten them. Have you noticed how we've gotten to these people more recently? We've gotten to TP. We've gotten to Liz. We've gotten to them. I love it. This is great.
Don't let them know that, though.
I know. No, I won't say anything.
The long put spread in ZB
about it.
I mean, the nice thing about these products is the vol is really low. So if you do get a move, it's going to be great for a debit spread trade. 9% implied volatility. Same thing with TLT. Really low implied volatility there. So to your point, Chris, you can get super small in this product, 80 cents, $1 for at the money premium. So you can do anything you want in here, but I would keep it defined risk. I like the debit side as well. I've been doing like zebras in here in TLT just because the vol is so low. So that would be to the downside, maybe throwing on like a short 84, long 2 of the 85s. And yeah, that literally 1 point wide kills all your extrinsic value. $220 for unlimited downside profit potential on an $80 stock. Kind of an interesting thing here.
Can I throw one more thing?
That's what I was trying to think of. I'm just dusting off the bond playbook here because I think it's going to get interesting. Go ahead, Chris. HYG was the number.
Can I throw one more trade that your way that's a little tangential to this? If you were to throw $/CAD up on the platform, and if you were to imagine a 50-day moving average, it would be right at yesterday's low. What's remarkable about yesterday's low alongside of that is that you get this candlestick pattern. We move below the Friday low. We close above the Friday high. That's what one would consider to be a bullish engulfing bar or key reversal, right at its 50-day moving average. If we were to go over to 6C then, which would be a mirror image because it'd be CAD dollar effectively in spot terms, you see that there's perhaps an opportunity to do something like a short call spread here. So I'm looking at the 71.5, 72 short call spread here in 6C. I got filled on this. It's 15 pips of credit versus for a 50 pip credit range. So ideally you'd want 17 pips right there to do 1/3 of the width of the strike, but you're getting 15. Okay, close enough. Max profit of 150 versus a max loss of 350, 55% probability of profit. So kind of like right in that wheelhouse in terms of the tasty mechanics. It's also a tangential rates play given that fact that we're seeing yields go up. It gives you some dollar exposure in the event that things get a little bit more slippery out there. So different perspective right now, but a nice little technical turn at a key level with a key candlestick pattern and decent pricing that fit the tasty mechanics for a little bit of loony weakness. So I know we're straying away from the typical stocks this morning, but plenty of other people are going to be talking stocks. I'll be talking futures. So gold, Canadian dollar, oil, copper, that's all on the radar as far as I'm concerned.
Yeah, no, I mean, this is an area to be looking at, dollar CAD and CAD, considering the current CAD list. One other thing, too, I'm curious, with as Mikey's pulling up ES, Bitcoin, is this the beginning of a slow turnaround? Looks like it's trying. It really does.
Kai had a really great segment yesterday not for Confirm and Send market measures, talking about how the relationship between stocks and Bitcoin has evolved in the post-COVID era. And since then, we have basically a rolling correlation right now between stocks and Bitcoin of about plus 0.5. So modestly positively correlated. That's to say right now that if Bitcoin is going up, it's one of those things that I know I'm looking at, Jermal. You, me, and Mike have talked about this. Stocks are up. Okay, cool. Oh, but Bitcoin's down. If today was a real risk-on day, folks would be buying the crap that's Bitcoin. And yet, here we are through 66K. So if Bitcoin's turning the corner, if gold's turning the corner, I mean, what does that tell us about the state of the world? Do we really trust our adult longs? That's why I'm watching gold today. I'm watching this Canadian dollar because if these positions don't work out, there's probably other implications, particularly for Bitcoin here. So yeah, nice turn. Let's see if we can get it to stick. Volatility is just dead in this space right now, though. 1.3 IVR.
Yeah, and this is a super low reading, 44%. But if you are bullish on Bitcoin, this is exactly the chart you like. I couldn't think of a better chart to look at unless this was a gap, because this is just like we're at the top of this range, but this was just a liquidation event from 78K down to 68K, 10K range, just selling, no green bars, not even a question of a green bar here. So if we do get above this range here from 66 to 67, 68, maybe because there's a lack of resistance here, you start to get a little bit more of a violent rally to the upside, which would be great for those Bitcoin holders out there, which happens to be us by way of IBIT.
Yep.
And I've got 100 shares and a super mega, what are we going to call this? One short put to buy 2 calls? We got to think of a name for that.
I know, right?
It's a little bit more juicy than a Super Bowl.
Yeah, it is.
I'm just grateful that Bitcoin's just ever so slightly still below the level in which I had to get rid of it a few years ago, just for the sake of the conversation in the household.
Yeah. If it gets above, just put a piece of tape over the screen.
Yeah.
You know? And never change your watch list.
Why did we buy this house? Isn't Bitcoin double? Not anymore.
I love it. Well, Chris, appreciate your time. We will see you a little bit later. And yeah, we'll keep our eye on gold and silver, see what happens the rest of the day. E-minis up 30, NASDAQ up 380. Down the Russell chopping around as well. But yeah, Bitcoin going to be something to keep an eye on. We haven't seen a rally like this in quite some time. From the bottom of sub 60 up to 66K in, let's call it 2 weeks, and a bunch of big green bars here. So I think that is a decent sign at the very least. But I think this is going to be the question. Can you get above 67.6, 67.5? Because this is where we sold off from. We tried, we failed. We're trying again. But if you can get above, again, this is a big, just like, there's no resistance here. You could just see a vacuum kind of effect where you just go straight up through the channel. So
that's exactly what caught my eye. That's why I asked. That's why I wanted to get you guys' thoughts, because it looks like it's trying to go. It looks like it's turning around slowly and it's making a move. I'm seeing the IBIT. I'm up money a little bit, obviously, with the 100 shares as the start today. So something interesting is happening there overall. But you look at gold, you look at silver, you look at oil. If you want to lump Bitcoin in with that, you got a couple of different commodities making a move higher today. And that to me is interesting. So I just can't wait for the actual open to see what else is changed, or if everything that we know is still the case. What's going to move today? Is it going to be the chips? Is it going to be software names? I think software names are going to be down today. I think I saw some negative news surrounding them, a couple of those names. So those might be down today. Are chips going to be positive? Are consumer staples going to be up or down? This is what we come in every day and we think, what are we going to do today? The same thing we do every day, Pinky. Try and take over the world.
Yeah, you got Nvidia, SanDisk, Micron all up today. You got Microsoft down a little bit. So the story continues. The tug of war continues in those sectors. But I feel like I need something on an SPX. I've been itching for a Super Bowl here. We've rallied about 10 points. If you look at a 1 minute chart in the E-minis, we've had a nice volatile day in terms of range relative to yesterday. 715, we dropped from 75.20 all the way down to 75.07, and now we're back up. So I kind of want to get into a Super Bowl here. I probably won't do it in the 0 day. I'll probably do it in the 1 day. We're going to probably open right now. If we look at SPX, we're going to open around, what should we say? 7470 ish. So
something like that.
If we look at like a 7400, you could just do like a super wide one too. Give yourself a lot of room. 7400, 7390, and then a like 7500, 7510, or a 7505. Actually, I'm gonna have to go much further than this. 7550, 7560. That might work for a small credit. And just play the game of, if we get a continuation here and we go from up 30 to up 50 or up 60, this will be a nice trade. But I think I'm going to wait and see if we get a little sell-off here down closer to E-minis only being up 20.
Yeah, and vice versa. I'm waiting to see if we get a bump here so I can put on Super Bear, I feel. Yeah, the portfolio just doesn't do well when we pull back. It just doesn't. And I think it's better for me to do that.
Yeah.
So we'll see.
Totally fair.
Yeah.
Yeah, we threw on a NDX butterfly yesterday.
Yep.
These have been working nicely. And it's the same thing that we've been doing in SPX with the butterfly setup, just keeping risk under $1,000 or around there, and then just having a massive max profit here. So this one specifically, I got in for exactly $700, and the max profit's close to 20K. That's over 10 days. If you get it move exactly to 28,000 and you hold it and you pin it, not looking for that, but I do like the ability for this to really hedge like the whole portfolio. If we get a move down from 29,000 to 28,000 over the next week or so, if there's weak earnings, regardless of what earnings trades I do specifically, this will be a nice hedge against the portfolio. And we'll see if we can capture some of that value.
Well, I like it in terms of timing too. I mean, it's the end of the month. and it's the end of a very busy week of earnings and the Fed. It captures so many different things. We mentioned this yesterday when Kevin Dowd from NASDAQ was on the show, but it captures a lot of different earnings. It captures a macro event in the Fed, and it captures end of the month flows. It could be interesting. It could really end up being interesting.
100%.
I put it on with you.
Yeah. But yeah, other than that, we will really just keep our eyes on silver and gold. I think it's going to be interesting to see if I can do anything here in silver. I have 100 shares. My short call that I had against it fell off here. But I have a ton of premium collected. So silver, I've got shares at 87 from my short put that I was assigned on. And then I was just selling calls against it, picking up some pennies here and there. But I've got $2,300 in premium. So the break-even point is actually pretty close to where we are now, honestly. So we'll see if I can get any kind of premium here if we go to like the 31 day and just look right now. If we're we're going to open up 3 points, 4 points. So I think maybe looking at something like this, like the 56, 57, we'll see what kind of premium changes in here, but that'll be the move. And then if you get a rally up there, I can always buy this back, roll it to September, move it up. So that'll be the plan for the open. Craziness. E-minis chopping around up 30, NASDAQ up almost 400 points with the chips leading the way. But join us on the YouTube chat if you haven't already. We're going to be taking your questions and trade ideas throughout the day. And, we got a lot going on with this week with Tesla, Google, IBM, Texas Instruments, you name it. A lot of earnings around the horizon, and that will really be the narrative for the rest of the market. But we're going to take a quick 90-second break. We'll be back on the other side of it. You're watching Tastylive.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Get live trade ideas,
Technical analysis,
earnings setups,
option strategies,
macro insights
and real positions from traders putting capital to work
in real time,
only at Tastylive.
only on Tastylive.
Why do you want high Ivy rank when you sell options? Because you get more money when you open your trade. People get all tweaky when they don't know how a stock is going to act. They'll pay more for guarantees that are written into options contracts. And if they're getting super scared about it, they'll pay a lot more for the options. If you're selling those options, that means there's more credit you might keep at the end of the trade. Since Ivy rank measures today's Ivy against where it's been in the past, high Ivy rank tells you if people want to throw more money at you now. So look for high Ivy rank when you sell options. Pretty simple.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
What's up, everyone? Welcome back to the show. Hopefully you enjoyed that new intro as much as we did. E-minis up 28, NASDAQ up 380. We got Jermal in the house. We got Gus in the house. Gus is fresh off a trip to Vegas, place that never sleeps. Did you have any 3 standard deviation moves that resulted in more money in your bank account?
I had some 3 standard deviation moves. Unfortunately, they came to the downside. We had some. We caught some bad variance. It's the way the cookie crumbles sometimes. You don't take any money to Vegas. You're not prepared to lose. And boy, was I prepared to lose all of it and did. So it was a great time. I had a great time with the boys. A great time at the event. And yeah, happy to be back, refreshed before I jet back out this weekend to national parks. So all over these past 2 weekends.
Nice.
Yeah, we got lots of interesting stuff going on today. Also, yeah, new intro. Love the new intro. I leave for 4 days, and a new intro is here when I get back.
That's how it goes.
I don't even think I knew that was in the works. But that's great stuff. So yeah, we have all kinds of interesting stories happening this morning. Kicking things off, first and foremost, Novo Nordisk has gotten itself tied up in a lawsuit against Eli Lilly. They allege that Eli Lilly had misleading advertising in an ad comparing Eli Lilly's weight loss drugs to Novo Nordisk weight loss drugs. Now, I know this weight loss drug ecosystem is hard to keep up with, so if anybody needs a refresher, Novo Nordisk has Zepbound and Ozempic, while Eli Lilly has Wegovy. Correct? Is that? I'm reasonably certain that's correct.
Yeah,
I just prepared these notes before I went on, and I'm already getting lost. There's too many of them floating around. But Novo Nordisk is specifically taking issue with one specific ad where Eli Lilly used a what unit are these in? A 2.4 milligram, a 2.4 milligram dose of Novo Nordisk's treatment compared to a 7.2 milligram dose of Eli Lilly's treatment, and then just said Eli Lilly makes you lose 50% more weight than Novo Nordisk, when in reality they were comparing different dosages of the drugs, allegedly. That's what Novo Nordisk says. So that's what's going on with this lawsuit. Amounts are unclear at this time and may be up for a court to determine. But Novo and Eli Lilly are trading some blows here. And as somebody who has been long Novo Nordisk for the last year and not Eli Lilly, this is a move I'm happy to see. Finally taking some initiative over there. I see you guys doing something to try to hurt the competition.
Yeah, I mean, that's the biggest way that they can probably come back at him. And that's always probably the biggest risk for Lilly, right? Is lawsuits like this, right? When you're the big company, people are coming after your cash on the regular. So,
yeah, it'll be interesting to see how they open and how that pans out. But either way, Lilly's down right now, so they're taking a jab from NVO. NVO's kind of chopping around flat, so we'll see.
Yeah, I would be shocked if they can get this to stick to Lilly. Obviously, these big pharma companies all have more lawyers than you can count, and this is a seemingly sort of minute, nitpicky thing. Like this is not good. You're not supposed to do this, but are they really going to be able to get it to stick to them in court? I'm sure Eli Lilly can throw their hands up in the air and say the medicines are effective at different doses, blah, 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 and something will work out. So I don't know. I'd be shocked to see anything come from it. But like I said, Novo has been down in the dumps for a little while, although stringing together a nice month here. But it's been hurting seriously off the highs. So as a holder, I'm happy with it. Second thing on the docket for today, Nvidia. I often joke about how $1 billion is like $5 to Nvidia. They'll just hand $1 billion out to somebody asking for it on the street, and that's what's going on here. As Nvidia has disclosed a 9.3% stake in Nebius Group. This has been a trendy stock over the past year or two. NBIS is the ticker. You'll see it pop up every now and then on your high options volume or daily movers type screeners. But yes, Nvidia has disclosed an SEC filing. They have a 9.3% stake in the Dutch neocloud company of Nebius. Shares of Nebius set to open up 7 to 9% this morning, and shares of Nebius also up 250% in the last 12 months. A pretty integral part of the AI boom. For those unfamiliar, Nebius essentially the Dutch equivalent of CoreWeave. They do cloud computing, not as much GPU AAS as CoreWeave does, but it's a cloud computing. They sell off compute company, a similar business model to what Meta is now getting into with their extra AI compute.
Love it. Yeah, we were just talking about Nebius a couple of days ago on the math check. And yeah, this thing's up pre-market about 13 points. Got decent volatility, and these are the things you want to see if you're looking for a mover and a shaker, for sure.
Yeah, I traded this a few weeks back. It was actually the July 31 expiration when it was about 30 plus days out. But yeah, I haven't had a position since. Would definitely look to get back in at some point, probably after earnings.
Yeah, I don't know that I've ever traded this one. This is one's I've always just sort of felt like I have no feel for. A lot of these foreign tech giants kind of get that way to me. But yeah, I don't know. Like I say all the time, Nvidia, they got more money than they know what to do with. So I suppose one of the things they decided to do with it is buy 10% in Nebius. Why not?
I mean, it's smart. Why not? Put money in some of these other companies that are in the space. I mean, and they understand the space, so they know who to go after. It makes sense.
Well, yeah, and I mean, it allows you to kind of skim from your competitors a little bit. I mean, if there's Nvidia competitors who are using Nebius' services, and then Nvidia has a little bit of ownership there, it brings some of that competitor money right back into Nvidia's pockets. So, yeah, never hurts. Beyond that, we had all that we got. We're in the thick of earnings season right now, as I'm sure it's not lost on anybody. But just to rattle off a few of those that have gone off since yesterday's close, General Motors posted $3.57 per share on $48 billion in revenue. Both came in above expectations. Looks like shares are set to open up about 1% in GM.
Did they mention AI at all?
I don't believe they did. I don't believe they did.
Just it's funny.
They should have done that at least 5 or 6 more times. You gotta find a way. General Motors. What year do you think it is? Beyond General Motors, Domino's Pizza. Domino's Pizza was like a really underrated grower for a long time, might I add. I'm not sure if that's still the case. I haven't checked in a few months, but they are set to open down 1%. Just missed expectations of $4.17 per share on their $4.07 per share report. Revenue of $1.19 billion and $1.18 billion expected. So perhaps, arguably, maybe a little bit of an overreaction even for this to open down 1%. Pretty much coming in right on those numbers. TSM, not an earnings report, but shares of TSM set to open 3% higher after an Asian news source has reported the foundry will raise prices for chip making services by up to 10% next year. So as demand goes, prices go with it. I'm sure you all have seen the graphs. If you haven't seen a supply and demand graph, let me tell you, it's an important thing.
You know what's interesting about TSM is I did a math check yesterday just comparing the weightings and concentration of the top 10 holdings in SMH, QQQ, and SPY. And I had no idea that TSM was number 2 on the list in SMH.
Huh.
Which is crazy.
Mm-hmm.
I mean, Nvidia's number 1 across the board for all 3, but TSM is number 2 in SMH, and that was surprising to me.
TSM's like, I don't want to say the large, but it's a huge chip company. Like it's enormous. We don't talk about it enough.
$1.9 trillion.
Talking about like Micron and all these other ones, but it is huge.
Yeah, I mean they're the 6th biggest company in the world, and I mean when you talk about the semi space, I feel like it's Nvidia and Nvidia's brothers are the first direction that you go. You go Nvidia, TSM, ASML, and then what comes after that? But I guess that's a deserved spot. I can't think of a company I would say deserves the number 2 spot in SMH more.
They got to crank up their marketing efforts here in the U.S. I mean,
no kidding.
I guess Nvidia.
I mean, maybe they don't.
Don't they know how to get to us? Just put it on the TV. There's crazy stuff going on.
Yeah,
it's Nvidia, TSM, AVGO, and then SK Hynix after that. But yeah, I mean, and it just doesn't do as the type of moves more recently. It does, but it's just different. I don't know. It's just. It's a trip.
What a shakeup with the top 15 largest companies list has seen over the past just 6 months. It's quite the turnover. You know, we always have a name for this top index, Mag 7, the FANG index before it, but it's important to remember that these things are ever changing. Companies that you see as installed in that index, sometimes more made up than others of the top 7 to 10 companies in the world. They feel invincible. They feel like they could never lose that spot. But the nature of the market shakes things up, and all of a sudden you got TSM, SpaceX jumping into the top 10, SK Hynix, obviously giant as well, Samsung at the 12 spot. It's interesting how these things turn over.
Oh, SpaceX is green pre-market. Say it ain't so.
Yeah,
Say it
right.
ain't so.
I don't know if it'll last.
It won't.
SpaceX is allowed to move up.
I guess.
SEC
Temporarily.
The SEC took off the hold at 130.
Temporarily.
Yeah.
But yeah, SpaceX catching a bid pre-market. SK Hynix catching a bid pre-market, just reversing the move from yesterday. This is going to be a super volatile one. Like, look at these bars. These are 10-point bars every single day. It's kind of crazy considering it's a $150 price point.
Bars.
SK Hynix spitting bars.
We also have SKHX now, 2x leverage SK Hynix.
How?
Yeah.
These things happen quick, but I tell you guys specifically because we were upset there was no X in the initial ticker for SK Hynix. So the 2X leverage people have taken care of that, SKHX.
I saw that one day. I didn't want to enrage you, but yeah. I saw that when it first came out. I was like,
I've come around on SKHY. It's SK Hynix. It's right there. It's the first 4 letters. How much can I really critique that?
Yeah. I was in the SKHX camp myself, but as time goes on, you start to just release your qualms and accept.
If I'm going to be mad about things, I'm going to be way more angry that Apple is an APPL. But,
man.
That's been that way for years.
Now you're going deep.
Just saying. I'll leave with that.
Well, Gus, thank you. Appreciate your time. We will look at these stocks as they fly around. NVO, LLY, I think that'll be interesting. See how that narrative shakes out. But we're going to take a quick 90-second break. You're watching Tastylive.
Putting on strategies, that's easy. Taking off strategies, that's also pretty easy. But what do you do with everything in between? Well, in our Options Crash Course Strategy Series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1. And BrokerChooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
What's up, everyone? Welcome back to the show. My name is Mike. I'm here with Jermal, and the markets are chopping around just a little bit, but we got Liz Deerking on the line. And Liz, we have not yet placed an SPX Super Bowl in the Global Trading Hour session, but I'm wondering if you have.
I took a page out of your book. I did one yesterday on the close because we were down. So that's what I figured if we're down, I'm going to lean into this because yesterday was a whippy day in the market, right? So we wound up closing down 75. Now, that being said, I have a drinking game for the people in the chat.
Ooh, nice.
Ooh.
I love this, and you guys have corrupted me. I'm officially corrupted by Mike and Jermal. I'd like to say that for the record. But anytime someone says super bear or super bull, I think everyone should take a shot.
The show wouldn't
Shot
last
of
very
what?
long.
I know, right? I mean, a shot of what? Coffee?
Shot of coffee, that could work.
Anything you want, Jermal. Anything you want. What's your drink of choice? What were you drinking at your 50th birthday party this week?
I wasn't drinking the same thing at the party that I ended up drinking at home when I ended up staying with a couple of friends until 3 a.m. Let's just say that. It's different. I was just drinking high noons. Like when I'm like out and being social, it's usually like high noons or sun cruisers, you know?
No, and I feel like Mike would be doing shots of like wheatgrass. So healthy.
That's so kind of you. So kind of you. No, I'm definitely a beer guy. So I have this issue where this is gonna sound crazy, but I just chug everything. Like regardless if it's water, coffee, like I chug it. So I actually have to stay away from the cocktails or what. Like I like the beer.
I like
light beer. Because I just chug. I don't know. Like, one time
I don't know any other way to drink. I just chug.
Jamal, can we take him out drinking? Please.
Of course. Of course.
Yeah, I don't know what it is. Like one time I played golf and I'm sure people can relate to the giant Dunkin' Donuts, like coffee. So it was a giant cold brew. And by the second hole, it was gone. My friend looked at me and was like, what is wrong with you? I'm like, I don't know. It's just so good. I just got to drink it, you know?
You only know one
that's
speed.
my issue.
You only know one speed.
All right, so
what
what
about
are
you,
we
Liz?
trying today,
Actually,
then?
I know the answer. For you, it's Prosecco, right?
Oh yeah, I drink Prosecco like it's water. I chug that. Okay, with that being said, what are we trading today? Because honestly, it's all about gold, silver, and Bitcoin, and I am saved.
Yeah. That would be great for us too. We got some long positions in IBIT.
Yep.
We've got long positions in gold and silver.
Mm-hmm.
I actually have 100 shares in IBIT and silver SLV. So this is a great move here.
We've been waiting for these moves. It's like, guys, where you been?
We have been waiting for these moves.
We're
Now,
waiting
my
on them.
question is, are gold and silver going with, I know for a while, Bitcoin was up and gold and silver were up and everything was awesome, right? And now they're both getting the bump today. Now, the Bitcoin move is because all eyes are on, the Clarity on the Clarity Act that's going to come out at some point this week. Trump, I guess, and once again, I'm putting air quotes around this. Trump apparently agreed to an ethical comment in the Clarity Act, and that's why I was up this morning. I don't know what that means, but all I know is that there should be some clarity on the Clarity Act at some point this week, which should be good for all cryptos.
Well, and that's great news, but even better than that is, as we were talking this morning, just look at this pattern. It looks like it's trying to break out of a range of it can get above a measured move above 67K and actually get to 70. All bets are off in a positive way. This thing could really take off. So the positive news is only making this even better.
Okay, so my question, and it's not in the poll yet, if it does take off, you think it's going back to all-time highs?
Whoa.
I don't know about that.
Whoa.
But that'd be great. I would love that. Because that means if Bitcoin gets to all-time highs, that means the E-minis are at 8,500, the Nasdaq's at 35, like 35K. Like it would just be, there's no world where Bitcoin is back at all-time highs and the E-minis and Nasdaq are not just like screaming higher. So
I agree with you.
Well,
I agree with you.
And also too, I mean, I don't know, Liz, it has a lot of damage to repair. I mean, look at that, damage in that range right there, like that big waterfall. I mean, it's got some damage to repair. So there's going to be some time before we're seeing all-time highs. I think it's going to be a while. Again, we just need real positive news and we need sustained positive news. We need the situation where it's like, wow, Bitcoin is up. Why is it up? Every day it's up. That's what we need. That's when it gets to all-time highs. We're a long way from that.
And that was a pretty painful fall, right? From up that high. Mm-hmm. So it does have a lot to recover from. Recover from. But is crypto, what is the volatility in there right now? Because I found it fascinating. Oh God, MSTR is a good one too.
It's pretty low.
Because the volatility in cryptocurrencies used to be very, very rich, and now it is not.
Correct.
Yeah, only like 45%, which is pretty low. That's usually Bitcoin always had like a higher IV than your general tech stock that wasn't a crazy tech stock, but now it's the opposite. Right. You're down below a lot of these tech stock implied volatilities. MicroStrategy is the exception with 100% IV across the board, but as you know, that is a levered product, really. Like that's how it behaves. So MicroStrategy catching a bit back up above 100, which has been something that they have not been able to do or sustain for a couple of weeks here. So, but this is a similar chart, just red day, and just a massive fall from the highs here. And this is just the recent highs. This is not even the mega highs that we saw a couple of years ago. But yeah, I like the way that this is shaping up, just because anywhere you look, whether it's IBIT, Bitcoin, MicroStrategy, you just had this like vertical double black diamond shoot down here from 44 to 36. So maybe you see a reversal because there wasn't much resistance on the way down, and maybe there's not much resistance on the way back up. If that's
and I am talking my book right here because I am long. I'm long IBIT. I'm long ETH A. I'm long ETH B. And I'm so thankful for those products when they came out, because we can trade crypto on here. You can go to the trade page and you can go into Tasty and trade. You can buy Bitcoin, you can buy Ethereum, you can buy XRP, you can buy all of that stuff. But all of that is it's cash secured, right? So every dollar you put into actually buying Bitcoin is $1 in your account. And with this ETH and IBIT and all these things that are out there now, you can actually use a little bit of leverage, right? So there's options on them. You can sell things against it. You can do some things so you're chipping away your cost basis. So I think my trading in these crypto products really changed when these ETFs came about.
Yeah, and they're liquid too. And then the even nicer thing of all of it is that they actually trade along with they're good proxies. They trade along with the actual futures. Like we've had other products in the past that just didn't work out well. But these do.
Yes, which is kind of crazy.
Yeah, I have 100 shares in ETH as well. Just realized. You can see this little flag here for the 100 share mark, but I think for this one, I'm just going to hold on to this. This has been a pretty volatile one anyways.
I'm going to buy some shares in here right now, actually.
There you go.
Do you guys ever look at ETHB? ETHB? So that one, this was fascinating to me. So this is well above my pay grade, but this was people were talking about how you can stake cryptos, and ETHB does the staking for you. So in my mind, I can rationalize it saying it's almost as if it's a covered call fund, right? So it's Ethereum, but it's staked. So you're letting people borrow it, and you get to kind of keep the premium from there.
I like it.
Yeah. So I dabble in that a little bit too.
Yeah. I think all these products are nice, where you have the slight differentiation, and you can really pick your poison with these things. But I think between IBIT and ETH, it's really low price points now, but even at their highs, IBIT got up to 70. Like that's still super digestible for all account sizes. Right. But yeah, I want to see what happens here with IBIT and ETH. If we get closer to 18, that's where my basis is in ETH. I'll start selling a call back against the 100 shares. IBIT, I have 100 shares, and then I have this Super Bowl set up with the intention to take another 100 shares if we stay below 35. But I always have the ability still to sell an extra call against this 100 shares as well. So my basis is down at like 35 because I collected so much premium last year in here. $3,300 in premium collected, $3,400 in premium collected from last year. So yeah. We'll see.
I'm glad you're going to have Tim Knight on later, because I'm hoping, because I'm bullish, you're bullish. Jermal, all the three of us are bullish in both cryptos and gold and silver. So we need Tim Knight. We need our bear.
Well, he does have...
In those? No, he's kind of bullish.
He does have flashes of bullishness.
Yeah, when it comes to like metals.
Yeah.
Oh, metals he does. Metals he's got flashes. But cryptos, I'm pretty sure he's a perma bear, isn't he?
I think so, yeah.
Might be.
I think you're right.
The other thing, I am bullish, but I'm starting to, I don't know, this rally it's been kind of weak the last couple of days here, guys. I think we're in interesting territory, especially around these earnings right now, as earnings are starting.
Are you talking cryptos or metals?
No, I'm talking about ES, actually.
Oh, yeah. I don't think this rally is going to hold. It didn't yesterday, and I don't think it's going to today.
Yeah, right? I feel like that too. I don't know.
Yeah.
Is this your super bear time?
It is. I want to see if we go higher before I do it.
You gotta take a shot.
I want to see 50. Like kind of like yesterday. You'd done it there. That was easily a quick how many handles was that yesterday? We had a 75-point range yesterday.
Yeah.
Yeah.
Right now we've got a 30-point implied range for today in the E-minis. We're up 36 right now. So we're at the upper bound if we were to just reset. But looking at these in SPX too, you got a 45-point implied range in SPX and a 100-point range in the next 3 days. So you can clearly see that the market is waiting for this Thursday implied volatility. You got 15.7, 15.8, and then it jumps to 16.7, which is reflective of the post-market announcements in Google, Tesla, IBM. These are the things that can really move the markets. Texas Instruments. So that'll be the test, the first test of whether this market can stay afloat here.
Do you know what I've been loving to trade? And I do it pretty much. I do it almost every morning in one of my accounts. In the 0 days, I know we like the Super Bowl, and I do those. I had one in from yesterday, but I've been doing downside broken wing butterflies where I break the wing and take a credit in, and those have been great, even on up days like this, because sometimes I'm taking a credit in for them, but I have the shot of collecting a lot more. Right? You have to do the math. You have to figure out where the expected move is for the cycle. So in this one, what is it? You've got
74.80 probably, yeah.
So 74.80, and then you got to take away $45. So you're going like what, 40? Yeah, it's right. It's kind of where the at the monies are right now would be the expected. Where is the downside brown bar?
Yeah.
Ish. So, if I buy one, sell two, and then break a couple wings, make sure that you're taking in a credit. And it's been kind of fascinating because with that two-way action, you know what I mean? Like I did this yesterday before the open, and we actually rallied right after the open a little bit yesterday. And I wind up doing what I did, Jermal, with the natural gas position. I immediately put an order in to create that where the butterfly, where I sell out of my long and create the symmetrical butterfly where I'm locking in a credit. And that's been great because sometimes you can catch a falling knife. Yesterday, I didn't. I was this close to getting it within that downside butterfly that I had on.
Yeah.
So you know what I mean? Like a downside ratio spread where you break the wing and then you're taking in a credit.
Yeah.
And then if you get the up move, because this is all gone in one day, you can sometimes butterfly it off and you can catch a falling knife and you can get some really decent profit in there if you do it.
Sounds like a nice trade. Yeah. I mean, look, these markets are moving around and even especially you can put something like this on in the morning and kind of see how the market ends up playing out.
Yeah. Yeah. Similar to this. You have a credit in for that. There's $1, right? How your wing is broken by a little bit. There you go. And then, like I said, Mike, and I know I did this with Jermal the 1 day in natural gas futures because you can do them in the morning. You can do those pre-market too. And then immediately, if I get filled on this, if you've collected $1, I try to move my shortest, the long that's like the least up to create a symmetrical butterfly while still locking in a credit. Like I'll put it in for 75 cents. So I'll have taken in 25 cents and I've got the shot today, if the market reverses, of making some more money.
Yep.
I've been doing, yes, those have been pretty consistent. Now, I'm not going to lie to you. I think there's been one where I hit that butterfly where the rest of them, I'm just taking in the credit. So am I throwing money away by moving my one? Probably, but at least I've got the shot and take the risk off the table.
Yeah. I think there's a lot to be said about removing the risk and removing the buying power requirement too, where you can use that for something else. And then you have a stress-free remainder of the day. You just have that downside shot. But yeah, that's the name of the game with these broken wing butterflies. You pick up a credit with a asymmetric credit spread that's wider than your debit spread that you're buying. So this is 10-point wide debit spread, 20-point wide credit spread. If the market rips up 10, 15 points, you can probably move this 74.70 up to the 74.80 and create a 10-point wide put spread against a 10-point wide credit spread. Debit spread versus credit spread here. So you have no risk as long as you have routed that thing for a credit. So really the key, like Liz is saying, you've got to make sure that adjustment from 74.70 up to 74.80 is for a debit that is less than your initial credit received, and you lock in a free shot with a small credit overall.
30 seconds here, guys. 30 seconds. We're starting to push up a little bit into the open here, similar to yesterday.
Yes, yesterday we did push up into the open as well. Were you guys watching the VIX and the volatility futures yesterday? It was so bizarre to me because at some point, vol was down and the market was down. I was like, that's not right.
Yeah, maybe
it was. I mean, it was very slight, but I was like, that's always a telltale sign that something is awry.
Yeah, I think yesterday was another weird day too, where in the morning, we were talking for 15 minutes straight, and the E-minis had a 2-point range, 5-point range.
Yeah.
So it was maybe it was related to that. Where to your point, it's down a little bit, but maybe it was a volatility crush due to the intraday range being smaller.
Yeah.
Look at this thing ripping
look at
higher.
the bar going up and up and up.
I got to do it.
You're doing it, Jermal. This rally is good enough for the Super Bear.
Yeah, and I hope I'm wrong.
Ooh,
I want to lose money on it.
We're fading.
There we are.
Actually, you know what? I think I'm going to join you on that. I kind of like that idea.
I don't like when you two are on the same side.
Just for today. Maybe just for today. 75.
I'm trying to buy the
75, 15, 75, 25. And then you buy the 74. 74.50,
I'm out of mine.
74.60.
I'm out of my one from yesterday, Mikey. $200.
Love it. Love to see it. Yeah, this is flying around here.
It really
We're
is.
fading.
Yeah. I know.
Can't keep up.
I know. Damn
Come
it.
on, you can do it faster.
Come on, bounce back.
Faster. Yeah, I think 7,500, 7,510.
That's what I have on that short call spread.
Yeah.
And
There's not a lot of credit right now. It's kind of these markets are kind of weird.
Yeah. I need it to pop up a little more.
These markets are saying
you need
nothing to
wait.
see here.
But I do want to sell the 7,500, 7,510 and then maybe buy the 74, 75 or 75.60 put $15 wide, but I'm not going to do it right here. I'm not going to force it. I'm going to wait. I need another.
Oh, I was just filled.
You got filled?
20-cent credit. I did the 75.10, 75.20 right at the expected move to the upside. And then I bought the 74.45, 74.35 put spread. So,
Mike, to make you feel better about your trade, the 75.20, 75.10 has already been trading quite a bit in the Cboe active, most active.
Love it.
So
looks like it's a positive day for the chips. I see SanDisk. Well, storage as well. Chips and storage. I see SMH, SanDisk, Micron. They're all positive. Ooh, Circle. That's making a move, bro. Cryptos are back.
They're back, baby.
CRCL.
They're gonna save me.
all right. So we got into that super bear, a little hedge against the portfolio. Texas Instruments up $12 right now.
How about that?
Now, did you do any earnings? And what earnings are you the most excited about today?
Didn't do any last night. I mean, GM, GM doesn't, Halliburton and GM and 3M don't move my boat, although it's fun to say GM and 3M in the same sentence. But tonight,
there's really not much tonight.
Yeah.
Tomorrow's the big day, right?
I know,
Wednesday?
Yeah.
Yeah, tomorrow we have Texas Instruments, IBM, Tesla, and Google.
ServiceNow.
Philip Morris,
as well.
too. Don't forget about that.
Ooh, can't forget about Philip Morris.
No, I think tomorrow is the big ones. It's so funny because everybody gets so excited and then it's like, oh, nothing until Wednesday.
Yeah,
and then we're in that thick of it.
For sure. But yeah, let's see if we can do anything in silver. Sliding a little bit. Actually, no, it's up $2 here. 100 shares. My basis is at 87, but my actual basis with the premium received is at 65. There's probably no premium at 65, so I might just
do you know what I do to protect my long stock? And this is probably, you can talk me out of this. I do downside ratio spreads to protect my long stock where I'm taking a small credit, making them as wide as I can, because then I can dollar cost average, right? I know it's actually more not capital efficient, but I will do downside wide ratio spreads, hoping that if it goes down and I get back in it, if you can handle 200 shares, then the ratio spreads are a good way to protect a stock.
For sure. Yeah. So like in this case, it would be 51.48 for a small credit. Or you can, if you're making them as wide as possible, giving up that credit, but still routing it for a credit.
Yeah.
51.48. That gives you another $300 of downside protection. And to Liz's point, like this is how you can really dollar cost average down, because your break even on this trade is down at 45. And if you take 100 shares at 45 and you already have 100 shares at 87, you just cut your basis in half. Now you have an average basis of 60 something with 200 shares, and now you can sell calls against that.
Right. Or if it ends at 48, if you time passes and you end at 48, then you've just taken $300 in cost basis off your long stock.
100%.
Yeah. So I mean, I know it's counterintuitive. Usually you're looking for premium on the call side, but when my basis is so far away and I don't want to sell the call, I'll protect it with the downside ratio spread.
I like it. Yeah. Especially, if you intend to take another 100 shares, 100%. Love it.
Now, I will tell you, there's been times when I protect with the downside ratio spread, and all of a sudden I keep doing it and I come in way too long. Way too long. Because if I keep doing it and you keep doing it, then you have to be comfortable with what your total is.
Yeah, for sure. What a day. What a day we've got going on here. Just looking at...
Come on, get me filled. There we go.
Ooh, Circle.
SPX.
I forgot
Okay, and I know my time is coming to an end here.
You remember?
I forgot.
I'm sorry,
I know
what'd you
my
say,
time
Liz?
is coming to an end here. So I need predictions from both of you. And we're going to talk only SPX because I love SPX. Where do you think SPX is going to end the day? And we're going to start with Jermal. I guess you go with that.
What do you mean? Like I got to give you an actual specific number?
Yeah. You give me a number.
74. 62.
Ooh.
Ooh, you think it's down from here? Okay, 74.62. We've got one bear. Mikey, what say you?
You know why? Because that means I don't win on my super bear and the market ends up lower too.
I was going to say 74.50.
74.50.
Just erase this whole move, bring us down to 74.50. But we'll see. I mean, we're only 10 points away from 7,500 in SPX, and I think that could be a little magnet.
That's what I'm saying. Hey, you're taking my thunder. I'm going 7,500 even. And I'm going to say it's going to be like 7,500 and like 1 penny. We're going to hit it. We're going to hit it. Today's the day.
Yeah. Well, Liz, appreciate you. We'll see you a little bit later today.
Happy trading, guys.
Thank you.
Have a good day.
Likewise.
All right, bye-bye.
Yeah, E-minis are trying so hard to rally further than the 30 handle, up 37.50. NASDAQ is above the 400 handle, up 430. We got TP on the line, though, and I want to hear what he has to say, what he's looking at with some of these zero-day trades he's been doing so often. TP, how you doing this morning?
I'm good, thank you. By the way, I'm going to start working on a self-help book for broken butterflies. Where, you have people like you yourself, Mike, Liz, Jermal, abusing them, breaking them. And rather than just lead lives of little, misery, I'm going to write them a self-help book to pull themselves together and hopefully lead happy, productive lives. All right.
What are you going to call it? What's the title? The broken.
Well, I don't know yet, Jermal. That's what I was going to ask you. You're an idea guy.
Thank you, buddy.
And so and you have your finger on the pulse, Jermal. I want something that's going to work in 2027. You know what I mean? Because it's going to take me a while to write it, but by the time I get it to the publisher, et cetera, et cetera. Anyway, we can work on that later.
I got it for you. It's called the broken butterfly. That's it.
The broken
butterfly. See, because it's broken.
Maybe.
And then we're broken by the way that we, it's
maybe
the emo butterfly.
Yeah, the emo butterfly.
So here's what I'm seeing right now. When I look at a map of the green and red in the S&P 500, there's a lot of red. Basically, the market right now is being held up by Google, Avgo, Microsoft, and Amazon. Nvidia is flat. The bank stocks are down. A lot of the industrial stocks are down. I'd say a majority are down. So I think there's a lot of weight on the market right now. You guys are talking to Liz about where you think the SPX is going to be. I kind of agree with Mike that we could erase this $38 rally. The other point is too, if you open up the 0 DTE options, and Mike, do you have the open interest up on there?
Yeah, I do.
So you look at the open interest. There's a lot of open interest at the 7,500 calls. So I'm not saying that the SPX pins necessarily, but there can be some pulling towards a strike with a lot of open interest. So Liz's point is 7,500 calls. They have 10,000 of contracts of open interest there. That's pretty high relative to the other ones. There's some 7s and 8s and 7s, so we could see a rally. But down on the bottom, down by the 74.50s, and there's a lot of open interest on the put side. Personally, I think they might pull them down towards those levels, like the 74.50s, 74.30s, something like that.
Well, that'd be great because I have a super bear here where we sold a call spread to buy a put spread. Jermal has one too. So yeah, that'd be great. It would be a nice hedge against the gains from elsewhere.
Yeah, it really would. I love it. CP, I want to get your thoughts on bonds in this area. I mean, I feel like it's a hot button topic. Chris was talking about this morning. Apparently you guys have been talking about bonds a whole lot, and we're hearing about tariffs again in Canada. Is there anything that you're seeing in bonds? Because I'm just like the worst bond trader.
To that point specifically, Jermal, I'm going to short some call spreads in 6C, the Canadian dollar. Just because, I know it's down and, not a contrarian, but whatever. The skew is pretty flat in the 6C options. And again, not to get away from bonds, Jermal, but this whole tariff thing, I think could just weigh on the Canadian dollar for at least a short term, for at least the next month or so. So I'm looking at like 17-day short call spreads in 6C. As for bonds, Looking at they're obviously down now. ZN's volatility is about 5%. ZB volatility is about 9%. So I'd still argue that ZN's volatility is elevated relative to ZB. So the big news yesterday, I don't know if it was the big news, Jermal, but what came up was that the 30-year mortgage had gone back to its highest level in a year or something like that. So there's a lot of upward pressure on rates towards that far end, the 10s and the 30s. And yeah, if I don't mind, I would go in and do, let's say a 10-day. I'd buy in bonds ZB, sell the 110s, buy the 111 puts. So I'd buy a put spread. And again, this is me just being cute with the volatilities. You could sell a call spread in there, but I think relatively speaking, bond volatility is inexpensive. So I'm just leaning on debit spreads here. But something like that where it's basically a 50-50 bet. You do have some positive theta on that trade because the debit you're paying is less than the intrinsic value of the 111 put. So you're picking up some positive theta. But yeah, Jermal, I'm leaning bearish on ZB. I'm also leaning bearish on ZN because I don't think they're gonna decouple. But I would sell a call if I would choose one or the other. I wouldn't necessarily do both. Buy a put spread in ZB, sell a call spread in ZN just to get cute.
Yeah, I mean, to your point, the bond volatility is a lot of people know, and some may not be aware, but it's single digits, and I mean, it's just not really that fun to sell a 9 vol, right? It's easier to just play directionally.
No. Hey, Mike, does that platform? If you go to the charts, Mike, and you go to indicators, that button you're on right there. Mm-hmm. And go down to implied volatility. I think it's in there. There it is. So I don't want to start a whole argument here, but this is the only indicator that I look at on a chart. This is the VIX style calculation, the overall volatility for ZN. To Jermal's point, it's been just dead. Okay. And do the same thing with ZB. It's just dead. There's no volatility in these things.
These numbers are in ticks in this case?
What? I'm sorry, Jermal?
These numbers are in ticks in this case, since it's bonds?
Just in the implied volatility is just the daily volatility. In other words, there's today's overall vol, there's yesterday's overall vol, and it's stored. And we finally added this on here. This is I like this chart. It just shows me I use this along with IV rank. I use this along with the overall actual volatility in an options expiration. And then, determine the specific options to trade after that. But I like this chart, and it shows graphically what you're talking about anecdotally, Jermal. Right, you've just seen volatility drop. Well, here's a chart. If you haven't been staring at bond volatility like Jermal for the past 6 months, or like I have, this chart can just get you up to speed.
Yeah. Love it. Yeah, we were talking about crypto as well. This is another one where implied volatility has been on its butt. We had it much higher, of course, into the big sell-off. You can see this inverse reaction here all the way up to 80%, and now we're sitting at 40%, and that's at the lower end of the range we've seen for the last year. I like this. This is nice.
I guess I'm bullish on crypto at this point, specifically Bitcoin. I've had only like $1,000 worth of this stuff. I don't trade size in Bitcoin. I'll buy $1,000 worth, sell it, in and out. And it's not like I'm scalping it. I'll hold on to it for a week, 2 weeks, 3 weeks until I see a little bit of a profit. But, I had held on to my original Bitcoin position for years and got out last year when it started to sell off. But right now, Bitcoin didn't do well. this past spring with all the Iranian war stuff, but maybe it doesn't care anymore.
Well, it's interesting. This really hasn't been any strongly negative news that I can think of. And I say that with regard to, years past, you had FTX or you had some, wallet stolen or something like that, right? Like those were the big negative news that would really create these big drawdowns. And we haven't had that in a while. And it just hasn't been interesting. Chips have been sucking out the oxygen in every single trading room. And that's really what it's been more recently. And people always went to Bitcoin for more alpha. And why would you go to Bitcoin when it's not moving, when you can go to chips for the alpha? So that's really what it's been. But as Liz brought up yesterday morning to start the week, this crypto, some clarity on the Crypto Act has seemingly put some bullishness in Bitcoin right now. We're seeing a lot of different names, whether it's IBIT, whether it's Circle, or whether the actual coins themselves are starting to move.
Yep. Well, if it's able to shrug off the bias towards higher rates throughout this year, because Bitcoin obviously isn't a yield-bearing, interest-bearing security. So if you're just looking to stash money, Bitcoin's not going to give you an interest rate like T-bills would or something like that. So if Bitcoin is able to shrug off the bias towards higher rates, maybe we'll have a little bit of momentum to the upside. Maybe.
Mm-hmm.
Love it. Well, TP, thank you for bringing this to our attention, because this really helps you see the range of IV rank as well. I think that's the most powerful thing for premium selling. Like if you see an IV rank of 100 that goes to 0, it means nothing to me if the actual implied volatility goes from 13 to 11. But in IV here, you can see an IV rank of, we'll probably add an IV rank of 100 back here. We're talking 80% implied volatility, and that has crushed down to 40% implied volatility. That's a gigantic volatility crush. So like I'm going to keep this on into perpetuity, because this is what you want to see if you're trading IV rank.
Yep.
Yeah, and to that point, just really quickly, Mike, and I'll end with this, is as you start to look at different products outside of individual equities, a lot of them just have very low volatility. Mm-hmm. Like currencies and bonds. They're not like, you think the VIX at 16 is cheap. Try note volatility at 5%, right? Mm-hmm. And so if you don't have context for it, 5% can look really cheap. On the other hand, Mike, it can actually look a little bit rich, maybe, if you have some other context around it. So that's why I think it's a valuable tool. And it's not the be all and end all. It's just another data point.
Love it.
Yep.
TP, appreciate your time. We'll see you
all right, guys.
Today.
See you, man.
Adios. Yeah, great tool there, and I think this is a great addition to the platform, because it does help solve that the issue of IV rank and seeing what the range is. Like, what is the actual crush potential? That's what you need for the implied volatility. But we're gonna take a quick 90-second break. We'll see you on the other side of it. You're watching Tastylive.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
All right, so I've got some good news, and I've got some bad news. Let's get that bad news out of the way first. You are going to have some losing trades. Like every trade you place, despite your extreme optimism that it's going to work out, it's not going to work out. That's the bad news. The good news is at Tasty Trade, man, we are ready to adjust and defend and roll our positions if that's what it takes. And that's what this entire crash course is all about. A 5-episode crash course all about rolling. So I will see you inside of episode number 1.
Explain pot odds.
pot odds is my favorite term, but pot odds in the poker world or gambling world refers to having a greater payout than your implied odds would suggest. So let's say I have 3-to-1 odds to win a pot, but the pot is giving me 4-to-1 odds to make that bet. I would have a positive expected value over time. So in trading, let's say you have a defined risk debit or credit spread that's currently at a max loss, and let's say there's 30 days left to go. There's not really a reason to close that position because you're already at max loss. You can only go up from there. So in that scenario, that would be a positive pot odds scenario or something that would give us pot odds to stay in.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1. And Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
What's up, Tasty Nation? Welcome back to the show. It appears the Super Bear is working out. E-minis down to 25 on the upside. NASDAQ up 360. So we've got about a 15-point sell-off from the high in the E-minis. I'm here with Jermal and, of course, Errol Coleman. How you doing?
What's going on, guys? How are we doing today? Fantastic. Good. That's
stupendous.
Stupendous. It's been a while since I heard that one. Add that to the vernacular. No, I know you were just mentioning we're getting a little bit of volatility in the market. I've been a little busy this morning. I'm not gonna lie. I haven't had too much time to really lock in on what the market's been up to. But I mean, I see that SpaceX is still selling off a little bit more. I know yesterday for the trade of the day, I wanted to try and take advantage of some of the memory companies. It's looking like those are still rebounding a little bit. I don't want to catch a falling knife because it does look like there's been a little bit of a change of character, but it is nice to see a little bit of momentum to the upside on some of those names. I see you got oil pulled up there too. Oil's logging another good day. I know Bitcoin is logging another good day. IBIT, Bitcoin, a lot of those products have been really down in the dumps for some time. So it's nice to see those catch a little bit of life there. But I would say top of the list so far is just checking out the volatility for the day. Some of those memory names. Again, I know we were talking about a potential rotation as well in this overall market. I don't know. Maybe are we done putting in all-time highs? Maybe. I don't know. But I do want to try and take advantage of some of the momentum that is still in some of these names.
I'm with you. Yeah. I jumped into Micron and SanDisk call butterflies, and they're currently working. In Micron, I have the 1,000, 1,100, 1,200 call butterfly.
Okay.
And in SanDisk, I have the 1,600, 1,700, 1,800 call butterfly. So I'm with you on that. And then you mentioned these things that are bouncing today. I mean, Bitcoin, oil for sure. But Bitcoin, SpaceX, and SK Hynix at the moment are absolutely ripping. It's almost like they're coming after things that people haven't wanted for a while. We'll see if it holds, though.
Some IPO momentum?
It's still early in the day. We're up 20 and change. What we have seen in the past 24 hours is that rallies haven't held. This is one of the reasons why we put on this Super Bear today in SPX. We'll see what happens. I love where we are right now. I hope we keep doing it, but I'm making money, so it makes me feel like we're not going to hold.
No, there's been a lot of volatility.
Feel right.
Like all these chips are up, man. These chips and these storage names are running right now. You know, Marvell's back above 200. That stock's been really weak. Micron flying right now. SanDisk flying. SMH up 18 bones. And then we talked about some of the crypto names. Circle. We put on a position in there. I can't remember what the catalyst was and why we were looking at it. I think it gotten rocked down, but we I think we have a similar trade. It's in August and I'm short the 65 put versus being long the 80-110 call spread.
Okay.
That trade is working out really well today.
Yeah. I actually just closed mine because the intraday gain is like $500 and it netted out to be a $180 winner. So yeah, I had the 65 short put to buy the 80-100 call spread. And that was routed for a $3 credit. So that was just like a no-brainer for me, just because like you have a 20-point wide long call spread. You're still picking up $3 in credit. Plenty of upside profit potential. You get one 10% pop and you get a nice winner. So Yeah, I took that one off. We'll post it to the follow page shortly, but I just put in a GTC for SPX to close for a $200 winner. If we keep selling off in the E-minis, if we get another 10 points, that'll probably fill.
E-minis, can we talk about some NASDAQ?
Oh, yeah.
Can we talk about some NASDAQ right now?
How silly.
E-minis. I love the trade. Great trade, by the way.
NDX.
But can we talk about some NASDAQ, some volatility, some real volatility?
Qs.
No.
Which one do you, when you do wake up, and I know you know exactly where NDX is, but like, which one do you trade? Matter of fact, right now, don't even look at the screen. I am curious. Where's NDX trading right now?
We got a lot of screens around here. There's one right behind.
I know. Oh man, wanted to test you.
No, but what were you getting at?
Which one of those which one of those products of all of them do you gravitate towards the most regular? Like Qs, NQs?
Oh, the Qs.
I mean.
So what's funny is whenever I got a little bit more involved with the micro NASDAQ market, I started finding myself trading the Qs a little bit more often rather than SPY. Not that I even have necessarily a bias. They're both extremely liquid. They're both two assets that are highly correlated towards each other. Usually, and except for what we saw last week, we saw that divergence between both the assets, but that's pretty rare. But I find myself looking at the Qs a little bit more often now that I keep an eye on NASDAQ. And before, when I was looking at the S&P 500, ES, I tended to look at the SPY options a little bit more. So I really love the options on, the futures products, but I do find the Qs and the SPY to have a little bit more liquidity to them, a little bit more volatility when it comes to the option side. But I would still say, micro NASDAQ for the most part.
Yeah.
Yeah.
We're in the micro NASDAQ. And yeah, I think there's still plenty of liquidity in these futures products. There's less options expirations. But at the end of the day, if you're trying to get the most bang for your buck, I mean, the MNQ product does give you that because you have the ability to control a $55,000 product for $3,000.
Yeah, that's nuts,
so
right?
If you're using QQQ or SPY, you have less leverage by way of buying power requirement, which is safer because you can't use as much leverage. But I know, for this product and the MES as well, I just have one contract in here. I have two contracts in MES, but
you've been liking it, right?
Yeah, I love it.
Right, you have a lot of experience trading the ETFs, but it's really cool to actually see some of the options on the futures yourself that what you've been doing in there. So I don't do it too much, but again, I might have to even take advantage of the options on the futures a little bit more often.
Yeah, I think it's definitely a core position that I'll have into perpetuity. I mean, you just have so much. You have so much wiggle room. If you can do a strangle in an equity, you can do a strangle in MES or MNQ much more easily because the realized moves intraday are just not as much.
Yeah.
Period. So you have the ability to have that flexible strike management. You've got near 24-hour trading. You can move it overnight if you need to. All that stuff is great for a core position. But yeah, both of these are working out really nicely. 2K profit overall from this year so far in MES. $800 in MNQ, and we've just been following the market. If the market goes up, we shift the whole thing up. If it goes down, we roll down and out, go to a straddle, and we just, we always lean long, always have bullish delta in here, and we just size correctly to where nothing can really hurt us all too much.
No, I love it.
Yeah.
Love it.
But yeah, E-minis are trying to slide a little bit here, only up 27.
E-minis, man.
I know, I gotta stop. Forget about the E-minis. NASDAQ only forever. We got about a minute left here. Anything else catching your eye today?
No, I mean, again, it's nice to see a little bit more life into the crypto products. I was getting a little bit concerned for the whole space for a little bit there as we, slid down to the lows at around, 55, 60,000 on Bitcoin. And then just the overall sentiment started to feel really negative. But at the same time, I know, Mike, you mentioned the other day, it's one of the more attractive times where you like to get on a little bit more long delta in some of those products. But with that being said, it's nice to see them come to life because things were getting quiet.
Yeah, we were talking about just the point at Bitcoin right now. It seems like it's a really interesting point because we've got this previous resistance, and then you look at the previous bars before that, and it was just red day after red day after red day. So if they can break above here, you do have the ability to kind of just have no resistance in this range, and you can just rocket ship right back to the 70,000 level. And if that happens, I think E-minis NASDAQ just continue to push higher as well. But appreciate your time.
Thank you guys
so much. We'll see you a little bit later today. For the folks out there, if you want to follow us on Twitter, I'm at Trader Mikey B. Jermal is at Jermal Chandler. We're going to kick it over to Dr. Jim after this, but we'll be back a little bit later today with Tim Knight and some trade ideas for you. So don't go away. Stay tuned on the Tastylive YouTube channel as well as tastylive.com, but we'll be back on the other side of this break. You're watching Tastylive.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
I'm Jim Schultz, and welcome to Inside the Trade, a little morning edition of Dr. Jim. Hope you guys are doing okay out there here in these markets. What I want to do is I want to break down a trade. Let's break down a strategy, and then I want to see where you guys are at in the chat. And so let me know what you guys are trading out there. Let me know what you guys see in this market here on this Tuesday morning. So Ben, go ahead and bring us into the market. EMI S&P is up 33, NASDAQ up 355, also known as the risk-free instrument. For you from theory to practice fan that might be watching inside the trade. Got the boomers up about 200. Got the Russell 3,000, a little bit under 3,000, only up 14. So, all right, guys. So again, let's get a lay of the land. What are we up against? It is earnings season right now. We've got all the heavy hitters that are set to report. I think starting tomorrow, if I remember here correctly. If we go to the Tasty Default watch list, if I sort by earnings, you're going to see that, again, coming on down the chutes tomorrow, you've got Google, you've got IBM, you've got Tesla, you've got all these guys set to report. Then next week, you've got Chipotle. They're still in business. I'm as shocked as you are. Starbucks, Meta, Microsoft, they're all coming on down the chute. So it can be difficult to find trades to do that aren't associated with earnings that are coming up in 1 week, 2 weeks, 3 weeks, what have you. I've talked about this ad nauseum, basically every single day on the network for the last 10 plus years. So I'm not going to belabor that point any more than we've already belabored it over the first 90 seconds of this show. So what we're going to do, let's find something that we can do in an index. Let's find something that we can do that's not necessarily going to be associated with, an individual stock, a binary event that is earnings coming on down the chute. So I was surveying the landscape. I was in my Tasty Default watch list, and I was just kind of poking around and sorting by different things and, looking at IVX, looking at beta, looking at some correlations. But then, of course, I came back to, you've got to dance with Ubrungi at a certain point. Like, you've got to get back to the tried and true and the Betty Crocker recipe. So if you go to IVR and you sort this guy, now typically we're sorting it from high to low, right? Because we're looking to sell premium, we're looking for short premium opportunities. But every once in a while, right, you got to shock the muscle. Every once in a while, you got to roll in on a Tuesday and hit shoulders. Like, we know you're not allowed to do that. We know that the earth will reverse the spin on its axis if you do that too often. But every once in a while, you just got to kind of give it a go. So we're going to sort this guy from low to high. So we're going to look for a lower volatility opportunity to go ahead and strategically diversify here in the portfolio. Because again, there's so many things happening over the course of the next 2 weeks that there's going to be lots of premium to sell. There's going to be lots of short option opportunities. Let's do something from the long premium side. Let's do something where now we're taking advantage of lower volatility. Now, because volatility has been kind of on the higher end as of late. As you can see right here, I'm in the Tasty Default watch list. There aren't too many opportunities that are low volatility. You've got bond futures, you've got UB40 futures, which is very much in the past. You've got TLT, you've got notes, you've got a couple of things that are on the lower end, but then pretty quickly you get into the 20s. Like pretty quickly, you're in a situation where it's like, okay, this volatility is not super duper low. So what am I going to do? Well, you kind of have to work with what you got. Like at a certain point, and you can't create something out of thin air. Like at a certain point, you have to, work within the confines of what the market is giving you at this moment in time. So I was actually looking at a DIA strategy. Shout out to all my boomers out there. Like y'all been awake for 7 hours already, man. So we appreciate y'all. We appreciate the work that you guys have done. You guys built this country. You built this world. So we are going to throw a shout out to you guys by doing a little DIA strategy right here and right now. Now, again, the IVR is 27.9. So it's not as low as I would like. I would much prefer something a little bit lower because of the strategy that we are going to do, the diagonal spread. But again, it's not 50, it's not 70, it's not even 35 or 40. It is 27.9. And so we're going to go ahead and give this guy a go from the standpoint of setting up a diagonal set. So we go into DIA, we go into the trade page, and I see you guys in the chat, man. You guys are already putting in some work. Man, Booyah's in the house. Man, look at Ron Bashara in the house. Christopher Springer. Pilatus is here. Man, Christopher Springer's back. Man, Point B is in the house. Man, I appreciate you guys so very much. Get in that chat. Get in there. Pump that algo because it is not ready to be pumped this early in the morning. But go ahead. And if we go to the diamonds, we go to the trade page. If I'm setting up a diagonal spread, again, remember the basic setup of a diagonal spread is, I'm going to be long in the back month. I'm going to be short in the front month. So I'm going to buy an option in the back month. I'm going to sell an option in the front month. And the basic idea behind a diagonal spread, if you are brand new, welcome aboard. I'm so glad that you're here. We are so glad that you're here. If you're trying to take an active approach to your portfolio, specifically using options and futures in the derivative space, then man, you are in the right spot. A diagonal spread is long in the back month, short in the front month, very much the mullet of options trading strategies. And you want to take advantage of both A, directional move, and also B, the time differential between the expiration cycles. So it has very much of a vertical spread feel to it and a calendar spread feel to it. It is a blending of those two strategies together as one. So if I go into September and I open the scalp, I've got 59 days to go. Now, again, I don't really feel great about this. I don't really want to do this. I feel like we're doing something we shouldn't do. But the way the pricing sets up, I was looking at this before the show. Man, playing the boomers to the downside, it looks like it sets up pretty well from a pricing standpoint. Now, I understand, right? Like you think that fading AMD with your short calls is a bad move. It very well might be. But fading the boomers, man, you have lost every single day for the last 137 years. But we're going to give it a shot here today. And we'll see if we can go ahead and cheat the system. So I'm going to set up a put diagonal spread. I'm going to buy a put in this back month in the September cycle. Then I'm going to sell a put in the front month in the August cycle. So if I go to September, you've got the boomers trading at 520. If I go ahead and buy, typically with a diagonal spread, you're buying 1 or 2 strikes in the money, then you're going to sell 1 or 2 strikes out of the money. It's not super complicated when it comes to strike selection. You can play around with the width and you can play around with the sizing to kind of fit, your profit objectives and how big you want the trade to be from a loss standpoint. Like you can do all that, of course, but generally speaking, 1 to 2 strikes in the money on the long option and 1 to 2 strikes out of the money on the short option is a really solid way to kind of set this guy up. So if I go ahead and if I buy the 525 put, if I buy the 525 put, I'm going to pay $12.50 for that guy in the September cycle. Then I'm going to go ahead and I'm going to minimize the September cycle. Let's go into August and let's find a put to sell. Now, again, usually you're going to be selling, a couple of strikes in the money. But I kind of think since we bought the 525 put, just to make this as feng shui as we possibly can, what if we sell the 515 put against it? That gives us a $10 wide spread, right? It's nice. It's a round number. The technical bros that like defending their round numbers, they're going to be very pleased with our selection 525 long put in September, 515 short put in August. It looks like we're going to pay $7 for this diagonal spread. Now, a couple of things to be mindful of. Number one, when it comes to the total cost on a diagonal spread, we like to keep this guy at about 75% of the width of the strikes or less, because you want to be able to, have enough room to make money in the event that you are correct directionally on the strategy. So if you get the move that you want, then you want to get paid on that move. If you find yourself in a situation where you've got a $10 wide diagonal, you buy it for $9, like, yes, that can work, but you're kind of making it a bit more difficult to be profitable in the trade, in my opinion. And so for us here, you can see I'm only paying about $7 for this guy. So it is well underneath that 75% marker. That's the first thing to keep in mind. The second thing to keep in mind is I'm selling this August cycle against September. I'm still going to have additional opportunities to sell premium against September, like in the weeklies between August and September, if I need to. So if I don't get the move that I want, if the Boomer Index does not go down, which again, it hasn't gone down for more than 7 hours at any point in time over the last 39 years. So the odds are clearly stacked against us. But if it does go down, everything's going to work. If it doesn't go down, then I'm going to have a chance to sell more premium against this later on down the road if it does indeed come to that. So that is a huge advantage of something like a diagonal spread when it comes to, just reducing basis and having premium working for you. You have a lot of things kind of working in your favor here. And so I'm kind of thinking, I think this is it, guys. Like, I don't really think that, oh yes, Ben, I got you. I don't really think that, I don't really think there's anything more to say about this. I don't really think that there's anything more that we need to pontificate about this strategy. I think it is set, and I think it is ready to go. So let's go ahead. Let's buy this guy for $6.95. There you go. Got filled $6.95 on the old DIA index. And there you go. So that's what I'm trading. I want to know what you guys are trading now. Obviously, people are asking if Inside the Trade is here to stay. It is here to stay. Markets move and things change. So here you go. Inside the Trade, 9 o'clock Central, 10 o'clock Eastern. I'm going to give you not only fadeable opportunities in the afternoon, but fadeable opportunities in the morning. Don't you guys ever forget, no matter what happens, I am here for you guys. I am trying to find ways for you guys to make more money. I don't know that I can find a better way than just being on the opposite side of every single trade that I do. But I'm going to keep searching. I'm going to keep doing it. So where are you guys at, though, man? Let me see you guys in the chat. I see you guys in the house. What are you guys trading? Ron Bouchard, the algo is confused. Is it leg day or shoulders day and calf day? Well, it's Tuesday, right? So we know, the algo knows that it has to be back day. But you come in with a bicep tricep pump, it doesn't know what to do, right? And so again, just to make sure that the algo understands that the humans still have a leg up, at least for now. I think every once in a while you got to do it. But let's see, Christopher Springer, I appreciate you. Let's see. Pilatus, we call it TT. He is the options trading legend. I'm not sure if you're talking about me. I think you're talking about Mike B. You should be talking about Mike B. That is 100% true. But let me see here. Oh, I see Bob. Bob as M5T. I wish I could learn options better. Every time I watch the show, I get stressed because I sometimes get lost, like spreads, IVR, etc. Bob, man, you're in the right spot. Bob, thank you for being here. So let me slow it down real quick for Bob, because we've all been there. Like, Bob, you are not alone. We've all been, every single one of us has been there. And I mean, there's 500 people watching right now. I guarantee you are not alone, Bob. So here's what I would do. You're already on the YouTube channel because you're in the YouTube chat. I would poke around on the YouTube channel, and I would actually make your way over to the Crash Course playlist. Now, I'm a bit biased. I know the guy who made all those videos, but if you start with those, and I would actually start with, there's one in there that's like 2 hours long. And again, you're watching it at 1.5x, so it's only going to be an hour and 20 minutes for you. But I would start with that one, because what I do is I go all the way from start to finish. Like, you don't know anything, all the way to, okay, how do I actually confidently start placing my own trades and understand how to manage those trades? I take you all the way through that journey. So that's where I would begin, Bob, because that way you can pause, you can stop, you can go as quickly or as slowly as you want to go. Because I understand, like in a live show format, we are kind of moving kind of quickly. I naturally talk very, very quickly. And so if you are watching it on a 1.5x or 2x from your boys' content, man, that is a power move. That is a power move indeed.
But I understand the live show can be a little bit tricky. So I would actually go to the crash courses. And then, of course, you can always reach out to me if I can help in any way. Like my email is just jschultz@tastylive.com. So write that guy down and reach out anytime, man. I am very, very happy to help. So Brian Racketon, Weiss is in the house, man. I appreciate you. Bob Love, that blob is here. Brian Racketon, forgot to pump the algo. Well, now you remembered. Very Gen X of me. That's correct. Good morning, Dr. Jim. What's going on? Let's see. David C is here. David C, Dr. Jim in the AM. That's correct. Again, we talked about this yesterday, but I guess I'm moving up in the world, right? I guess this is an uptick, right? You got Dr. Jim in the afternoon from theory to practice, of course. You got Dr. Jim in the morning, now inside the trade. You got Dr. Jim for calculated risk, which typically drops. I mean, they kind of keep us on our toes, man, but a lot of times that drops in the evening hours. And so the only thing missing is the Dr. Jim in the infomercial slot. Like, that's all we need. Dr. Jim at that 12:30 slot, it's coming, man. Like, we can't stop it now. And so let's see. Yeah, there's Bob. I see you in the house there, Bob. Let me see. The man from many places loses 100% of the time, 80% of the time. Not this diagonal spread. Well, maybe in the boomers, but not diagonal spreads overall. And there's Ordenu in the house, man. I appreciate you so very much. There is not such a thing as too much, Dr. Jim. Let's go, Doc. You always give me the confidence to trade. I'm doing options on futures thanks to you. Today I opened an MES August 31st, 72.25 naked put. Yes, I love it. I have about 30 seconds to go, but let me take a look at this. All right, so you're in August. You said August 31. August 31, 72.25. So I actually have one of those on myself. You're down here. I'm not sure if you did this today or if you did it before, but it's a solid trade, right? I mean, your delta's 25. And might go a little higher on the delta just to pick up a bit more premium, but usually anywhere between 25 and 35 is a good place to live when it comes to short puts. And so that's it, man. Another Inside the Trade is in the books. A little diamonds diagonal spread for you guys. I hope that really helped. Gave you a couple of things to think about. I will be back tomorrow for Inside the Trade. I'll even be back later today for From Theory to Practice at 2:30 Eastern. So hopefully I'll see you guys there, and I'll see you guys then.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
It's time to trade smart, post PDT rule elimination. And Tasty Trade has the tools traders need. The Active Trader tab's comprehensive market data is designed for rapid order placement in a single click, while bracket orders let traders set entry, profit target, and stop loss all in one ticket. From the Positions tab, you can monitor positions, roll trades, close positions, and create conditional orders. Now, traders of all account sizes have more flexibility than ever before to engage in the markets. Smart tools for smart traders. Tasty Trade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
What's up, everyone? We are back. My name is Mike. I'm here with Jermal, and we got Tim Knight in the house. And Tim, you have planted the flag. 9:20 a.m. This is the time into perpetuity.
Zit.
I love it.
Yeah. Planted the freak flag. Okay. Yeah. Yes. Well, thank you. I appreciate that. Appreciate the slot. I also like, it's a nice balance because the first 45, 50 minutes of the day, I can kind of do my housekeeping on my positions, and then you have my almost entirely undivided attention. So this works well.
Fantastic. Tim, yesterday we had a little bounce in the market to start the day, and then it faded throughout the day. Be interesting to see if this rally holds or not. How are you feeling about this overall as you're about to pull up charts?
Well, I think that we're at an exceptionally interesting inflection point here, and I'm going to highlight that with a couple of specific charts because yesterday was funny. I lost a little ground yesterday, but I felt really, really good about the day because I felt good about my positions and got more aggressively short and so forth. Today was one of those days, and I know that we all have different trading styles. I know that I'm probably a little unusual that I'm kind of old school, just sell them short and put the stop losses in for safety's sake. And this was one of those irksome mornings where I got popped out of a bunch of positions pretty much at lousy prices because we had that just brief blast of strength in tech stocks, which faded away. As it is now, we're still green across the board. But let's thumb through some charts now to kind of catch up with some broad picture stuff to kind of show you what I'm talking about. The diamonds, I've covered my short on this. This is my biggest position, not because I think this is ready to blast the lifetime highs or anything like that, but we've got a nice little tumble on this, and it's got room to rally possibly on this. So I've decided just to lighten my risk. I think it is important that we have broken this trend line because one by one, trend lines have been breaking. So by way of example, here's another IWM, the small caps. This broke on Friday. I guess we stayed below, but we've been kind of lingering below these below these broken trend lines for the duration. I think that their role has flipped from support to resistance in these cases. And the reason this is a bit of an agonizing market for everybody is we have on the ES been grinding around in this range for so long. We pushed into this range, by my estimation, early in May. So all of May, all of June, here we are almost done with July. And we have been just going nowhere fast. We're essentially now, we're back on May 13 with not much rhyme or reason. And I'm hoping that a critical mass of earnings this week, next week, will break us out of this quagmire. A little more clarity, I think, is held with the semiconductors. There's been a lot of talk lately in the past few weeks about South Korea, memory, semiconductors, and the breakdown we've been seeing in the whole hyperscaling realm. And I would say that there's sort of three key lines on SMH. So the broken trend line is old news. That was a long time ago. So now we're shaping out what to me seems to be a pretty substantial topping pattern, which has not completed yet. Down here, we've got the support level, which was challenged on Friday. That was the low Friday. We bounced. We essentially bounced Friday, and yesterday we opened strong, closed weak. And today we opened strong, and at the moment are trading a little bit weak. But the strength today, and this is the key point, put us at this line, which really constitutes the base of the bulk of all the trading that's taken place over the past couple of months. So yes, this is the whole pattern, but everything above the blue line is the principal part of the pattern. Putting it another way, so long as we don't meaningfully push above this blue line, I think that the bears are still in control of the semiconductor universe, and it's just a little bit telling to me that the open today was pretty much the high thus far. Of course, we'll have to see how the day winds up, but that's kind of the big picture on SMH. EWY is just a different flavor of that. South Korea is so dependent on semiconductors, and we've been downtrending on this ever since mid-June. I haven't drawn the lines, but you can see the very clear descending channel here week by week. I've been focusing more on China lately, and this morning that's going pretty good. Alibaba is down about 1.7%, coming off of that resistance line. Baidu, which I prefer actually between the two of them, is also down more than 1%. And most principally, and this is my biggest option short right now, is the FXI. I've got September $36 FXI puts, and this has been pushing higher for weeks now, ever since June 26. Up it goes. But my view on this is that we've reached that enormous blob of overhead supply, and for today at least, we have affirmed that reversal, yesterday being the peak on that. So I'm feeling pretty good about that. Obviously, I hope it moves much slower, because the narrative here has been that Chinese AI is basically almost as good, like 98% as good, but for radically less money. And so they've been getting a lot of attention. So FXI kind of a key position for me. On some other items, I like how Kelvon is behaving itself. Earnings on this aren't until, I think, the 29th. So next week, I believe. But it has been slowly breaking away from what I perceive as an important topping pattern there. So I've got puts on that as well. January's on that one, given a lot of time. One other theme I just want to touch on quickly is home building by way of interest rates. So here, bonds have been slipping the past few days. TLT's been a really not very exciting chart at all. It's been just a big fat mess. I don't trade the thing, but I have noticed that as bonds have been weakening lately, we can see over the past few weeks, we've really taken a tumble. That's beginning to be felt in home building. So here we have Lennar, LEN, which is an enormous pattern, but you can see here this massive top that's been breaking down. It had a nice tumble yesterday and the day before, and today we're down a bit. And a little more obscure Floor & Decor, FND, also taking a nice fall the past 3 days. I think this is directly related to that weakness in bonds. Just to wrap up with a couple of broad charts here, InQ is telling much the same story as I was just showing with SMH, and it's just a bouncing ball. So we got a nice tumble on Friday, and yesterday just a mess. We had a whole range of trading the same body as Friday, but just basically closed near the open. Then today we reversed all of Friday's weakness. So what's been going on here is that we were trapped in this range for weeks. We finally broke it on Thursday/Friday, but since Friday, 1, 2, 3 days in a row, trapped inside this range. So we're not going to get any meaningful new selling until we can finally get below the low of this pattern that's been in place since June 9. So this has just been just a ping pong ball for 3 days. And the last chart, I'm not really trading energy now, but stocks seem to be kind of ignoring the continued strength with crude oil and the worsening situation with Iran. And this has been just a steady climber for some weeks now. We sealed this price gap beautifully and a little bit more. We've been pushing higher. The key question here is, what happens with this trend line? Do we pierce this trend line? Because if we do, I think that opens up an entirely new argument about much higher oil prices. As it is now, it's just heading toward resistance. But if it can break above this trend line, that's a pretty big bullish signal for energy.
Yeah, and I got to agree there with crude. We're seeing a pretty steep backwardation getting infused into these futures markets with the U contract at 84.60, the V at 82.40, and the X at 80.35. So we're seeing that steepen, although the E-minis and NASDAQ, Bitcoin even are just ripping higher. So, Tim, appreciate your time. We'll see you a little bit later today.
Alrighty. See you guys.
See ya. Yeah, I think that's going to be the interesting story that starts to unfold here with crude oil ripping higher, backwardation steepening, but E-minis and NASDAQ up 1.5% in the NASDAQ, 0.5% in the E-minis. So we'll see how it all plays out. But we're going to take a quick 90-second break. We'll be back on the other side of it with some research. You're watching Tasty Live.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately has turned into 100 shares of long or short stock.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
Explain pot odds.
Pot odds is my favorite term, but pot odds in the poker world or gambling world refers to having a greater payout than your implied odds would suggest. So let's say I have 3-to-1 odds to win a pot, but the pot is giving me 4-to-1 odds to make that bet. I would have a positive expected value over time. So in trading, let's say you have a defined risk debit or credit spread that's currently at a max loss, and let's say there's 30 days left to go. There's not really a reason to close that position because you're already at max loss. You can only go up from there. So in that scenario, that would be a positive pot odds scenario, or something that would give us pot odds to stay in. Get live trade ideas,
technical analysis,
earning setups,
option strategies,
macro insights,
and real positions from traders putting capital to work
in real time.
Only at Tasty Live.
Only on Tasty Live.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
What's up, everyone? Welcome back to the show. We got a market measure sponsored by Cboe coming up for you. E-minis and NASDAQ trudging higher. We'll see what happens the rest of the day, but I'm joined here by Jermal and the one and only Gad. And Gad, I got to say, you are looking dapper today.
The sharpest dressed man in Tasty Live. How you doing?
I'm good. Thank you, Mike.
Yeah, you got it.
Great, man. Looking good. Looking good.
Thank you. You look good as well. So.
Yeah. How did, before we get to the piece, how did soccer end up for you? How do you feel about it? How do you feel about the ending?
Very good.
Okay.
Football won.
Football won, baby.
Sure.
Yeah.
Yeah. I can tell you. Are you a fan of Messi or Cristiano?
I am not a fan of Messi. I'm not like a super fan of Messi. I mean, you know, he's fascinating, but it's fascinating to me how a man can be in a commercial all the time and never say a word, never even open his mouth. That's crazy to me. How many commercials he's been in, he doesn't even say a word. But I know he doesn't speak English, but still, he doesn't even open his mouth. Anyway.
Yeah. Yeah, I was so happy this weekend because like Spain won and that's football won. So
Sure did.
Crazy game.
What you got for us?
So I got a nice piece today. So it's area assignments. What's the area assignments? What happened to traders, and what's traders to be aware of that? What's the risk involved into that? So you can pop up the slides. So it's really a good piece because like we have seen so many questions from the research emails and people asking us like, what's the real cost of the area assignments? What's really area assignments? I'm pretty sure you know what's area assignments, but most of our viewers, they ask like, what's area assignments? I trade a triangle every day, but I don't know what's area assignments. It's rare to just happen. Area assignments is rare to happen to you. So today I'm gonna go through the details, the real details, statistics, what's the area assignments is, the cost, also how to mitigate the risk on the directional tail risk about the area assignments. Let's go to the first slides, please. So we use like 5 years years of study, and it's a 30 delta strangle SPY, and we most of sellers will be like, we think area assignments doesn't happen most often, but you feel it when it happens to you. And what's the area assignments? So the easiest meaning or the definition for area assignments, like you short calls, and then the buy, you short call for a certain kind of like expiration date, and then the buyers exercise it before it goes to the expiration date. Before it goes to the expiration date, that's where the buyers exercise it, and then most of the time it turns to a stock overnight. And when, for example, let's take an example of short call. Short calls turns to a short stock. A short post turns to a long stock overnight because of area assignments. And that's a huge gap. Also, it puts your buying power into exposure of a directional risk because of the stock, which is being turned to from the options. So the question we have been asking is like, so what's the area assignments rational? How often does it put you at risk? And also, does it managing area protect you, or what does it cost to you? So managing these area assignments is to cut by 5% in the money or 10% in the money. So that's kind of the area management of those kind of area assignments, because most of the time it's just finish in the money, like almost 60%, the trades finish the money. And then when you cut before it went in the money by 5% or 10%, that's kind of the area assignment. Area management of your trades. So when you go to next slides, so when does it happen? So I say short call. It happens into dividends. So it happens when the dividend is worth more than the call leftover time value. That's when the short call area assignment happen on the short call. So when it happens in short puts, in high rates. So it happens when the interest rates on the cash beats the puts leftover time values. That's where on short puts, these kind of area assignments happens, and then when there's high rates. So this is kind of like a study, a slides, which demonstrates when you're trading a strangle, because of those both rates, you kind of have to pay attention when you're putting your delta on, when you're trading, because like when you have the dividends, high rates, there's a potential, there's a possibility like you'll be assigned ARI because your buys will exercise it ARI before it gets to expiration dates. So let's go to statistics and see what numbers will tell us. So remember I told you like to do these segments, we hold 2 expirations and then we manage by cutting 5% in money and 10% in money. So in general, when you hold 30 delta triangle for 5 years study from now, it wins by 66% of the time. That's the probability of win, of profit, And then the median is almost like $500. And then, but the losers, you're gonna lose a lot, almost like $70,000 during the sell-off. This has happened in April when the tariff sell-off happens. This is like worst case scenario that happen on your trade when you're trading this delta And this comes to bring us to the table of like discussions. These assignments needs to be happens in a deep in the money, as I said, and then that's rare. But in a general case for the strangle, when you trade the strangle, 30 delta strangle, you see 61% of your trades will finish in the money, and that's where the area assignments happens during that time of the high interest rates. So, and when 61% happens in the money, but only 10% or 11% get past 5% of the strike in the money, and then only less than 2% also get past to 10% in the money. That's rare, but that's where the tail risk lives. Because when you put a triangle on, 61% will finish in the money. Only 11% will pass 5%, and 2% will pass 10% in the money. So that's where the tail risk will live in. So this is like a presentations how we can measure our tail risk in a quantitative way. So let's put into perspective of not only percentage, let's put perspective of dollars. Let's go to the next slides. So the obvious cut, as I said, the area management of these area assignments is to cut by 5% in money, 10% in money before it get deeper enough to be assigned. So, but when you hold to the expirations, these are a strangle. You will see the average P&L is 170, the medium will be $546, the purple will be 66%, and then the silver, that's where you pay attention. Silver and the average P&L. The silver is 3,400. That's the Oceros when you hold until the expirations. And that's when the trade will finish in the money by 61%. And when you manage by 5%, when you cut 5% in the money, on the whole strangle, we look, your P&L will be 66%, which is like 22% in reduction. And your silver will be less. And when you go to the leg, when you only cut by which leg has been tested, you will see your silver also will not change. It's 2,700. Let's go to the whole. When you manage by 10%, you will see like the average P&L is 112. But the silver is even greater than when you hold until the expirations. On the next slide, I'll explain why the silver, when you manage by 10, when you cut by 10% in the money, it's when even higher than when you hold it until the expirations. So, can you guess why?
Why it's cutting shrinks it?
Yeah. When you cut by 5%, it's less than when you hold. But when you cut by 10% in the money, it's even greater, the silver, than when you hold until the expirations.
Well, you have the ability for that to reverse.
Smart. Correct. So that's the real meaning. So when you cut it by 5% in your money, it cuts by 3,400 to 2,600. That's your real protections by cutting 5%. But when you wait until 10% in your money, it gets to 10% in your money. So by then, the damage has been occurred. You have been already taken the loss, and also usually the market bounce back, and then you cut before the market bounce back. You didn't allow your trade to bounce back a little bit, right? That's where the loss, the tail risk, it's enormous. That's where when you cut by 10%, you lose more than even you hold until the expirations. So this is kind of like a question we get from our customers. So can I cut by 5%, 10%? Can I hold to expirations? I think this slide can answer your questions. When you hold until the expirations, the P&L will be greater. The silver will be a little bit, also a lot. But when you cut by 5%, your P&L will reduce, but you will cut losses. And also, when you cut by 10%, you allow the losses to sink in, and also you didn't allow the market to bounce back for you to correct at the premium or the profits as well. Mm-hmm. So let's go to the final slides, the takeaways. So assignment is in the, as I said, it happens You feel it when it happens to you. Most of the traders, they don't feel it because they try to manage their trades. And when it happens, just you feel it. It can like overturn your whole profits. So the management of 5% on a tail risk is the real precautions, zero protections. When you wait until 10%, that's where you get the pain of your management. So keep it simple, closing the host triangle within the dollars. Just don't chase the profit. Psychologically, make sure you understand this logic. Don't chase the profit. Just close, manage your trades as early as possible. Don't wait until you cut by 10%, 5%, it's okay. You take your profit and you cut your losses. That's the main important. And you trade often as well.
I like it. Mm-hmm. And yeah, I would say I've been assigned maybe 3 times in my 10 plus years of trading. Mm-hmm. So it is really rare, but I think the highest occurrence is certainly around dividends, because those are really the ones where it's like you kind of get blindsided by it unless you're paying attention to it. Where and dividends can be high sometimes too, where you might think you're outside of assignment risk because you have a ton of extrinsic value. Maybe it's 50 cents or $1 of extrinsic value that would help you prevent that. But if the dividend is higher than the extrinsic value, it actually makes mathematical sense for the counterparty to exercise it. Where just a random assignment for other reasons, like low extrinsic value, we're offsetting that because we're rolling around 21 days, 14 days, whatever, and we're adding more extrinsic value to the trade. So that pushes us out of the assignment risk as well. But yeah, if you're cutting losses with a 10% in the money move, especially in something like SPY or the NASDAQ, we've seen so many research pieces where the further down we go, the higher the probability is that if you go 1 month out, 3 months out, 6 months out, we're in the high 90% that we have a reversal. So yeah, love it.
Thank you.
Good stuff, man.
Thank you.
Great stuff.
Appreciate it.
Amazing. And certainly the best dressed man in the office.
Thank you, guys.
Yeah.
I want to look like you, man. I'm going to eat the gym. So.
Hey, just eat a ton of chicken. That's all you can do. E-minis up 45, NASDAQ up 440. Crazy day. A lot of flipping around, but we're going to take a quick 90-second break. You're watching Tasty Live.
I had to rewatch that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Grax, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots.
Okay, thanks for the heads up.
Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
What's up, everyone? Welcome back to the show. E-minis are ripping higher. The tasty people are happy, I'm sure, with that. Up 50, NASDAQ up 450. The Bitcoin market's up 3%. Haven't seen that in quite some time.
Everything. Big moves.
It's crazy. I'm here with Jermal, and we got Marty Bennett in the house, the one and only. How you doing?
Marty.
Everything's obviously awesome, isn't it?
Yeah.
Look at these markets, everything is just awesome.
Yeah.
It seems.
Yeah.
Yeah.
That's what the people want. They want the green on the screen. Everyone's smiling. Everyone's happy.
7,500, I guess, in the minis. Sounds like that not line of demarcation, but it seems like whenever it gets above that, they just start ripping, right?
Yeah.
Yeah, we've seen a couple of like volume pockets today at those levels. It's like boom, and then it just rips a little bit higher, and then boom, a little bit higher. So
Even SpaceX is up today.
that's the thing. So SpaceX, CBRS, and SK Hynix.
And then, of course, MU made another. Like when that gets in that 850 range, it's unbelievable how that thing moves. I mean, I kind of like trading it, but I looked at it again this morning, and it's just now it's at that like 9. Where's it at? Like
940 almost.
Yeah. And then it tests that 1,000 level. And
yeah, that's what I'm hoping it does. Actually.
SpaceX, what do you guys think? Kind of like it, like maybe 110 or something. I mean, I don't know how you gauge where the support is in that.
You don't. Exactly.
Like,
I don't either. Like, how do you know levels? Like, I don't.
Yeah.
Like, that's the funny
I mean,
part.
that 225 is an anomaly.
Trust me, I bet people have their levels in their mind. I'm like, really? Do you? Because
don't know
the variance in the stock has been
I
crazy.
had a couple calls about it, and they're like, I'm like, not that we ever give advice, but that being said, and don't they have like 900,000 shares that were restricted that they got to let out to that are able to be let out or something, which maybe have been flooding the market.
Maybe.
As of late. But yeah, interesting. A lot of calls about that.
Yeah, I can't determine if this is like a dead cat bounce today or if this is the beginning of the bounce after this lull that we've had. It's hard to tell. I guess, only time will tell in these situations.
Yeah. That's what I have a longer term position on because I'm like, I don't know where this is going to go in the near term, but I feel like longer term, it's probably going to go higher, maybe a little bit higher. So I sold a put at 125. This is the Jan 2028 cycle, 550 days out.
Right.
Sold a put at 125 to buy a call at 300. And I routed the whole thing for a $350 credit.
Right.
So you just have the neutral. Nothing happens. I still make a little bit, but if you get the
pop, right,
you get that asymmetry. So
he's difficult to fade, as I've said.
Sir Elon Musk.
Yeah, I mean it's just difficult because obviously the way that these companies are set up now, where it doesn't really matter if they actually make money, but it becomes something that people have to have or want to have. So you're dealing with a different, qualifier for it. But he's always been difficult to fade, even with Tesla. And but I can't get heads or tails around how this thing is going to move, which is, I guess vexing to say the least, people.
Yeah.
Tesla was my first experience when it first started popping from like 50 up to 100, up to 200, up to 300. And I started paying attention to these earnings calls. And it was like, we're only losing $4 a share.
Right.
And like the market would just rip higher. I'm like, what is happening right now? Like this, to your point, it's like, it doesn't matter. It's not about the company itself. It's about the potential.
Yes.
Potentiality, right.
Yeah. How's the day so far? Pretty busy on the desk. Is it busy on days like this?
Today has been a little. There was a few assignments early. I know.
We just had an assignment piece.
Not like Monday. Mondays now are like basically almost like Fridays. It gets really busy. It gets a little hectic, which is nice. Today it's busy. It's just not crazy busy, and I think that this is part and parcel of it because everybody's so used to seeing this thing ripping higher every day. It's like, okay, it's just like another day in this.
Yeah.
But a few assignments in SPY. I saw somebody get assigned today. SPY was talking to my guys about it. That had like a 760, 753 short put spread on. And he got assigned by someone. There was like $1,300 in extrinsic on it.
Celebrate.
I'm like, good for you, right? Bonus.
That happened to him a couple of weeks ago.
That's crazy to me that these things happen like that. Like what?
Because I always would say, try to portray, if it gets below 10 cents in extrinsic and it's deep in the money, you're probably got a target on your back. You might want to make a move with it. And sometimes nothing happens. And then I'll see these assignments that make I mean, I don't know how bad you want it to be long. SPY at 753 when you could just, get out of your option and buy the stock. But, I guess there's another thing that's kind of conceptual, right? There is no exact, obviously, but, you try to give them as close to keeping an eye on their positions as possible so that it doesn't happen.
Yeah.
Right?
100%.
Right.
Wow, these super early access people. in my opinion,
$1,300.
They don't understand options.
I'm like, it's $9 and, when I think they got out of the spread at I think there was a 760, if I'm not mistaken. And they sold the whole spread at like 768.20. Like, okay, well, perfect. That's another way to strategize being short spreads, right? Yeah. Exactly.
Like, take this money, take your family out for a nice dinner.
So it can happen. You probably would rather have luck than 100% of your skill when you're trading.
Of course.
Worked for me, or still does.
But what do we got for top 20 symbols today?
Let's see.
Let's check it out. Tesla's got to be up there.
They are. They got to be in top 3 today.
Well,
no.
Look at
just
that.
outside.
Oh, wow, look at that. All right, at number 20, we have Meta at a 90. 19 MSTR to 55.
Oh, you go backwards. I forgot. I'm like, wait, what?
I'm like, I'm a backwards guy. It's a big lead up. Yeah. Can't you see the big? It makes it so tantalizing when you're waiting to the top 5. Netflix at 18 and a 34. TQQQ, the triple Q, 65. 16 Amazon, 58. 15 Microsoft, 98. Nice. SLV at 14, 29. iBit, 22 at 13. DOCN at 12 at 106. SOXL 101 at 11. Top 10. Can you feel the tension building?
I can feel it.
I'll do a drum roll for you when we get
Coin at number 10, 78%. SMH in the 9 spot, 93. Intel at 101 at 8. Apple at 7 at 77. SanDisk at 98 at 6. Top 5. SpaceX.
Wow.
Ooh. No one can figure it out. At number 5 at 81%. All right, his other small company, his bigger company, Tesla, is at a 44 at number 4. Number 3, AMD at 96. Nvidia, that's kind of shocking.
Yeah.
That's too.
At 27 at number 2, and MU, 89% at numero uno. How was that, people?
I like it.
Fantastic.
I like
Works.
it. Round of applause. We should start, when you're on, we should start blurring the top 4.
Yeah, I know, right?
Nobody know. And then have someone hand me the envelope.
Yeah.
I'm not going to believe this. It's a tie between.
It's Tesla.
Yeah.
But no,
That'd be
guys.
nice touch.
Micron's
God.
interesting, though. Micron's, to your point, it got down yesterday or 2 days ago at a 100-point range.
Yep.
So
I don't know if there's a number at that 820, 850. I'm going to have to look when I go back to the desk. But it's just has an amazing ability in that low 8s to mid 8s number to pop right back up into the 9s again.
Yeah. And that was
really
that was exemplified, on what is that, Friday? Yeah, the 17th. So we had a high of 903, a low of 804.
Yeah.
And just tons of intraday volatility there.
Yeah.
Craziness.
Short put spreads, people. Short put spreads.
There you go.
All right.
We love them.
All right.
Marty, appreciate your time.
Anytime, John.
As always.
All right.
Thanks for joining us.
Good to see you.
We will get that blur effect when you're on next.
We have to
If you're going to go backwards, you got to have the top 4.
We'll have to have someone handing me stuff.
I mean, I do like the envelope idea. That's great.
Like have a TV spokesmodel. Here's the number 1 envelope.
I love it. Well, we've got a crazy market here. E-minis up 46, NASDAQ up 460. Everything's green on the screen. Crude oil up 2 points as well. But we're going to take a quick 90-second break. Thanks for joining us this morning. We got Liz and Chris on the other side of it. We'll see you a little bit later today. You're watching Tasty Live.
I had to rewatch that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Grax, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hell horse, Arbitrageur.
I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots.
Okay, thanks for the heads up.
Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
We're back. You're watching Tastylive. It's still Tuesday, July 21st. I'm Chris Vecchio. She's Liz Deerking. Liz, how are you?
Hey, you know what? This is a great day. A great day to be alive, Chris Vecchio. A great day to be alive. Bitcoin's up. Gold is up. Silver is up.
Time out. You start off with it's a great day to be alive because Bitcoin's up.
I don't know.
What's happened to you?
We got to talk something. I mean, I needed an up move in it because I've been kind of just holding. I've been just holding my Bitcoin as it's been plummeting. And when I say Bitcoin, I am doing the proxies. I've got the ETH, IBIT, and MIDDAY. So, but yeah.
Yeah, well, no, Bitcoin being up is a good news. We talked about it on yesterday's market measures with Kai. I've already referenced this once today, but we'll do it again. Bitcoin tends to have a positive correlation with the stock market these days, particularly post-COVID. So, those days when the market's up, but then Bitcoin's kind of slouching down, I at least ask myself the question, it doesn't really feel like a solid risk rally, does it?
No, it does not. It's been pretty, that can't catch a bid. And when the days of, and I would love to dive deeper into this with Kai, because Bitcoin used to have a high implied volatility. So you'd see these violent swings. Now the volatility's been kind of sucked out of all those cryptocurrencies, and we're still seeing that little meandering. Now, as my favorite macroeconomist, do not tell Ilya, I think it has to do with the whole clarity and the clarity. The Clarity and the Clarity Act is giving Bitcoin this little lift. Is it going to stay? I don't know. I'm just making conversation with Bitcoin being up almost 2.5%.
So Preston said today that it's at the 1 yard line. I want to just draw the attention to the volatility here, though, that you point out. The raw volatility in the 40s, I mean, yeah, the 10 days out is 51%, but sitting in the 40s, I think we could head over to like a Micron, for example, and find much more volatility. And I mean, that's probably part of the problem that crypto's at here, Liz.
Yeah.
When it came around, this is during the 2010s. Volatility is crushed, interest rates are low, so there's just like nothing going on a lot of the time. And so you looked at Bitcoin and there was just this gigantic volatility premium over everything else, no matter where you looked.
Not
the case.
Far and away over everything. And now it's all sucked out of it. Yeah.
And it's all sucked out of it, and there's other things that are moving more. So if you're a short-term trader who's looking for big price swings, crypto doesn't give that to you anymore.
No,
or at least
it's
on a
not.
relative basis, other things do maybe a bit better.
But it's not as shiny and new, right? It's not the new object that everybody's talking about. Nobody's talking about that anymore. Now they're talking about semis. It's insane. Like when you're at a cocktail party, they used to be like, hey, do you own crypto? Oh, and my favorite was XRP. When that XRP army is crazy.
That is actually a tell. There are a few people who, when they ask me, and they're lovely people, but finance is definitely not their forte, or even markets. And some of they're like, yeah, when do you think this so-and-so coin is going to bottom? It's like, oh, buddy.
I know. Yeah.
Not yet.
No, it's fine.
And I haven't been wrong about that feeling so far, Liz. Not to be
okay. No, but Chris, this is just to let you into my weird personality. I So when that XRP army was going around, I was like, I got to get long XRP because if these fools make money and as much money as they think they're going to make, and I miss it, we're in the world of hurt.
The only thing would be worse is if they're rich and you're not.
Exactly. That's what I said. I was like,
conversation.
I mean, the conversation about XRP, they said it was going to go up so much that it was going to create so many millionaires. I was like, these people become the wealthy. We are in a world of hurt.
Before we hop over to confirm or send a quick look around these markets, you mentioned the cryptos are doing well today. So are the tech stocks here. Nasdaq is your leader, Liz, up 1.4%, 412 points. You mentioned the semiconductors being a big part of it. Indeed, they are. They're up 3.6% today. We're getting a little bit of this jostling back and forth here, a little bit of recovery. But, I mean, Liz, today really is the calm before the storm, is it not? Are we not waiting here for the Tesla earnings, the Alphabet earnings tomorrow? I see 500, I almost threw up, 531,000 contracts traded here so far today. That is paltry. That is.
It's weird.
Who's trading this market?
They're just waiting, right? So it's pretty interesting. Hey, can I show you something that I think that you might find interesting? I was asking, you did a great job yesterday with Rocket Lab. If you guys haven't seen Chris do his thing, I believe it's on the Tasty YouTube channel. You're killing it, by the way. And so you were looking at some unusual activity there. Can you do me a favor and go to SPX? So I'm, like I said, I'm old school. I follow the Cboe metric. So I look at SPX. This is usually whenever I look at the most actively traded, it's always zeros across the board, calls, puts, 0, 0, zeros. Today on the put side, go to September 4th in SPX.
September 4th.
Yes, this is what I found fascinating. I had to rub my eyes. So September 4th, it's the 60 puts, 6,100, 6,000. It's insane to me. So take a look at that.
Oh.
Yeah, and it's all today. It's the leader of the board right now in the put department. Now, Frank the Great is currently, I'm not looking at the chat, but I'm sure he's telling me for every buyer there's a seller and you don't know what they have on that. But I just find it fascinating when you can see big players go into something, right? Now, do they buy it or sell it? It's cheap.
It's cheap.
But it's for sure a spread. For sure. The 6,100, 6,000 spread. That's easy because the numbers were identical.
I mean, are you willing to put down $110 to make almost $9,900?
I did because I'm a junkie and so that's why there's a 1 next to it on the other side because I bought it because I wanted to watch it, and I know in my mind it's easier for me to keep an eye on things when I've got it in my account. So I bought one.
Interesting. No, that's definitely unusual activity. I mean, volume above the open interest, 53,000 contracts compared to an open interest of less than a K there. Maybe those are fresh positions. Maybe someone's washing something, rolling, but we'll have to keep an eye on that for tomorrow. That's a huge swing in up 45 days. You mentioned 0 DTE being the point of interest here. That's more volume than the current at-the-money calls have in SPX. I mean, 7,500 is barely higher at 67,000.
It is the leader of the board. So the 7,500 today, 65,000 have traded, but the leader on the put side is, you go September. It's bonkers to me. You usually don't see that. I glance at it because it's a number that I like to keep an eye on. And I made the boys this morning decide where they thought it was going to end. And my pick was 7,500 because of the gravitational pull towards those round numbers and the activity that I'm seeing. And that's all I'm saying. I think round numbers have their time and their place. But when I looked at it to see how accurate or if those numbers were climbing, I noticed the September puts. And I had said, whew, I'm going to keep an eye on those.
It's now on my watch list here, but it's one of the things that you're paying attention to today in part because this is a quiet market for what it's worth.
Yes,
we mentioned the lack of volume in both the S&Ps and the NASDAQ. That's still very much the case, even as we're seeing stocks pushing here to highs now 1.7% higher on the NASDAQ here. A nice little jump the past a minute or two. But the reason, again, is because of the earnings, which, as the audience may find themselves in a similar situation, that's what they're talking about. That's what they've been sending in questions about today. Liz here for Confirm and Send. As always, you can send us your questions, research at tastylive.com, or put them in the chat, subscribe and like if you're watching on YouTube. If you're on the platform, thanks for being on the platform, but come over to YouTube, join the conversation. Hey, producers, let's head over to our Confirm and Send for the day, shall we? Let's get into it here. They are all earnings related, Liz.
They are all
First
earnings
one.
related.
Tesla is priced for 5.6% tomorrow, but is gapped 8, 10, and even 12% on past prints. If you wanted to sell that rich premium without a double-digit move wiping you out, what defined risk structure actually makes sense here? Liz, I think we can approach this twofold. We can do the theory here, and then we can look to the actual options chain in Tesla. But let's break down the theory first.
I mean, the actual answer here is that a defined risk setup is the only thing that's not going to wipe you out with a double-digit move. Iron Condor or something of that nature. You're just planning for that vol collapse, but want to make sure that it's inside instead of outside. Tesla, so for earnings, 9 times out of 10, and that's 9 times out of 10, the vol is pricing in less of a move than you get for this. Tesla's a gapper, in my opinion. So it does gap up and down on earnings, and it has pricier moves, but that volatility should get you out of the way of the expected move. What are you going to do in Tesla? You in Condor? I like to use the premium to make a directional assumption. I will probably sell puts or put spreads and get myself out of the way of the expected move. But so here you could do the 360, 355, or you got to go to the expected move. You can't bring it in that close.
Yeah. No, I mean, so can we address the first thing? Sure. If you think, so the market tomorrow's price for 5%, 6%, 5.6% move.
Yeah.
But if you're looking at past reports and you go, 8, 10, 12, I'm a little worried about that. Well, if you're worried about that, then don't sell at the expected move, right? But first things first. But if you're going to follow the mechanics, that's where you'd go. You have to keep it risk defined, because if you're worried about the gap, you don't want to be caught in like a short strangle or just short puts, what have you. I'm curious what you think about this though, Liz. If you have a directional assumption here, but you want to take advantage of the volatility, would you do something like a broken Iron Condor, where you, instead of doing equidistant from at the money, you kind of maybe give a little bit more space to the downside?
Sure, absolutely, you can do that. If I've got a directional assumption and it's earnings, I'm only playing one side though, because I don't think you are playing for a vol collapse, which is true. But if you're directional, I'm typically playing one side. And I know getting outside the expected move is probably will protect you when you get farther. To me, those risk reward scenarios aren't there. If you were going to take this and go to, I don't know, the 345, 340, you're going to be getting pennies. It's not worth the risk.
And that's really the point. So if you have to push it out to a point where you're not getting compensated for the risk that you're taking, even if that seems to be like the proper setup, then maybe just avoid this one, and that's fine. Right. You don't need to trade every single earnings report. So, I mean, yeah, if you sell too close trying to get paid, the trade's could wipe you out on a gap.
It could wipe you out on a gap.
Coming up tomorrow, so 3 days to expectation.
But I'm going to give you my best TP impression, if that's okay right now. Mm-hmm. Because, so TP always says, that I understand why people are fearful, because could it move? Sure. But this is my impression. Probabilities are the probabilities, is what he would say. So, and ask him to do that. The probabilities are the probabilities are the probabilities. So taking a look at this, you're at a standard deviation. Whether it's Tesla, whether it's anything else, can they move outside? Sure, right? But as long as you stay defined risk and know that you can lose $349 if it blows it out of the water, great. Now, if you're worried about it blowing out of the water, then definitely define your risk or avoid it at all costs. But these are the probabilities. You have a high chance of getting $154 tomorrow in this trade.
Right. And if I'm thinking about maybe widening this out a little bit because I'm worried that 5.6% isn't enough, right? Maybe this thing has bigger gap risk. I'm going out to the 1 standard deviation just to poke around here. And you know what? We're going 5 points wide. You're probably looking for $1.67 of credit then, and you're getting $1.54 still.
Yeah.
This is not bad. It's still 67% probability of profit. So maybe that was too tight, but you can still do something here in a risk-defined manner that provides a decent. You know what? In fact, I like this. I like going out to the 1 standard deviation here. Let's see if we can get filled and put it on the board.
I like this because you're a day early, which is giving you a little bit more room as well.
A little bit more room, teeny tiny bit more room. Question number 2. Oracle, which is a really tough stock right now. Oracle here has been in free fall for weeks and is now oversold near its 52-week low. We'll get into that in a moment. IV is elevated and everyone hates it. Is a name that's actually this beaten down and this hated actually the best kind of premium to sell or the most dangerous?
It's my favorite kind, whether it's dangerous or not. I love things that are beaten down and everyone hates. That is my favorite time to jump in. And only to the one side. So when they say sell premium, when something's at its 52-week low, I'm selling puts. It's very hard for me, and I know this is counterintuitive. I can't sell calls in those. That's just because at some point I think Oracle might be a name that is beloved again, and all of a sudden it's going to shoot up.
I don't really care that the stock is oversold at a 52-week low. I mean, maybe that's a me personal thing, but when I think about RSI, it's all about relativity, and it's also predicated on a study that's tethered to the cycle of the moon, which I don't know that has any...
Wait, whoa. Rewind. What's on the cycle of the moon?
Relative Strength Index, RSI, is predicated on following the half cycle of moon cycle. That's why it's set to 14 days.
Really?
So I just don't... I look at that and like it's a useful indicator when you're comparing it to itself, but RSI alone, something being overbought or oversold doesn't mean anything. For me as a momentum person, so when something's oversold, that means it's a great time to sell because momentum's strong. I don't want to be buying something when momentum's choppy. I want to be buying momentum when momentum's on tilt. So right now I look at slow stochastics here, for example, on this chart on Oracle. Slow stochastics went into oversold territory in June. If that was a reason to get long, you'd be long since about $180 a share. Instead, if you saw the slow stochastics as the confirmation that momentum had accelerated into a defined state being bearish, and you got short then, you've been short from 180 to about 124. So that's how I use stochastics. RSI being overbought or oversold means nothing.
No,
I actually deride that indicator a lot. I really don't like it.
This is why you are my favorite macroeconomist, because I will look at this chart, you can cover it up, and I would sell puts until my hands bled. Because not at the money puts, and I'm getting myself out of the way. And like you said, if I was going to be long at 180, it's only at 124 right now. If you're getting enough premium, you might have actually made money on selling puts out of the money puts in a 45-day cycle, even with this move.
Yeah, I mean, the more compelling thing, I'm going back to the weekly chart here for Oracle, the lows that we had last March, those are nearby just around 120. And so that to me is going to be a more significant thing than any overbought and oversold. So Liz, if you were saying here, yeah, it's like catching a falling knife, but we're catching a falling knife into support, you can make a better case. That's the case I would make here. We're at near a multi-year low, not just that 52-week low for a particular technical indicator.
I know. I like it, but I don't look at any technical indicators. I literally just look at the option chain. Sometimes I'll look at the chart, but if the option chain says there's premium in there, you've got a 61 rank. So for me, I could go in the August 21st cycle with 31 days with a 61 rank and sell premium in it. That's something I would do to avoid the earnings.
Yeah, Frank points out, he's like, I've never worked on the floor, so I'm not a contrarian. I'm more of a trend follower. That's true. I learned from reading the Jack Schwager Market Wizard books and Richard Dennis Turtle Trader and following things that Stanley Druckenmiller did and George. So that's how I learned how to get engaged with the market. So I just, I see a falling knife and I don't say opportunity in my whereas you do. But that's what makes a market.
It's so funny that you brought up Market Wizards, because one of my favorite trading strategies through the earnings cycle is, and I forget who it was, so you're going to have to bear with me on this, but one of the people where they would every day, and if a big earnings cycle came out, and say, Oracle, I forget what's on deck, Tesla, they won't trade it for the earnings move, but the day it comes out, that morning, if it's up, they make a bullish play or buy the stock just for that day to see if the momentum keeps going.
David Ryan or Mark Minervini are probably the names that
Yes. And so it's one of my favorite things to do because you can look at it. So if Tesla's up big in the morning, I might, buy the stock just for the day and then get out of it. It's a 1-day play. I loved that Market Wizards portion.
Yeah, he has a lot of those good books, which I think, for me, I'm not going to be able to learn every trading style. So picking the brains of other people who have, maybe it helps me learn something along the way. Who reads these days anymore, though? I think that's antiquated. Question number 3, we're reading here. When you're selling an earnings move to capture the IV crush, how do you decide between a straddle and a strangle? What makes one the better choice over the other? Straddle's the purest way to sell an earnings move.
It is the purest way to sell an earnings move. And when you think about it, the math is the math. If you're selling a straddle, it is the expected move. So just kind of let's kind of go in there if you don't mind. So go to anything. You can go to Tesla. We've been talking about it. So if you go to Tesla and open the 3-day and then sell the at the money straddle, the 380 or 382.5, it doesn't matter either way. There you go. So you're getting $23. Look up in that at the parentheses. It's just about $23. Back of the napkin math, the straddle is the expected move for the cycle. And that's the math of it. So if you are in it just for selling premium and you want to do this, the straddle is just the cleanest. that is the math portion of it, and it's all there for you. And that's how before you kids had that little expected move, and the brown bar is the visual representation of it. All we had was the straddle. So that was the math behind what the expected move for the cycle is. There's no gaming of the system. These are very efficient markets when you're in a liquid product. That's your cleanest way to do it. I typically do not sell straddles because I want to give myself as much. My high probability trade, if I'm selling without risk definition, is I would be doing the 360 and then whatever the top is at 400 on the brown bar, because that's where the expected move is, and then it gives me the little bit of cushion behind there. That's what I do.
Yeah, I mean, so when you're trading your straddle, your gamma risk is highest right where the current stock is trading, and if this thing moves at all, then you have a little bit of a problem on your hands.
Yes.
But the strangle, on the other hand, right? Yeah, you're giving up some credit up front, but you're trading that off for a little bit more probability in your favor, so to speak. So the market can oscillate a bit. It doesn't need to like pin the tail on the donkey right away for you to maximize your profit. So yeah, you're collecting less, but the market can afford to move more. It depends where your confidence is, quite frankly. Something like Tesla, you mentioned yesterday, Tesla being a unique stock. How do you apply these? Maybe this is appropriate for like an Apple or an Alphabet that's coming out, but do you use these same type of guidelines, straddle versus strangle, for a stock like a Tesla or maybe even a SpaceX now?
So, like I said, I'm never doing a straddle. I'm always going to be, if I'm trying to do this, I'm always doing a strangle, and I will be doing a strangle in some of those as well, because it turns it into a more high probability trade. Now, you have to keep an eye on it though, Chris. So there is, like I said, the common sense slide. When you take a look at this, so this one will bring your break even. If you stay at the straddle, just stay right here for a second. This brings your break even to, you're just under 357. So let's say 356, right? And it brings you to 356, right? That's my break even to the downside. Now, if you just look, and what I was saying was that I want to sell that 360 put, where does that bring my break even? Almost to the same spot. So these are all versions of the same trade. It's whatever you know what I'm saying? There's not that much difference between the two when you compare break even to break even.
I think going back to question number one with Tesla, right? If someone was thinking about Tesla with like a straddle or strangle, if you find a stock where the move afterwards has been consistently outperforming what the market's been pricing in, right? Tesla's 5.6%, but recently we've seen 8, 10, 12% gaps. You're not doing your straddle. You need to do defined risk. So yes, maximum opportunity, also maximum loss. Trade off with a little bit more risk definition. You lose some maximum upside, if you will, but higher probability of a better outcome for yourself.
Yeah. And I think people will lean towards straddles and lower price products because there's no payment for strangles, right? So I'm not going to go out and sell something for 20 cents if it's a low price product where you might be able to get $1 and $1 for the call and the put.
Last question from an Alphabet perspective, which is one of those other big earnings reports due out tomorrow. Google reports tomorrow after the close. Historically, the stock keeps grinding in the 2 weeks after the report. One quarter, it was up 2.45% the day after and kept climbing to 4.46% 2 weeks later. If you wanted to play that upside drift instead of gambling on the gap, how would you structure it the morning after? So not even going into report, Liz. This is what makes this an interesting question.
This is my favorite. This is kind of what I was leaning towards the other day. So if Google's up and you want to get in afterwards, I wait till it's open and I put on. Now, this is a complex option trade. Have you ever heard of the buffer trade?
No.
Okay, so this is something that Jenny and I would do all the time. A researcher a long time ago, I think he was pre you, would talk about this. There are things called the buffer ETF. Now, the buffer ETF on paper sounds so scary and everybody likes it because it's like, wait, you can protect your upside. You're going to give up a little bit of your upside to buffer your downside protection by X amount, right? And so I was like, wait a minute. As I say to my kids, I need more information on this. I was like, more sugar, more sugar, more sugar. And I've been asking questions. The buffer ETF, and they're selling it like hotcakes, is essentially a covered call with a put spread to protect it. Right? With a long put spread. So you're buffering your downside, but the width of the put spread by giving up your upside by using the call to buy that put spread. So I will, after earnings, especially in big products like this, put in my synthetic buffer. So if you want to go, just go to Google, and you don't want to put it in today. You want to put it after the close, and open up the 3-day. Fine. Okay. Sure. So open up the 3-day, and this is what I would do after earnings. So I'm not saying right now. You got to go up farther. Buy the 350.
350 put?
350 put by 350, 340. So you're going to buffer your downside by the 350, 340. So you're going to buffer your downside by $10. And then what are you paying for it for? You're paying $480. So then you're going to go up, stay in the puts because we're going to do a synthetic covered call, stay in the puts. You're going to go to you're going to sell the 362.5 put, which is a synthetic covered call. That is a buffer trade, which means you can make money from 350 to 362, but you don't get long the stock until 340. And I do it in the 0 day or the nearest term, because if it continues its move up, great. If it falls back down, then I'm long it at a lower price than it was. So I will put these on a lot of times in big moving products after earnings.
That's definitely not how I approach this.
I didn't think so. You and I are two sides to the coin.
You're the shinier side of the coin for what it's worth. Let's just make that clear here. Listen, I like to play my trades around these, trying to look through. And recently it was just, I want to get to that drift. I have high confidence in Google. The numbers look really good. Maybe this is me putting on my CFA charter holder hat, where I'm looking through their actual fundamentals. I go, this company's printing money still. And yeah, their free cash flow has come in a little bit, but it's still a money printing machine here. I'm sitting short the 325, 330 put spread right now. It's 2 pennies up right now. That's nice. The idea here is that we're going to hold recent swing lows, and the report's going to give us that upward drift. I would much rather be the person who's like, I'm going to buy a $400 call for maybe October expiry and set it, forget it. But it's a little expensive right now. And the market, broadly speaking, is oscillating. So I don't know if I want to be laying out cash for out of the money calls.
But didn't they say what to do after? The question was after.
How would you structure it the morning after? Which is why I'm not a morning after earnings type of trader. So I don't have a good answer.
Yeah. No, I do it. I do like that. I know you're a momentum. You do like to follow the momentum. The only thing, the momentum that I will follow is the day after earnings, because sometimes they'll get some follow through with those big wide moves. And does it work? Sure. Sometimes it goes up and then comes right back down. So
yeah, if you were looking for you and I were talking before, by the way, as we get ready to head off air here for the Market Wizards folks, it's Mark Minervini and David Ryan use their episodic pivots and the volatility contraction patterns to trade earnings. It was in one of the Jack Schwager books, Market Wizards. You should go check those out. Not that we're endorsed, Liz, although if Jack Schwager wants to pay Tasty for maybe we can make something happen here. Liz, we're getting ready to close out this 30-minute section of Confirm and Send. Before we do, a quick look at these markets. SMH semis are up more than they were when we first checked in, 4.5% right now. S&P up now 0.8%, 60 points. Your NASDAQ up nearly 1.9% right now, 29,317. All of Friday's losses, those have been erased for what it's worth. We've completely wiped those out. The Russell up over 1%. Even your Bitcoin, you said it's a good day to be alive, Liz, because Bitcoin is up. Never thought I'd hear those words coming from your mouth. And crude here, still the stick in the mud, up 2.4%. We're going to find more out about that later. Liz, end of day here, second half of the session, just preparing for Alphabet earnings, Tesla earnings, or do you have big trade plans that you've been hiding from us thus far?
I have not been hiding anything. I'm hunkering down, waiting for all those big juicy earnings as they come in tomorrow. So that's my plan.
There you have it. She's been Liz D. King. I've been Chris Vecchio. This has been another 30-minute episode of Confirm and Send. You're watching Tastylive. Be sure to send in your questions, research at tastylive.com, or put them in the chat. Come back in about 2 minutes' time. Errol and Gus are here. We have more live trading right ahead.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
So you're an active trader, looking to increase your return, decrease your risk, or quite possibly both. Sure, you've heard of the Greeks. Your deltas, your thetas, your vegas, your charms, your vamas, etc. And you're wondering, hey, how do I use these guys to improve my risk-return relationship? Well, join me for a 10-episode crash course, and I'll show you exactly how to do it with all the gimmies and gotchas, one Greek at a time. We'll see you there.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
So why are we all doing all the things that we do inside of the active trading space? Simple. To make money and generate returns. Well, inside of the Tasty universe, there are essentially 5 keys to making those returns. And in this crash course, we're going to break down all the details of each one of those keys. So I'll see you inside.
It's time to trade smart, post PDT rule elimination. Now, traders of all account sizes have more flexibility than ever before. With rapid order entry and bracket orders that let traders manage entry, profit target, and stop loss, all in one ticket. Tasty Trade.
So why are we all doing all the things that we do inside of the active trading space? Simple. To make money and generate returns. Well, inside of the Tasty universe, there are essentially 5 keys to making those returns. And in this crash course, we're going to break down all the details of each one of those keys. So I'll see you inside.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
What is going on, everybody, and welcome back to Risk and Reward. Today's Tuesday. We got a little bit more volatility in the market. We'll do a little tour to market here in a little bit. But brother Gus, how we doing today? Glad to have you back. How we been?
Doing good. Yeah, good weekend. Feeling refreshed.
Good.
I don't know, a little bit tired yesterday. I was happy to have the travel day off yesterday to kind of
always needed.
Recuperate, time zone shift as well. But yeah, feeling back on top of things and ready to attack these markets.
Good. What is it? Mountain time over there?
Yeah, it's it's Pacific.
Is it Pacific?
Yeah.
Okay.
Yeah.
I got you. Yeah. No. Again, like I was saying before, I always wanted to ask you about how the trip was, just because that's something I actually always wanted to kind of experience. I know I asked you about some of the new releases. Is there any hidden gems that you're able to let us know, Gus?
What you mean, like about the event itself?
Yeah, just any hidden gems, anything to come that you guys got a little bit more of a sneak peek on.
Yeah, for those not in the loop, part of this trip to Vegas was going to the Call of Duty Championship, CDL Champs in Vegas. Yeah, I don't know. I mean, it was cool. It was really well done. I mean, there were certainly things that you wouldn't notice on broadcast that they do in the arena to make it cool for the spectators and things they do between. But no, I mean, I would say holistically, it was pretty much what I expected. Aside from the occasional different thing on the video board or whatever I may not have been aware of. Holistically, yeah, I don't know, pretty much what I expected. I wouldn't say there were any crazy hidden gems. Met a few players around the arena. That was cool. I got a beta code for the new game, so that was cool.
Slide that beta code.
Yeah, so I don't know, a few
That's
little
dope.
things like that. But yeah, it was an awesome experience. They did a really good job.
Good. No, I mean, as we get into things, we can jump right into the Tasty platform. Again, I know it was a little bit of a longer weekend. Really, not too much has really gone on, if we're being completely honest. It's been a little bit slower, I guess you could say, over the last couple of days. But it's nice to see some of the memory names kind of recovering a little bit more here on the day. I know things like INCC, Micron, SNDK, these things are recovering just a little bit more. So that's been a little bit new. And finally, SpaceX is catching a bid. You got any thoughts on SpaceX? It's been such a downslide ever since the third day of the rally that we've seen, that you kind of pointed out. And we've just been sliding lower and lower ever since. So nice to see you catch a bid there. A little bit of life in the underlying.
Yeah, the life has really just been sucked out of this thing. Just these, little tiny paper cut days over and over. I mean, all the way down from 150 straight to, we tested 120 yesterday. I did pay some attention to that. But yeah, I mean, I don't know. It's a tough spot. I still think that it's a great growth vehicle. I would have no issue with anybody choosing to load some shares at this point.
Yeah.
Or even go as far as some calls potentially. But I don't know. I don't know if it's one that I want to try to step in front of at this juncture.
Yeah, just kind of let it. I guess we could say we can let SpaceX find itself. Yeah, I guess SpaceX is trying to find itself.
Well, yeah, exactly. It needs to find its fair valuation. Is that 135? Is that the 150 that it actually wound up IPOing at? It's a difficult line to try to toe what fair value might be on SpaceX here. And again, it's like it's taken all these hits, and we do all this talking about SpaceX, it's hurting so bad. Then you come over and look at the leaderboard. It's still the 10th largest company in the world. It's still a $1.5 trillion company. It's just not 1.75 like it was when it first came out. So. We're still talking about a giant company. I still think the growth prospects are there. I would be fine with loading shares or leaps at these levels. But as far as actually trying to pick short-term directionality, do a trade in the next week or 30 days or anything like that, I feel you. I'm a little bit. I'm hands off.
I hear you. I'm kind of in the same boat there. Kind of a little bit more hands off. I'm the same kind of opinion of you. Let it kind of figure out what this thing wants to do, where the level of fair value that is going to be on this. It still feels like it's in kind of just IPO type behavior right now. So, I mean, with that being said, we had sold in an out of the money put spread. Right now, both of those are being tested. They're both in the money right now. We ended up selling the 135, bought the 130, $5 wide, nothing too crazy. But since we do have 31 days left till expiration, we're kind of in the boat of where we just got to sit patient, right? I mean, 31 days left till expiration. It wouldn't make too much sense to close this trade out right now. It's best we just wait, see if this can have a little bit of a recovery, and then we can redeploy that capital elsewhere. But since we're already, near the worst of the worst, might as well sit in the next, 31 days. But then when I really put that into perspective, it's like, summer's going to be over in 31 days. I look at some of these expirations like that. Sometimes I'm like, 90 days from now, like, wow, a lot can happen.
It does. That is a funny observation, but you're right. Yeah, I often will do that with expiration dates as well. Or like, I'll be thinking, I want to get this on into the end of the year. And I'm like, wait, the end of the year is only 150 days. It's like, I actually want a little more time than that. You think these things are far away, but definitely does help contextualize sometimes. What's going on, everybody in chat? Media, big deal,
guys.
Christopher, nice boy. Good to see all of you. Gus, you lose money and time? Yes. Yes to both. I did not fare well on the tables this time around. That historically I have done pretty well in that regard, but just could not get anything going this time. It's the way it goes. Because low-key bragging about that code, LOL. I'm not even sure I'm going to use the code. I've never been one to be super interested in betas. I might deploy it, but I don't know. Perhaps could entertain doing a.
He's gonna raffle that.
Yeah,
code
yeah.
off.
I could do a giveaway or something with that for our loyal viewers. Reggie, good to see you as well. Bought Google gap fill at 347.75. Love gaps. I see buyers stepping in. We'll get out tomorrow before earnings. Beautiful, Reggie. Yes, I also am a gap enjoyer. In a stock market context, you guys, get your mind out of the gutter. But yeah, no, I like I love gap fills. I love overreactions, and I really think that's what it is I love trading the other side of overreactions, and gap fills usually just serve as an example of an overreaction in the market. So yeah, sounds like you found a great trade on Google. What do we say? Or is this GOG? These two tickers.
GOG, I know. I was debating, do I put in GOG or do we do GOGL? Which one are we doing today?
GOGL is what I've always gone to myself. But anyway, yes, that's a nice volatility. Nice trade for you.
We were just taking a quick peek at the volatility index. We're sitting at 1719 right now. So again, it's not too low, but we have a little bit of a bid, level of volatility right now, considering where it's been lately. So I mean, we'll take a 1720. We've seen a little bit worse recently.
You guys are making me laugh in the chat.
Big Omaha.
Bro, you are using that code. Yeah, I mean, I suppose I'm forced to if I have it. But like I was saying, yeah, it could be something fun to give away. I'm not too sure. I'm like vaguely interested, but I know it could be better used on somebody else who's much more excited than me. Yes, love trading overreactions. You must love it when Trump opens his mouth. I do. In fact, those can be more difficult just because we're generally talking about a broader market overreaction then. And also, as Errol and I have discussed at length before, it's hard to determine whether it is an overreaction or not, because to make that determination requires you to decide whether you are trusting the news that is emerging. And as has made itself very clear over the past really year now, news is a fickle thing and ever changing and tough to figure out thing. You know, I mean, you can go all the way back to Liberation Day, which is now 16, 17 months ago in 2025. And it was like this huge sell-off. The sky is falling. The market's going to crash. And then the news changes. But that's the thing is, as Trump starts rolling back all those tariffs, had all of a sudden there been a story the next day that the tariffs are all back on, things would have gone back down. And we did see some of that happening, you know, into the V-shaped recovery we got out of Liberation Day. But that's just one example of the broader phenomenon that we're seeing, that we've been seeing, you know, perpetuated perhaps more than anywhere else with this Iran situation, which is just that the news changes all the time. It's hard to determine what to trust, what to believe, what's actually going to stick, because things are only an overreaction if the news isn't actually all that it's you know, made out to be, or perhaps the news is still all that it's made out to be, and it is even an overreaction to the truth. But then it's such a hard calculus with the news. And as far as Trump speaking goes, those are hard trades to make. I like when Trump says, "Buy this." And then you buy it and then it goes up. That's fun. I do enjoy that part.
I might piggyback on that strategy. Next time he drops a ticker in the tweet, I'm gonna have to piggyback on that one. We'll let you guys know how that one goes, but 100%. You got any thoughts on the potential Trump subscription? Did you hear about that over the weekend?
No, I've seen like memes about it. I don't know anything about it.
I've seen a lot of memes about it. I actually didn't even go into the details just because it was just flying all over social media. And sometimes I just get a headache deciphering the legitimacy of just certain posts and certain takes. But I haven't really heard too many valid takes about it yet. But I did hear about like the Trump subscription, or he's going to be releasing, if you subscribe to this subscription, you're going to be first to hear about certain info that's getting released. It's $100,000 a month. So clearly it's going to be hedge funds, a lot of big money in the market that might subscribe to something like that. I think it's going to be interesting. It's going to be interesting to see how that plays a factor in the overall market, I guess you could say. It almost sounds like a new Bloomberg
I was going to say, it's like a Bloomberg terminal. Yeah.
In a way. But anyways, we'll circle back around to that whenever we get more deets.
It is very interesting. Who's got a company card I can use so we can get ourselves a Trump subscription? So CL is an overreaction right now. Let's talk oil. We should talk some oil. Let's do that.
We should. That's not a bad idea. Imagine Tasty allowed us to get the Trump subscription.
I mean, unironically, I don't think we have a Bloomberg terminal, so probably not.
I mean,
but I don't know.
That would be interesting. Regards how we feel about this, I feel like a lot of people would find that kind of intriguing. Anyways, we'll take a quick look at oil.
I mean, are people allowed to hook an API up to these Trump subscriptions? Like,
I don't know exactly how it works. I don't know any details about it, but I did see that thing going on a rave this weekend. Anything to do?
I mean, I'm thinking like what would this is an off-air conversation.
Yeah.
What would the legal hurdles be if we wanted to get this and then make it available to Tastylive viewers, like on the website or something? Like, could we legally do that?
Well, that's a really good question.
This is that's
a great question. Genuinely, that's a great question.
Nobody get excited about that. I'm just thinking out loud. I have no idea if we can make that happen or not. QQQ did the same gap fill yesterday as well. Roulette, bro. You mentioned it has best odds. I did play a little bit of roulette. The only bet in the entire casino with no odds is the odds bet in craps. I would float that. Any sharp gambler would tell you that's the only thing with no house edge. That's certainly the best odds. You're talking about the best odds. Roulette is fun. Did okay there, but again, could never really string anything together. Yep. TK might say the CL is a rounded top, headed down.
Yeah.
There's a head and shoulders up there. I don't know. I don't do a lot of the patterns myself. Also, CL, I think the CL perhaps more so than any market, any commodity, any product in the market right now is affected the least by technicals, just because it is such a news-driven thing. Technicals generally are something that you use to gauge market sentiment, to gauge it's trading psychology expressed through fundamentals is kind of how patterns wind up working out. And psychology obviously still matters with CL, but I think the psychology that matters is how much people are trusting the headlines, how much people believe that we're actually nearing a resolution, all of those things that may not actually be best exemplified by patterns or by technicals. It's just when the more news-driven things are, the less that technicals matter to me. It's like sliders. And if something is just moving as normal and hasn't had a headline happen in 6 months, those are going to be the most attractive products to attack with technicals to me, even though the same principles absolutely can hold up with a product like oil. But anyway, with the end of that soapbox, I still am I don't want to touch this thing. I've been so scared of oil. I already have on the losing shorts that I tried to get on sort of close to the top at the very beginning. We've begun to run back the other way now. Yeah, it's just, this is scary. I was gonna say you couldn't pay me to get involved. You could pay me to get involved, but it would need to be more than the cost basis of my trade. I gotta make a profit if you want me to get involved with oil.
Yeah,
these levels.
No, oil, man, oil is a wild one. Still to see the kind of the recovery that we've seen is just kind of just blows your mind a little bit here. My sentiment on oil has kind of shifted. I think later on we're going to see a little bit more of an energy crisis. So my viewpoint on oil with the top being in is a little bit different from like something like silver or gold or any of those other underlyings that we'd seen put in like this insane bull run at the beginning of the year. It doesn't seem like oil is going to land in that same category. The way things are working out, the way things could crunch into the future, I think we could the oil products get squeezed a little bit, considering a lot of like the points that you made and the points that I see in the chat. Oil really is like a barometer for news and just the overall sentiment. And it's very headline driven and it's very affected by any geopolitical events going on right now. So, I mean, when it comes down to the technicals, it's so difficult to trade sometimes.
Yeah.
100%.
Yeah, just such a scary product. And yes, it's a news barometer, as Christopher acutely puts it in chat. I want to get short on CL. I've got like 60% of my buying power in cash, but I'm a chicken in this market. I am right there with you, Christopher. Let's see. I think maybe north of that. Yeah. Oh yeah. I'm about 70% of my buying power is in cash right now. And yeah, I agree. I mean, I just keep finding reasons to talk myself out of all the trades. It's like, I've tested the waters in the AI space, the memory space, these exciting sectors, and I just can't really find anything. And my portfolio right now is actually defined by more boring trades outside of the trendiest, newsiest names right now. As it pertains to a short in CL specifically, that is certainly contrarian. I think we're still in a position with oil where, as we've discussed, the most contrarian thing you could possibly do would actually be to get neutral with the directional environment that we're in with this product. But, short, I definitely think is a contrarian angle. I could certainly see shorts panning out. But again, I mean, it's like, talking in CL prices here. If somebody came to me and said, hey, I'm from August of 2026. I'm from a month in the future and oil's back at the year highs. I'm not surprised by that at all either. I would say, oh yeah, well that, seems about right given the current environment. So just feels like too crazy of a train to step in front of. And, it's one of these things where you don't ever have to force a trade on something just because it's the hot topic, just because it's, what we're all kind of naturally keeping up with through the news cycle. If there's not an attractive spot, there's not an attractive spot, and it just is what it is. Nobody ever went broke holding cash, as I like to say all the time. So, you'd like to have more of your capital deployed, but you want to make sure you don't force any of those spots. Saying what's up from the fields today, fellas. May your P&L still be green. Just listening. What's going on, Jared? Good to see you. The cornfields today, that is. Hitting the bean fields next week. Love it, Jared. Didn't know a farm was even in the equation for you, although I suppose I did know you were in Iowa, so the odds were pretty good. Yeah, corn.
Let us know what's going on over there. We got these corn futures. Let us know what's going on over there in the fields.
I was gonna say I am still long corn right now, and it's going really well. Actually, has become I'm so far out of the money on a vertical, which is good. I'm so far in a just corn.
Just corn.
Yeah, I'm so far out of the money in a good way that there's actually no liquidity for me to even exit, but just chilling at max profit on corn right now, waiting another 31 days for these to find expiration. But did do a good job of catching the bottom without really any TA. And if I had known that Jared was our resident corn expert, I would have asked him for some.
Yeah, Jared keeping it under wraps. You got to share the love.
Ryan saying wheat is also a war disruption trade. What's that? ZW/CW?
Let's see what we got here. ZW. I've never traded corn. I've never traded.
I think you got to type the /.
Oh, whoops.
Yeah. /CW. Yeah, there you go.
Yeah, never traded these products once before, but it's got a lot of volatility. Looks like it's pretty liquid too.
Yeah, wheat is running up. Actually, not a. That's May. I mean, this chart is not dissimilar to USO. Actually, this has moved pretty tightly with oil. Obviously, it's retested the highs. Oil has yet to do that, but similar situation happening with the highs coming in right at the beginning of May, and then a dip, and then returning to the highs right now. So that's a sharp observation there, Ryan. That the wheat is also a war disruption trade. Yeah, right there along with oil. Like that Errol is looking where the large amount of volume is in CL. Notice prices drifting into lower volume away from the point of control. Yes. Those are Errol's favorite words. Agent Purr, feels good here. Probably nearing a top here soon in corn. Thank you, Agent Purr. Much appreciated. Yeah, I will. I'm going to look to the second that I can get 1 cent of liquidity on my 16 strike on corn and get out of this for a 95% profit instead of 100, I will do so. There's just no liquidity at that 16 put strike right now. Obviously, this is not a volatile product. 16 in the next 31 days would be an insane move. We'd have to have a blight or something.
Oh, yeah.
I think. I'm no corn expert.
We got a lot of fun products, though. A lot of these other commodities are so slept on, but they look like they seem to be really solid trading vehicles, especially something like wheat. I think that one caught me off guard. I mean, even corn. So these things are moving. These provide a lot of opportunity. We got to show them a little bit more love, a little bit more often. A little bit more love, a little bit more often. With that being said, quickly check out seeing what the market has kind of been up to today. It's been a little bit boring. I haven't taken any scalps on the Tasty account at least today or yesterday so far. A little bit of a recap if anybody's been checking out NASDAQ. We did sweep these prominent swing lows that we had put in over here early June, which is really interesting to see. It's nice to see. And again, if we quickly go over to the S&P 500, you can kind of see the lack of volatility that we experience on ES, whenever we compare it to NQ, which is interesting again, right? We're seeing NASDAQ clear prominent swing lows from about a month or two ago, and ES still comfortably trading within that range right now. So what does that say for the market? I don't know, but there is a little bit of a divergence between both of those assets that are typically highly correlated. So it's kind of interesting to see what we could potentially get next, I guess you could say. Again, it's funny every time, even this morning, Mike and Jermal quoting it in E-mini's like, oh, E-mini's down on the day, E-mini. I'm like, wow, it's a whole different story on NASDAQ today. I feel like I just got thrown in the blender, like on a roller coaster in NASDAQ. Everything's always calm over here on the S&P 500. But no, with that being said, ES really not too far away from its highs, trading at about 75.42 right now. Highs sitting at 76.91 on ES. So I still feel like everybody's waiting for the pin to drop. Like something's still got to happen. I know we've been kind of funneling in that range, kind of trading inside that consolidated range all summer. But we're trading right back inside there. So we're still waiting for the climax. I don't know what we're waiting for, guys.
Yeah, like I've been saying, everybody, it feels right now like the word of the year is volatility, but to me, the word of the year is actually consolidation. I think I think that we are just into a similar holding pattern, which could potentially last us months, like what we saw, at the end of 2026 and the end of 2025 and into 2026, where SPX just had this basically 6 months of consolidation, and it felt volatile the whole time, and there's some stories here and there. The metals popped, and all these different things, but ultimately we could just never burst through that ceiling on SPX or NASDAQ, and it feels like we're in a very similar spot right now. I actually am going to go ahead and get a trade on expressing this sentiment. Going to take me a little while, but going to do an iron condor here and try to just express this neutrality. Trying to find the right balance of time horizon and strikes here, because while we have been consolidating, the range is large. I mean, 7,200 to 7,600 is no small range, and it would be tough to encompass that entire range in an iron condor without doing a ton of buying power. So trying to find my preferred angle of attack here.
I hear you. Seeing the sell-off. Volatility is pretty decent right now. Probably could find some. Probably could wiggle something in there.
Yeah, I mean, I would just need it to be I just want like a month, but I also want a fairly large range.
Are you looking at SPY?
Yeah, okay.
SPX.
Yeah.
The Cboe.
The big one.
Out.
Yeah, trying to decide. I mean, could I get what happens if I go $200 wide a month out? But even then, it's like, we could stay within this range and still move more than $200 wide.
We could maybe. What are you feeling? Iron condor, strangle?
Yeah, definitely iron condor. I don't have the facilities for a strangle on SPX.
Let's see what we got here. 74, 75. Let's see what the expected move is calculated right now. I know you.
Yeah, I mean, this really isn't that bad. Yeah, I'm on the 31-day. Okay. The PM. There is an AM settled on August 21st also, which is worth noting. But I mean, this is pretty attractive to me. I can go 73.95, 7,400 on the bottom, 7,600, 7,605 on the top. Mid price is 360 of credit for 130 in buying power. And again, I mean, I understand that this is a dangerous game that I'm playing here. An expected move. Is this right? Yeah, one standard deviation all the way out to 78.80. So there is a lot more range than I'm giving credit for here with what I'm choosing to put on. But I mean, I just don't hate this. I feel like for the risk profile I'm getting with this consolidation environment that we're in, how does this look on the chart? 7,400 is...
What was that put side again?
7,400.
74.
Yeah. Sorry, 76.
Call side 76.
Yes, call side 76. Put side 74.
74.
Correct.
74 flat.
Yeah, and then the long one is 74.90 or 73.95.
See, there we go.
Yeah. This is the put side of the trade setup that I'm looking at here at least. But yeah, I think I am gonna go ahead and pull the trigger on this. I mean, looking at the charts, like this feels like a fine range to me going this wide. So yeah, let's express this neutral sentiment. Let's put some money where my mouth is. See if we can't get a fill on this one. Iron condors are tricky fills sometimes due to the.
It can be. You got some extra legs.
Yeah, a lot of contracts in the equation. Okay, there we go. Got the fill at 360. So I will. I'll get this published in the follow page. But yeah, just expressing some neutral sentiment here. It really just. The broader market just is screaming consolidation at me, and I made note of this the entire time it was happening at the end of last year, but never acted on it. And I was frustrated because it was at about this point in the process that I started to notice this phenomenon, and it lasted 3 more months, and I just kept talking myself out of it. So not talking myself out of it here. Yes, very well displayed on the chart here. That's the wider range that we're looking at. What's that bottom at? Like 72?
Yeah, about 72.
Yeah,
72.40.
Yeah, and that was like peak war uncertainty is what it took to get us down to 72, and then obviously that came off pretty quick. So
volatility barely spiked.
Yeah.
Which was sus. It's like you're telling me we sold off this much and the fear in the market is only calculating a X whatever it was on volatility at that point. So we'll keep an eye on it.
When you're Boba saying, when you're scrolling through the options chain, what are you looking for /at? Help. I think, in this context specifically, you were just looking for my strikes.
Yeah, and you're kind of just playing with it, right? To see what you're comfortable with, buying power.
Yeah, more broadly, the things that I'll actually go to the options chain for are those 1 standard deviation moves, the expected moves, which are nicely noted with the dashed line down at 78.80 on this one. You won't miss it. That's a good example there as well. So yeah, expected move, IVX, if that's something that you care about. I'm more of an IVR guy myself. And then just liquidity, volume. Obviously, if you're a volume guy like Errol, looking at where the volume is at on different strikes is interesting. Like for instance, just right now at a glance, I can see call volume 31 days from now on SPX is particularly elevated at 76.50 and 76.75 as well as 7,700. You expect that at those more natural intervals, people are consolidating their options volume around those levels. And then, as we go higher, 77.60, also a strangely heavy strike, and 77.70. So, just good expressions of market sentiment. But I don't know. What do you look at on the options chain?
I would say pretty much everything you pretty much touched on. Looking at all the variables, but also it's always nice to see the little pop-up window down here at the bottom where you can see the pop, right? The extrinsic value, the P50, the delta, the theta. And then whenever we adjust these strikes, so whatever type of strategy we have on, it kind of just gives you a good idea of where you're at.
Yeah,
how
the
much
trade
buying power you're using.
This trade execution screen is wonderful. Yes, exactly. It tells the buying power that you're using, what you're getting out of the trade. That's how I'm always scaling my risk profiles. Something else I would float as well, and I know Mike likes to do this a lot, is you can look at the actual charts of the option pricing themselves. If you, I think it works on here. If you right click on
100%,
if you right click on any strike and hit view option and chart, you can do this. Now, let me be very clear. If you ever see anybody on social media or elsewhere telling you to apply technical analysis to the chart of options price like this, they are full of it. Do not listen. It does not really translate that way that well. The principles can hold up. There are examples you can find where they work out, but it's generally more happenstance when you're talking about these options prices. What these options price charts are useful for is trying to figure out where an option was when the stock was at a previous level without, actually doing all of the math. A common application and something that Mike has probably dove into on the show before, and a way that I've used this is like with UNH. You can look at, say, the 600 strike calls on UNH, which used to be a $600 stock, and say, wow, these were 20x higher and the stock has only fallen 50%. So there's probably going to be disproportionate upside in play should the stock return to $600 and I be holding these calls. You would expect them to return to similar levels. So there's absolutely angles that you can take there as well.
Yeah, no, 100%.
Are you looking just for higher volume? Oh, are you looking just for higher volume greater than OL? OI?
Open interest.
Open interest. Okay. I couldn't tell if this was an L or an I, throwing me off there. No technicals and options prices. Yes. And like I said, you can find examples where technicals appear to hold up. But I would never be like, oh, look at this cup and handle on the SPX 7700 strike calls on August 31st. It's like that starts to be a little bit frivolous to me.
Yeah. One of my favorite ways in utilizing the options contracts and being able to view the price fluctuations of the options contract themselves. I think it's one of the best ways to actually be able to gauge the risk to reward whenever you're trading a lot of the zero DTEs. So if we go to the daily chart here, you'll probably see a little bit more volume in these contracts. So if you were to be intraday trading these zero DTEs, let's just say you're buying a call or you're just buying a put, nothing too complicated, right? You can manually set a stop loss. So if I wanted to buy this contract at 770, and I believe, well, I only want to risk, let's say 70 cents on this, I can put a stop loss on that individual contract at $7. And sometimes it's kind of nice to have an idea of where you want to put your stop loss whenever you're trading like a lot of the zero DTEs directionally. So whether that be, under the previous low, being able to be like, okay, that's about 15 cents of risk. I don't have to risk the entire value of the options contract to see my trade thesis play out, whatever it might be. But whenever you do set that stop loss to, you can then kind of just drag it and drop it to on the options contract itself, not even just the regular chart that we typically trade on, which can be really helpful to at least visualize that risk profile for directional trading at the same time.
Yeah, absolutely. Yeah, all kinds of wonderful niche things we have to offer in the platform here for all these different applications. And Boba, yes, Frankie hit this right on the head in the chat. If deciding which strike, always make sure there are both intraday volume and open interest. Sometimes the open interest will be high, but the intraday trade will be thin, which probably means the open interest was done by a giant-sized trader. I couldn't have said it better myself. Thank you, Frankie.
I was going to point out the 7400 that you were looking at on SPX has the highest open interest relative, based off the surrounding contracts that we have too, which is really interesting because it's standing out like a sore thumb.
Yeah.
It's that 7400 contract. So very, very liquid contract, a lot of volume traded on it. But to the point you just made.
Well, yeah, that's the put side. So that really just makes me feel even more comfortable in the position. Admittedly, that was not something that I just looked at as I was putting the position on. But yeah, if you have that open interest, if you have the high volumes of those strikes, it means you would likely see some exits coming through on people who own those puts at those strikes, which could potentially act as another support level. Obviously in the broader calculus with everything else, but just another factor to have in your back
It's an area in the market where there's a lot of market participants interested. Right? Not saying necessarily it has to bounce here, it has to sell off here, but market participants are interested within this general area.
Yes, exactly. Option price charts are better viewed as line charts. Yes, Christopher, they are. That is astute. Anta said, just click like. Thank you, Anta. We appreciate you. Anybody who hasn't, please do click like. Helps us out a ton with the algorithm. It costs you nothing. We dearly appreciate it. Errol and I are here for 15 more minutes as well. We didn't mention that at the beginning, but we are here through 11:15 today, so we're not rolling at our usual time. But yeah, I mean, beyond everything we've discussed here,
Beyond Meat?
like I said, Beyond Meat, that company. What are they at? 60 cents?
Let's see what they've been up to. They're getting absolutely hammered. This is why just don't fall for the
I was
propaganda.
exactly right. How about that? I totally just pulled that out of my butt. Last I saw, they were at like $1, so I just figured they had slipped.
That's hilarious. This is why you just don't fall for the propaganda. The SpaceX IPO, Beyond Meat. When this thing first came out, I think it was like 2020, 2021. This thing was popping, and everybody was talking about this is going to be the next whatever. And it's just like, you see how the hype of a lot of these underlyings end up playing out. Obviously SpaceX might be a little different than Beyond Meat. I will put that out there. But in terms of, hype when it comes to trading and investing, a lot of times it's like smoke and mirrors.
Yeah. Beyond Meat peaked at over $85, by the way.
It was one of the most popular traded stocks.
Oh, yeah. Yeah.
At one point.
This was like at the same time Nikola was popping, which Beyond Meat never made a fake video to make it look like they actually had burgers when they didn't. But they just those stocks kind of exist in the same place in my brain. And Nikola is another great example of seriously why you can't buy the hype and can't trust what you see. However, shout out Nikola for at least, and obviously the resources weren't available at this time, but at least they really went out there and rolled a truck down a hill. At least they actually did it.
That.
These days, you would just have AI make a video of your truck driving down a hill, but Nikola, they towed that thing to the top of a hill and rolled it down. That's peak dedication to misleading your shareholders. I must respect it. Not the misleading your shareholders part, but the dedication. I respect the dedication that is needed.
No, that's crazy. I forgot about that slight detail. But yeah, no, Beyond Meat absolutely getting hammered here. 60-cent stock. I believe like 80, 90 something percent of stocks, penny stocks, end up filing for bankruptcy. I'm not saying that's going to happen to Beyond Meat, but that's just what the statistics tell us. So that's not
true.
from my opinion at all.
I would be very interested as well, because I bet that this is even, and obviously this is a correlated situation, but I bet the rate of bankruptcy is even much higher for stocks that were, say, once over $50 and become penny stocks.
Yeah. And if you're selling fake meat.
They still got the Beyond things at Burger King. I mean, they're in major chains. It feels like
that's true.
It feels like if you have a product, a food product that is in every Burger King in the nation, that surely your share price should be higher than 60 cents. It feels like that's all you should need to push your share price higher than 60 cents. But thank you for the kind words. Of course, we're here to help. It's what we're here for. Happy you're learning. It can definitely all be very overwhelming sometimes. Options are a very daunting thing to get into, and it's why we're here in the first place.
It can be.
We were all once incredibly overwhelmed, I assure you.
I remember before I got into options, just seeing a chart and buying and stuff, that was like drinking water out of a fire hose.
Yes.
You know?
Yeah, even just those first parts.
When you think back to the old days.
Yeah. And it's like yeah, even just the levels, like at the very most granular stuff, like you got to learn long versus short, and then you got to learn call versus put, then you got to learn long call and short put.
Yeah.
And it's like just those things can be easy to confuse. Even just having conversations with people around the office, sometimes I have to sit there and process for 5 seconds to actually get an idea of what position they're talking about.
Yeah. All good, Bob. I'm overwhelmed too. No. I'm just fine.
Ryan, thank you for the kind words also, and thank you for the like, brother. We appreciate you, Ryan. Let's take a peek at some semis.
Some semis. What do we got? SMH?
Yeah, SMH, good starting point. AMD, maybe more specifically, is what Christopher's bringing up here. Let's take a peek at some semis. Strange, but I'm actually considering a range-bound trade at AMD. Higher IVR at 96.3. Been stuck between 500 and 580. Beyond Meat is such a bad name for a company. IMO.
I can't stand it.
Yes, just briefly before we get into the semis, I agree. not a good name. Not a good name. Earnings season, I forgot. I see. He went back on it. Oh man, earnings season, I forgot. No range-bound trades for semis. Yes, Christopher, that's actually exactly the first thing that was going to come out of my mouth here. Being range-bound, again, like I said with oil, the most contrarian thing you could possibly do in the semis right now would be to get neutral and not directional. It is certainly fairly range-bound, but yeah, during earnings season, the way that these similar sector companies all just move with one another is so challenging to keep up with. It's like all of them have 5 earnings calls.
Yeah.
Like AMD, AMD is just obviously just worried about themselves. But when Nvidia reports earnings, when TSM, when ASML report earnings, all these other adjacent companies, when they report earnings, AMD just moves like it's AMD's earnings call too. So it can be very difficult to keep up with. AMD, I see reports August 4th. So you do have 2 weeks before that happens, but as you said, you're going to see all these other semis start going. TSM making headlines today, propping the whole space up. AMD up 6% today, actually logging a very good day. But it's this is a dangerous environment for neutrality in the semis. However, it's also the most contrarian thing you could do. And as you mentioned, the elevated IVR, which is due to the earnings coming up, but that does create a lot of premium if you got the cojones to step in front of them.
100%.
If fake meat wasn't loaded with chemicals, people would like it more. It's true. It's true.
You know what? I feel like I caught a stray with that one because I do like regular stuff with GMOs.
Oh no, he's saying the fake meat. The fake meat is so piped full of chemicals.
It's pumped. It is pumped full of chemicals.
Yes.
Oh, I got you. Because it's like I eat stuff every day that's pumped full of chemicals that taste amazing. Like if I go to another country, I'm gonna be like, bro, give me my GMOs. Give me my GMOs back, man.
No, I'm a God-fearing American, and I eat ultra-processed crap for every meal of the day. I love Red 40. I love GMOs. You can't take them from me because I have the Second Amendment. Damn it! Come and take it. Come and take my GMOs. You can't.
Yeah.
Oh my goodness. A $500 stock with an IV of 83%. Holy crap. Yes. Oh my gosh. And it's just, it's emblematic of what we're seeing in the entire semi space. And and who can blame them for the 70% or the 80% IV? 80% of $400 obviously, which would put them at $100. Guess how long ago AMD was at $100? It's like not a year. I guess it is a little over a year. AMD was last $100 stock in May of last year. So we're just barely over a year since AMD was $100. More recently, we were at $200 on April 7th. So in 3 months, we've seen this, north now of 100% move, nearing 300% move that we've seen up to the upside in AMD. So, the IV is justified as scary as it is. The market is just saying, hey, this could go back to 200, and that's perhaps not that unfair, or it could go up to whatever. 900 on the
to
other
the
side.
point you made, I mean, we were trading at 460 3 days ago. 460 3 days ago. We're trading at 533 right now. Extremely volatile names.
Prop Trader, I like the stream just for you saying that. The GMO and being an American. Thank you, Prop Trader. We're in this together. When news comes out about the issues with lettuce, does that mean it's time to buy puts on lettuce companies? Well, if you could find a company, a publicly tradable company that really was just a lettuce company, the short answer is yes, but you would have to be incredibly quick with your reaction. The market will react in seconds to price in available information like that. The prop firms and all the people with the big money, the market makers, if you will, quickly move prices in reaction to news like that, and they're going to be to the news faster than us. So for a good news trade where you're trying to get out ahead of the news, it would need to be something like either you have early information on that, or you think that the situation is going to continue getting worse with lettuce. We're going to get new information in the future that's worse than we have now, or you could do something adjacent. You could say, oh, if there's a problem with lettuce, maybe there's a problem with cabbage, which in this case is true, but you could shift over to a cabbage company in this example and try to get out ahead of the bad news breaking for them. But trying to trade immediately after the news comes out is something we would generally say is not the wisest choice. Buy the rumor, sell the news is what people always say.
Bad day to be a vegan. It's a bad week to be a vegan.
Bad week to be a vegan for sure.
You're playing roulette.
Yeah,
food.
No kidding.
This week.
Did we ever get confirmation that it was Taco Bell? I know everybody pointed the finger at Taco Bell right away, but I don't think they
Bro,
if that is found Taco
not
Bell guilty of anything.
Just like a perfect encapsulation of human behavior. It's like just the first one to point to it. It reminds me of TMZ. It's the first one to get the news out. It doesn't even matter if it's right or wrong. Just get the news out. It was Taco Bell, and then run with it.
Yeah,
kind of funny.
Yeah, TMZ will cash you out if you got a video of something.
Yeah,
they want it quick.
No.
When are we going to do a fake carrot made of meat? That's a good point. That's a good point. Why don't we have meat? Why don't we have fake vegetables?
This sounds disgusting.
We have.
I hate that comment was even brought up. And I
fake
hate that
meat
you
made of
verbalized it
vegetables.
out loud. And I got the image in my head. We got the comment. You verbalized it. Got the image.
Beef carrot.
That sounds terrible. Oh my gosh.
Oh my goodness.
We're getting a little bit of a recovery on some of these memory names. Got a little bit of long delta on there. We sold an out of the money put spread yesterday. $5 wide. It expires in about 31 days. I don't think memory names are going to continue to go to all-time highs. Maybe it'll prove me wrong. I would love for the range to increase, but it does kind of feel like there's a little bit of a change of character here. So we're going to try and get on a little bit of long delta, and then hopefully if we get a little bit more of a bid over the course of this week, we're going to look to take off this micron position, because then we want to try and get on some short delta. So yesterday we were kind of talking about, the front side and back side of the move whenever we believe the top might be in. And this left side is what we consider the front side of the move. This right side is what we consider the back side of the move. So considering that the top could potentially be in, right? Let's allow the market to prove us wrong. But if the top is in, I want to be careful with getting long some of the bounces on the back side of the move, because it does feel they can be a little bit more short-lived, rather than, or opposed to if they were trading on the front side of the move where we were kind of continuously putting in highs. So maybe we can kind of scrape something out of this Micron and SanDisk, but those names have been super volatile. Even though we're not continually putting in all-time highs, a lot of volatility to the names, a lot of opportunity for an active trader, regardless of the side of the market you're trading on.
Yeah, I hope everybody got long SanDisk when I got out.
Was that the move?
Yeah, I mean
was that the?
It's so comical. Yes, I was just saying that was on the 16th, which was what, Thursday.
Again, this could be short-lived. Yeah. Maybe we be back to the low. It feels like this is where it starts to feel like Jack in the Box. This is where it starts to feel like musical chairs, especially being on the backside of the move. It's like, yeah, we're getting this pop, but it's like, how long is that going to be short-lived? We are kind of still technically on a downtrend if we look at the higher time frame. And if the top was put in, and this was such a momentum move, I really don't believe this. I think price-wise, yes, the fundamentals do matter, but a lot of this move to the upside in such a short amount of time feels like it was really based off of a lot of momentum.
Sure.
And it feels like a lot of these runs were a little over-exaggerated because we were running on hype. Not that this won't be this price 5, 10 years from now, 20 years from now, just in the short term. But anyways, with that being said, maybe we're back down to the lows fairly quickly, but it does seem that
we'll see. But it seems the Gus inverse SanDisk ETF.
Well, it's working for the last 24, 48 hours.
Yes,
anyway.
yes, precisely. But yeah, no, that's going to be about all the time we have.
Nothing else top of mind.
Stay tuned. Research team coming up next. Nothing else top of mind for me.
Cool. Well, brother, always great to have you back, guys. Thanks for taking the time to hang out with us today. Rancher, Big Deal, Jared, Prop, everybody else. Be sure to stay tuned for more amazing content coming on next. We got the trades from the research team coming on soon. And we'll catch you guys here in a little bit. Peace.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? Tasty Trade.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Putting on strategies? That's easy. Taking off strategies? That's also pretty easy. But what do you do with everything in between? Well, in our Options Crash Course Strategy Series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there.
Let's make this quick. I gotta get going. I make $4.97 every second that I work, and if I don't clear $145,000 by the end of the day, I'm gonna go crazy.
Okay.
It's a cute dress. Where'd you get it?
Oh, thank you. H&M.
$23, 10% off sale.
That's pretty good.
Probably not worth more than $4 now. That's too bad. You gotta be aware of these things. Everything has value.
Well, not everything has value.
Everything has value.
I am pretty sure I can name a couple of things that don't have value.
Go ahead, go for it.
Okay, caution.
5 cents.
Feebleness.
That's a sad one. $1.12.
I have a toughie for you.
All right.
What about us?
Me and you?
Yeah, did we have a price?
Yeah. 2 cents. We should have sold that one a long time ago.
2 cents?
Yeah, we could have made a lot of money on that one. Oops.
2 cents?
Yeah,
I wouldn't even pick that up off the street.
Exactly. I think that's more on you than it is on me. Lord knows I'm trying. Hey, you know what, though? There's money to be made everywhere. Take you, for instance. Look at you. You're a young buck. What are you, like 37? I'm joking. How old are you?
I'm 26.
With your genetic makeup, you know, you're not putting on too much weight. I think you could sell those little lady eggs of yours and make quite a profit online. But I wouldn't wait too long. Next month, those would go down big time, especially if you keep eating the way you're eating. I gotta take off. Time is money.
Are you serious?
Yeah. Hey, look. Can you get the check on this? I left my wallet in the car. I don't like to carry around bulky things. It slows me down.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately, has turned into 100 shares of long or short stock.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
What is going on, guys? We're back, and we have something really special prepared for you. We got trades from the research team. We got a few amazing trades coming for you guys. Get a little bit more perspective on that. Today, we got our brother Sahil. So, what's going on, brother?
Not much, so much. How's it going with you?
Pretty good. A lot of volatility into the market. SpaceX has been a little bit disappointing since IPO. You got any thoughts on that? It's been, I mean, it's been disappointing. I don't know what else to say about it.
Since its IPO has actually been doing pretty well. SpaceX is not.
Yeah.
Maybe due to Elon overpromising, under delivering stuff. Maybe people have been eroding the trust.
There was so much hype.
There's so much hype around all the IPOs that have ever happened. We did some research on that, and like on one of our segments, and the first 2 years after an IPO are not good for
really,
So
I did peep how there was about $320 million of retail investors that poured into the SpaceX IPO. One of the largest.
And you were one of them. No, you don't.
I was technically. I mean, if you want to count the out of the money put spread that I sold, technically yes.
Oh, you didn't mess with the IPOs. You're not an IPO trader.
I'm not, just because, not that I don't think it can work out. I just don't have much experience with it. I don't really know what I don't really.
Classic case of no experience, but I'm not going to do it, so I don't want to get experience.
You know what? You're right. You're right. I got you.
This is a scalper's market, man. You see the SPY volume that's been happening. SPX, SPY volume.
There's been a lot of volatility, and honestly, I think SpaceX, the right way to go about it was just to scalp the volatility within there. But shoulda, coulda, woulda. That's hindsight. What's the first trade you got on the day? What you been thinking?
We got some Oracle action.
Oracle, I like it.
It's going to be a little interesting coming up with trades because we usually do trades from the research team before market open, so we can kind of see what's happening in the. We don't have to mess with the market that's already been happening, and then we see how the market's been doing, how the pre-market's been doing. Should we be putting on the trade as a bullish or bearish trade based off if it's down or up from the previous day? Now we're doing trades from the research team right when the market's happening, so we have to adjust based off the volatility, the volume, the different strike prices. Maybe you don't want to put in the trade now. Maybe you want to put in the trade later.
Yeah.
So we'll see what's happening. Also, the other difficulty is with all the earnings that are coming up. People who don't want to mess with earnings too much, usually with earnings, people like to do ratio spreads and stuff like that. Those are pretty good strategies for earnings trades if you want to go super short term. But for our standard trades, you got to go onto the watch list tab, take away all the earnings.
Yeah.
And there's not too many interesting high name stocks left. So we'll see what we come up with. But Oracle is one of them that actually has earnings pretty later in September. So we just got a standard short put at the 100 strike.
Right.
Right here, 18 delta. And it's actually pretty good credit to BPR ratio. On just a naked short put, you're getting $4.10 of credit, which is a little wild if you think about it, but there has been a lot of skew, a lot of volatility in this stock. So
$1,000 for the buying power? Yeah. That surprises me right off the bat. That's what stands out.
$125 stock.
Yeah. $125, $1,000 worth of buying power. And this is just selling the naked put.
Just selling the naked put.
You would think the buying power would be a little bit more.
See, for the smaller accounts,
I like that. Actually.
For the smaller accounts, we like to go defined risk.
Yeah.
But anytime I can get undefined risk, get that little bit more extra oomph into the trade,
Yeah.
It's a little bit hard for stocks that are over $100, So
for you, whenever you sell a naked put or a vertical spread, how do you feel emotionally? Is there a difference, or are you kind of just like, it's just another trade for me?
Well, as I've gotten more used to trading and getting a little bit more experience, I don't notice too much of a difference.
Yeah.
But there's always that little twinge of doubt, especially in these like tech stocks. Like, what if it just goes to zero somehow?
Somehow, just to zero. This isn't beyond me.
In all honesty, because the defined risk, what your max loss is going to be pretty much, With undefined risk, you don't. But like that's kind of a fool's errand. Okay. Like, I think we worry a little bit too much about like the worst of the worst
the unexpected.
Scenario, and
it's just how we are as humans. You know what I'm saying? I mean, it's those intrusive thoughts. Like it's like that's never gonna happen. You're never gonna fall out of the train while it's moving, Errol. You don't gotta worry about that.
I think people get burned on defined risk trades sometimes a lot because they're expecting it to be a little bit safer play.
Yeah.
But there's a lot more to manage. There's a lot more to see because you have the long, underlying as well. You have the long strike price. Okay, so.
No, I like it. I mean, as we look at Oracle right now, Oracle's trading at $125.44 right now. It's been absolutely crushed.
In AI, man.
Is that why they're getting crushed right now? Or are they getting drugged down with?
People are too criticizing them right now that they're too involved in AI.
That's why Oracle's getting criticized because it's dipping their toe into AI.
Yeah.
Why do you think AI's had such a negative sentiment? I was listening to some of the valedictorian speeches, right, at the end of the about in May, and at a lot of colleges, whenever AI is mentioned, they're booing everybody. They're booing them, and it's just like you guys probably wrote a lot of your dissertations and a lot of your assignments utilizing AI. I'm just saying, I gotta point it out.
Maybe not the valedictorian, man. Or maybe,
okay, no.
Okay.
No, if the valedictorian, I think they're smart enough to make their processes a little bit more efficient.
Yeah.
So you see what I'm saying, though? But I get the sentiment.
They're smart enough with hiding it. Because people want to say no AI because they want to feel like good people, but at the same time they end up using it in their daily life.
Well, I feel like technology is one of those things where it's coming whether you like it or not, and regardless of your opinion or you know.
You have very pro AI sentiment.
No.
This guy, right? You got to check his work logs.
No, that's funny. But with that being said, definitely going to check out that Oracle trade. I don't see too many trades where the buying power is sufficient for my account type to not have to use a defined risk. So I really like that.
Not many people trade with only $200, my man.
Okay. You're right. What's second on the board for you? We got Oracle number 1.
XLE.
XLE, okay.
Let's go with some ETFs over here. Energy. Yeah. So what are our opinions on energy, gold, oil, all these things that are happening?
So I know we were talking about oil just before with Gus, and we were talking about how headline driven it is and how much uncertainty there is, especially whenever there is ongoing geopolitical events. Whatever Trump might want to tweet at any point. It feels like these type of assets are so affected by headlines rather than anything else. I guess you could say it's extremely fundamental driven, or the perception of the fundamentals, I guess you could say. So energy is always a beast in its own regard. I guess you could.
So that's what we do, strangle. Okay.
Okay.
It's another naked strategy. We're going 2 for 2 naked strategies on here. Another $750 in buying power. It's trading sort of in the middle of its recent highs and recent lows. I like to do obviously the strangles and the iron condors when it's trading around the middle of like a recent high or recent low.
Right.
So I think that just kind of makes the most sense, because if you're going to go in neutral strategy, you don't really know what direction it's going to be moving in. I feel like that's the best time to do it. And yeah, so just to try to get into energy a little bit, I think I'm pretty much into oil a lot. You'll be seeing that in the third trade. I'm into a bunch of the tech stocks. So just try to do something a little bit more different. You know, energy and gold are kind of a little bit more safe haveny kind of stocks, even though everything is just behaving wildly right now in this market. But we'll see how strangle in this one goes. So.
That's a good way to put it. Everything is behaving wildly right now. And to the point that you're making right now, bringing up energy, I know we've seen a little bit of a reversal, or we've seen a little bit more momentum into this oil market. Have you seen that at all? I'm sure that's affecting XLE a little bit more there, but it seems like the sentiment could just shift at the snap of a finger. I mean, we didn't even consolidate whenever we started trading at around 70 on oil. We continue to put in new lows, and then one day from the next, we just reverse and we start putting in highs. It's just like no consolidation. It's just a reverse in sentiment at the snap of a finger sometimes.
I don't know.
Yeah.
It's a little weird, you know?
Yeah, no, it definitely can be. But I like the strangle on XLE. It gives you a little bit more flexibility too, depending on what it does. And it's a cheaper underlying, just over $700 worth of buying power.
I learned from the World Cup people that have been, the Europeans who've been coming over, okay?
What's that?
And Americans always complain about the high gas prices over here. But if you do the liter to gallon conversion, and you compare the liter prices in Europe to the gallon prices over here, the ones in the UK actually come out to be about twice as expensive.
Really?
Or something like that. So, but they obviously have their public transportation networks that they like to use.
That's true.
So.
They got higher taxes too, right?
Oh, of course. Here we go. Mr.
I'm just playing. We got Oracle number 1, XLE number 2.
I don't want to get into that mess.
Next question. What do we got for the third one? What are you feeling?
USO.
USO.
We're going to double down into
double whammy.
So the reason I brought this up is XLE. If you want to trade a little bit more diversified aspect of energy, because that has a little bit more than just oil into it. It has all the other energy stocks as well. But if you really want to just single-handedly go into oil, you can kind of choose what ETF you want to go into. You want to go into XLE. You want to go into USO. If you're going into USO, though, I suggest doing the full whammy over here and just doing a poor man's covered call. This is an interesting one because A, it's hard to borrow, so just be a little bit careful for the hard to borrow people out there. Because I know a lot of people like to avoid those types of stocks because they don't want to be assigned early and stuff.
Yeah.
But this is a debit trade because it's a poor man's covered call. The way USO has been going, it's obviously been extremely volatile and stuff. But because our governments are making posts on X now, basically saying the war's happening, the war's not happening. Oil prices are coming down, oil prices are going up. Everything is just going up, down, left, right, center. Okay. Right now, it's on a little bit of its lower end. It's actually been trending downwards a little bit, and then slowly started been picking back up. I think since the first week of July, it was at its lowest point in its most recent times. It's been slowly tricking back up. Okay, I don't think this is the end of oil or the end of oil going up and up and up.
I'm in the same exact boat as you.
It's going to keep this going up. Okay,
I'm literally, we're both in that boat together. Yeah. So I think we're actually going to run into a little bit of an energy crisis. Whatever, blah 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 blah.
Energy crisis.
I do think so. I do. I could be wrong. You know,
people like to throw around the word crisis there. For
hey, look, it's
things that are not actually crisis.
It's fun to speculate on. Okay. But I don't think the story's over for oil.
So why don't we get on that bandwagon a little bit and have a little bullish action, a little covered call action? You want to hold the underlying, and then you also want to sell. You want to sell the call over there.
I like
to make a little bit extra on the premiums.
Get creative with it. Get the flexibility with the options.
might be a little dangerous sentiment to be bullish right now in US. So I don't know if this is an popular opinion in the contrarian world. Okay.
No,
tasty trade, but
I actually wouldn't mind getting on some long delta right now in oil. I would want to wait for a little bit of a pullback just because it's had so much momentum over the last few days. But like overall, same sentiment. I like that one.
You got to wait for that red days to happen.
You know me.
I see what happens.
It's tough. Yeah. It's tough to pull the trigger sometimes into the strength. But with that being said, Sahil, brother, great stocks. We got Oracle, we got XLE, and then we got USO.
But you didn't yell at me for doing 2 energy trades.
No, I love it. It's funny. We got ahead of ourselves a little bit with talking about the oil market. And we had USO on the third one.
It's okay.
All right, cool. But with that being said, Sahil, we appreciate you. We're going to check these stocks out, see how these trades work out as time passes. But with that being said, guys, we're going to go to a quick break. Be sure to stay tuned. We have more trade ideas coming at you next, back to back to back. So be sure to stay tuned for that, and we'll catch you guys here in a little bit.
To rewatch that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Grax, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots. Okay, thanks for the heads up. Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
What is going on, guys? We're back with you with another trade of the day. But before we quickly get into that trade of the day, I want to talk a little bit about the trade that we had put on yesterday. So we can go ahead and jump into this Tasty platform. Again, as always, let us know what you're looking at. Let us know what you're trading. But we did get a little bit of long delta yesterday inside of Micron. So we're up a little bit on the day, which is nice. We're up about 72, 73 bucks on the day. The overall position is up about 52 bucks. It was needed. We needed something to hedge this disappointing SpaceX IPO that I might add here, but both of them are up on the day. Micron is catching a little bit of a bid. the overall sector pretty much gapped up overnight, and we've had a little bit of a continuation into the highs. So we're going to try and ride this momentum for a little bit longer, and then we're going to look to close off this out of the money put spread we put on yesterday together. That still has about 31 days left to expiration. So you can kind of see we gave ourselves a little bit of room from a strike perspective, and then also from a time standpoint, just in case that pop was going to take a little bit longer than we might have anticipated, but we might not even need, all this extra time that we purchased on the Micron contracts. But it's nice to be to err on the side of caution. But with that being said, Micron trading at about 970 right now. SanDisk, Intel, those other names following suit. But seeing a little bit more volatility on Micron. And the next trade of the day, next trade idea of the day that I have today is actually going to be Oracle. Oracle's been absolutely beat down. Sahil just hopped on here for trades from the research team. And he brought this one up. And I genuinely find this one very attractive because of the fact that we were looking at selling an out of the money put, which only took around $1,000 with the buying power. So I want to go into this options chain and I want to find a naked put, potentially, preferably, to get a little bit of long delta in here. I think Oracle has been absolutely beaten down. Obviously, they've had more talks about AI and integrating AI into their systems and things of the sort. So we're getting a little bit of a pullback here. Oracle is still a company that I think is going to be surviving and doing pretty well over the long term too. So even just from a fundamental perspective, not that us as active traders care too much about the fundamentals. We just really like the volatility and risk rewards that we can get off these trades. It still gives you a level of comfort knowing that fundamentally, unlike Beyond Meat, and I'm just going to beat that dead horse. I can't even call it a dead horse because Beyond Meat's not even real meat. But aside from Beyond Meat, it's a company that actually has some solid fundamentals. But with that being said, we've been absolutely beaten down. We were trading at a high of about 250 early June, and now we're trading near a low of 125 right now. So really beaten down. It's a $125 stock. Typically, these stocks, or sometimes the options, can get a little bit pricey when it comes down to using any type of undefined risk position. But we're going to see what we can get. We're going to see what type of time we can get on some of these trades. But let's just go look at the put side. Maybe we can sell a pretty decent out of the money put, get a little bit of long delta on, but also give ourselves a decent amount of time. So we're going to look at the same expiration like we did with Micron, the August 21st contracts that expire in about 31 days. And just right off the bat, when I look at this expected move, I look at the 110 calls. I mean, we could sell that. That's for about $1,100. The pop on that one is going to be about 76%. Delta 21. So it's not too aggressive, but it's aggressive enough for me to feel comfortable, to feel like I even have a long position on. And then max profit is going to be sitting around 315, right? I mean, the underlying right now is trading for about 315 on the bid, about 330 on the ask. So it's not the tightest of markets, but it's tight enough. We'll put it that way. It's tight enough. See if we can get this one to send through. I really like the pop. I like the P50. And again, I mean, around $1,000 for an undefined risk trade, especially on an underlying that's been absolutely beaten down to the downside. I love these type of contrarian trades, especially when I can add a little bit of the fundamentals in there too. So we're going to try and send this one through. But let's see if we can catch a fill. If anybody in chat wants to go ahead, never mind, we got filled. I was going to say, if anybody wants to go ahead and buy that 110, we could just trade the contracts ourselves within each other. We could do that, but we got filled for the 110 put on Oracle. So I just want to say shout out to Sahil for giving me the trade idea. That ended up trumping the other ideas that I had. So we got a little bit of long delta in Oracle. We'll keep an eye on managing both of these trades. We are beefing up the portfolio a little bit more here, and by the end of the day, you'll be able to see these on the trade page. But we got more long delta in Micron. We got more long delta in Oracle, and then we also have, unfortunately, we have a little bit long delta in SpaceX at the same time. So this portfolio is leaning to the long side. A lot of these super hyped up names are finding a little bit of a pullback. So the position isn't, oh, we think these things are going to go on an insane run, but these three underlyings have been beaten down over the short term, over the last 2 to 4 weeks, you could put it that way. And we just want to capitalize on the opposite direction, on a little bit of that counter trend trade, I guess you could put it. And when it comes, again, lastly, when it comes down to these counter trend trades, I know we don't like to talk about timing when we're trading, but timing is kind of important when it comes down to these counter trend trades, because one thing we don't want to do, which our parents have taught us, is overstay our welcome. We don't want to overstay our welcome. So it's going to be nice to continue to see some of these catch momentum to the upside, catch a little bit of a bid, but overstaying the welcome is something that we're going to try and do our best to avoid. Again, this could gap down tomorrow, right? Oracle could continue to sell off a little bit lower from where we had gotten the position on. But that's going to be the mentality, not overstaying the welcome, but being able to capitalize on a little bit of that counter trend momentum at the same time. Because like we've seen before, right, markets can continuously head in one direction, but at some point in time, we typically see a little bit of a relief pop, a little bit of a pause in the directionality of the trend that we've seen. So not to say that it's going to reverse course, but you guys get the picture we're trying to paint here. So we'll keep an eye on it. And as we have just a little bit more time here, I just want to quickly go into another trade idea that we were offered earlier today was XLE, right? Decent IV rank, obviously going to be correlated to a lot of these energy products. So something to keep in mind, right? I know we were just looking at USO at the same time. I would love to get on a little bit of long delta in these energy names. But, you know, something that's always been difficult for me was getting on long delta as we've already been trading to the upside, or getting on short delta as we're trading to the downside, or we're trading in the hole. So it's always been difficult to put on the trades at that point. But if we do see some type of pullback in these names, maybe we pull back to 120, maybe we pull back, maybe we pull back to, I don't know, 110, 108, whatever it might be. I am still going to be leaning a little bit long. I am still going to be leaning a little to the long side. So regardless if that's in USO, if that's in XLE, anything to do, especially with the oil names, going to try and get on some long delta. But man, it can be so tough to get long as the market has already continuously been trading in that direction. But no, with that being said, we're going to keep an eye on this. We plotted our volume profile on our oil products just to give us an idea of where most of the trading activity has taken place. And if we just quickly, use these price lines to give you a visual for where those one standard deviations, right? We talk about one standard deviations and bell curves all the time on the Tasty Network, but we don't talk about it too much from a price standpoint. Sometimes we can still take that data, the trading volume, and put that into a bell curve to give us an idea of where the one standard deviation moves are, the two standard deviation moves. So lastly, before we go here, just to give a little bit more context, especially for these oil names, you can see in between 77 and in between 90 on oil, that's the one standard deviation for the trading volume, right? That's for the trading activity that's taking place, the buying and selling, right? A buy and a sell. It doesn't matter if it's all buying. It doesn't matter if it's all selling. Everybody needs a seller and every seller needs a buyer. And that's calculated as volume. But that gives us a better idea, again, for where the market has found these prices a little bit more interesting to do something, right? And we can use something like a volume profile, which gives us a distribution of volume, a distribution of trading activity to show us where people are actually putting their money where their mouth. You know what I'm saying? Like that's in my opinion, one of the best ways to view the volume. It's actual transacted volume in the market. So the volume profile can let us know, where are people actually putting money down? Are people putting money where their mouth is, and what price levels, is that standing at right now? We have the point of control trading at about 83, 88 right now in oil, which is really interesting, right? Because we're just hovering above that price point right now. And the point of control stands for the POC, or the point of control, which lets us know within that distribution of volume, this is the point of control. This is the specific price level where we had the most trading activity within that data set. And when I say that data set, it's everything that's encompassing inside this fixed range volume profile. So we'll keep an eye on this. It's going to be interesting to see if we can trade near our value area high. If we can, and if we have acceptance or we get a little bit of continuation outside of this value area high, we most likely see new highs in oil and we're back in business. I guess it's maybe just a little bit of a pullback that we were waiting on in oil, but like we were talking about with Sahil earlier today, I mean, the sentiment on something like oil can switch at the snap of a finger, right? We're putting in lower lows continuously day by day on oil. And then here we put in the bottom, as we put in the bottom, on this short-term move that we're looking at right now, as we put in the bottom, I mean, we just completely reversed from there. That ended up being the low. And now we're trading at 84, where we were just trading at 66 on oil. So again, with that being said, just because we get to this value area high doesn't mean we're going to have a continued breakout or we're going to get a reversal or a sell-off now from here. All it does is it gives us a little bit more context, for the product that we're actually trading and how market participants are positioning themselves. And lastly, on that point, when it comes down to oil, this one standard deviation or this range that we have marked off is also known as fair value. Fair value being the price range where buyers and sellers, quote unquote, agree on the current range or the current prices. And again, we take that from the trading activity. But no, with that being said, we're going to keep an eye on this oil market. It's interesting. We're back alive. Look, that's what I'm saying. Even with things like Micron or INTC, I'm not going to be mad if these things come back around and make new highs, right? I would love for us to see a little bit of a change of pace, a little bit of a change of behavior, because whenever you don't catch the long side, maybe I'm projecting a little bit. Whenever I don't catch the long side, it's tough for me to pull the trigger to the upside. But we do know the further these expand from a price point standpoint, price point, whenever that happens, the more range, the better. And whatever these names are, because whenever these eventually pull back, they're still going to offer more opportunities for the longs and short side. So I'm not mad at it. But with that being said, guys, as we start to wrap up here, again, lastly, we got on Micron, $5 wide put spread. We got on Oracle. It's not something we do very often, right? It's not very often you're able to find a trade that has a decent amount of buying power, that's not using up too much buying power, but also not a stock that is per se, I guess, too scary to get into. And I guess Oracle, right, my nerves are pretty calm when it comes to Oracle just because it's been so beaten down. Like, yeah, it could gap down tomorrow. Yeah, it could continue to sell off. But the fact that we've already sold off over 100 points from its previous swing high, a little bit more comfortable to sell that put spread, get on some long delta there. So we'll be patient. And then SpaceX going to need to be patient with that. And then, lastly, again, I just gotta pull up Beyond Me lastly before we go here. I just can't believe it. 60-cent stock, 59-cent stock, as it should be. No, I don't mean to get into the skin of any, pro Beyond Meat lovers, but I just can't believe this thing has caught in so much hype, so much volatility. And it's just, it's even it's too cheap of an underlying for me to want to do anything in that. But with that being said, guys, that's going to be the trade idea for the day. We got on Oracle. We sold a naked put. So we'll be managing that together throughout the rest of this week. But we're going to go ahead and toss this over to Mike and get his trade idea for the day. So thanks for taking the time. Let's see what Mike got to say about these trade ideas.
What's up, Tasty Nation? Welcome back. We've got a ton of trade ideas for you today. If you join us in the morning show, we got filled on a bunch as well. But this is actually a trade idea that was derived from Liz. So Liz was saying, one of my favorite things that I like to do, if I have 100 shares of stock, instead of selling a call against it, if we're well below the basis of where I took the stock, I like to protect it with a put ratio spread. And I was like, okay, let me think about that. I love it. And really, it makes a lot of sense. The intention has to be, though, you want to take another 100 shares of stock, or I should say, you're willing to take another 100 shares of stock. You may not know, but a put ratio spread is a really effective way to reduce cost basis in general, because you are ultimately financing the cost of a long put debit spread. Very similar to the Super Bulls or the Super Bears you hear us talking about all the time now. A put ratio spread is no different. You're selling an extra short put to finance the entire cost of a long put debit spread, and that's how the trade can be routed for a credit on entry, and also routed for a credit on exit if you get the timing right and your short puts lose value, your long put gains value. It's kind of this omnidirectional trade, which is another term you might hear. Omnidirectional, meaning the delta can go from positive to negative. You can make money in a myriad of different ways, but I really like the idea of using a put ratio spread to reduce cost basis on 100 shares of stock that I already own. So let's dive in to the platform and we'll look at it right now. We're looking at SLV. SLV is an interesting little beast here. So on this day, January 29th, January 30th, I said, you know what? This implied volatility is so high, I'm going to go ahead and sell a strangle in this thing. And the next day, literally the next day, and I can prove this with the order chains here, January 29th, I sold an 87.210 strangle, and immediately the stock went down from 100 to 68. So that's what you call poor timing, people. Poor timing. But all that to say, I've got this 100 share mark, and this is where I have my short put, basically the entire trade. We can walk through my order chains and give you a holistic view of this entire trade. But I'm going to do just that. I'm going to take Liz's thought process here, and I'm going to reduce my cost basis on SLV or pick up another 80 cents or so and throw on a put ratio spread in SLV. So we saw this big drop. It was crazy. It had a huge implied volatility. I mean, look at this. I had an 87.210 strangle on in January, 50 days to go, and I picked up $860 for an 87 210 strangle in SLV, which has really low implied volatility. So the next day after the drop, of course, my 210 call instantly became worthless because the stock the ETF went from 110 to 60 ish. So rolled it down from 210 to 150, still maintained a really wide strangle. And then a couple of weeks later, it chopped around. In February 18th, so like right here, I rolled my 150 strike down to 87. So I basically went from an 87 210 strangle to an 87 150 strangle, and then down to an 87 straddle. And I haven't really looked back since. I've had an 87 straddle or an inversion ever since that point. So all along the way, started with $8 and change, rolled down for $1.40, rolled down for another $1.40 when I arrived at the straddle. Then I moved the straddle out from March and out to April, and I went from a 87 straddle up to an 87 100 strangle. So that was just rolling into the heightened implied volatility still, and we caught this little bounce here. So we talk about this all the time, rolling into extrinsic value strength. I timed it pretty well here. I rolled on the 23rd, so into this big rally up here and this final green bar. That's when I rolled into that from the straddle into the strangle. Tons of extrinsic value I collected, picked up another $3.60, and then we saw it rise a little bit more. That would have been the best possible day. Hindsight's 2020, but that would have been the best possible day. I was pretty close to it, so we'll take it. Either way, SLV keeps chopping around, and then boom, you see it fall all the way down into the 50 handle. And that's when I was like, okay, I've collected enough so far that I'm just going to roll this back down from an 87 100 strangle back to a 87 97 strangle. So reduced the width a little bit, but look at that. Picked up another $3.40 going from May to June. And then after that, we saw that the market wasn't really doing all that much. So I ended up rolling to a 87 straddle at that point and picked up another 250. And as you can see, I've basically just been rolling this short call and this short put here all together. But started with $8.60 in credit, and I've turned it into $2,300 in credit. So I took 100 shares as SLV continued to drop. Eventually had an inversion, sold a call against it at the 57 strike, and that was $1 credit. And then eventually SLV just dropped out to where it is now. We're finally starting to see a nice little rally here, though. So I've got 100 shares at 87, $2,300 in premium, which means my break even is right around 65. So if I draw another line here at 65, we can see, I've got a long ways to go before I get to my share price. But because I collected so much premium, I've reduced my basis all the way down to 65. But the beauty of a put ratio spread, I believe we have a graphic we can throw up here to show you the strike selection and everything. But the put ratio spread, as you can see, max profit, this white line, max profit at the short strikes. So looking at buying the 53 put 30 days out, selling 2 of the 51 puts, and reducing my basis all the way down to 49, less than 49 actually, because if you look at this risk profile, you've got 53 to 51, that's your long put spread, which means you have $200 of additional protection on top of that credit received. So we're down at like 48.20 would be my break even on the new trade if I'm filled at 80 cents of a credit, which is what I have it working in right now. So really like this type of trade, especially for cost basis reduction, but I'm also picking up 80 cents. It's hard to find 80 cents of premium on the upside without totally capping out my recovery potential on my 100 shares at a basis of 87. So I like this trade. We can also look at the risk profile here on the platform. So I've got 100 shares of stock. If I'm filled on this trade, max profit on this isolated trade is $280 if it expires exactly at 51. But this is really what I'm looking for, because if I do end up taking another 100 shares, my 51 strike short put would be hit. So I'd have another 100 shares at 51 on top of my existing shares at 87. If you add those up, real quick math, we're talking 138. Then you divide 138 by 2, and you've got a basis of around 67, 68. So ultimately, I'd bring my cost basis down looking at this chart, kind of right between this range, right? So we've had 100 shares at 87. I would get another 100 shares with a basis of like 67, 68, but that's where my break even already is. So if I were to achieve this, I'd have 200 shares at a basis of around this level, 67, 68, and I can continue to sell premium against 200 shares now. So it just creates an opportunity for me to sell more premium against another 100 shares. SLV is a $50 stock. I can afford another 100 shares. That's the beauty of trading small. You can get your cost basis down in a number of different ways. And ultimately, that's the plan here. So we're seeing a 4% rally in silver today. If we look at the watch list here, we can see on the futures, that's actually one of the leaders to the upside. It is the leader in the CME futures watch list, silver here. So SLV going to move in a similar way. I like the way that we're seeing this bounce today. And if we are to believe that this is going to continue, I'm still going to collect that 80 cents in the middle here, anywhere out of the money to the upside. But again, if we get that downside move, I can pick up another $200 with this vertical spread, which brings my basis all the way down to 48.20. So yeah, that is my trade for this day here. And I think there's a number of different ways you can do it. But again, just looking at the table view here in August, I could sell a call, and I fully thought I was going to sell a call into this rally. I think you still could if you wanted to be more simplistic with this sort of strategy. If you look at the net change today, this option is trading for the 57.58 right at the expected move in August, trading for about $1, $1.25, depending on where you look. But these options have essentially doubled in price from yesterday, and that's to be expected with a 4% rally in something like silver that still doesn't have that much implied volatility. We're seeing a 2-point rally today to the upside. The next 30 days have a $5 implied move here. So lots to consider. But again, I already have 100 shares. I'm totally comfortable taking another 100 shares. And if I do get hit with another 100 shares, it's going to dramatically reduce that cost basis reduction. So looking at SLV, I think it's a nice, efficient use of capital too. If you just look at a brand new short put or a brand new strangle, if you were to throw on something new, if you're looking for maybe a perpetual premium, short premium trade in something like SLV, you're putting up $600 in buying power. You're picking up $200 in this example that I just threw on in August. 30 days is a pretty short time frame, and a $600 buying power reduction for a $200 credit is a really high return on capital. I like to look at anything that's 20% or more. So $600 in buying power, I'm looking for $1.20 or more. This certainly exceeds that at $2, which means it's an efficient use of capital. I like to avoid the trades where you're putting up $600 and you're collecting like 50 cents. I think it's just a tough use of capital. You have a lot of risk. You don't have a lot of profit potential. I'd rather just go defined risk if that is the case. But in SLV right now, we're getting a nice little pickup in implied volatility here into this rally. We've got an IV of 47%, so still plenty of premium to sell here. And you can see across the board in all of these expirations, we're above 40% for the most part. So lots to consider, lots to think about, but I think this is an intelligent way to reduce cost basis. This is the longest winded way of saying, Liz, I agree with you. I like the short put ratio in a further cost basis reduction against 100 shares that you already own. You keep that premium. You have no cap on the upside. But that's really the case here. If I am going to take another 100 shares, then I will go to two short calls against the 200 shares. And it's going to be nice, right? Because then I can pick up $300 instead of $1 for these strikes. And I always have the ability to roll up and out. And I think that is one of the most powerful things that you can do for covered call situations. Like if you have 100 shares of stock and you sell a call against it, let's say you're trying to pick up this $1.50, which is great, reduces your cost basis. But if SLV rallies up to 58 or 56, I don't have to stop there. There's nothing that says I need to stop there. And that's really the light bulb moment that I think has hopefully permeated through the Tastylive audience, but really for me too, is like, I don't need to let the delta control me. I can still control the delta with undefined risk. That's what we've been doing with our year-long trades in ES, in MNQ. If the market rips up and touches the short call, I'm not under hedging. I'm just shifting the whole thing up. And it's been a really great trade because we haven't been caught on these upside moves that we're seeing today. in this low VIX environment where I expect the market to go higher with some chop here and there. But until the volatility environment changes, I'm still going to continue to play for some more upside moves. But getting back to this SLV trade and how you can manipulate it, if you have a $1.50 debit, all you have to do to offensively roll this covered call, if you had 100 shares, is buy it back for $1.50 and go out to any of these expirations like September or October. I would still stick with September if I can help it, but you can move it up. So I could go from a 56 short call in August to a 60 short call in September and pay 3 cents or collect a credit if I want to, move it to the 59, pick up 20 cents. This still reduces my cost basis, not by way of credit received, but really in terms of max profit, it increases my max profit because I'm moving it from 56 to 59, but I'm not paying anything to do that. I'm still reducing cost basis a tiny bit, but this is, again, more of an offensive role when you get tested. And another good example is like, let's say you're in August right now and into this rally, you already sold a 53 strike and you're like, wow, maybe silver can continue higher. Same story applies. You can buy it back in August for $2.75 or whatever the debit is, go out to September and look at a strike that is offering you $2.75 or around there. So just looking at 55.5, or maybe it's the 55. You can move it up and out 2 points, pick up another 20 cents, give yourself another $200 of max profit potential. But again, these trades, you don't need to stay in the cycle. Let's say you're super bullish. You can move this out to December if you really wanted to. This is still going to move on Delta. If you get a downside move in silver, these options are still going to reduce in value. You can see it here, 60 cents today, 50 cents today on this 4% rally. So let's say you want it to be super bullish here. You buy it back in August. You turn it into a long-term trade. You go to the 65 strike or the 64 strike out in December. You've totally shifted your extrinsic value from at the money to far out of the money at the expected move. And you've given yourself another $1,100 of profit potential in silver. So you can manipulate these things however you like, but that's the trade of the day. Silver put ratio spread. I haven't been filled yet, but I'll be filled sometime today, around 80 cents, the 53.51 in the August cycle to reduce cost basis on my shares. But with that, I'm going to pass it over to Jermal for the next trade idea of the day.
Tasty fam, hit the like button if you're liking this stuff that we're doing here with Trades of the Day. Also, give me a like button just for me, just in case there's some people out there who remember engineering the trade. Just, you know what I'm saying? Like, just give it a like. But we're super excited to be here giving you trade ideas. This is things that we're doing all day long anyway. And we're here. So I was racking my brain, this morning. What could I do? What do I want to trade? Is it a semi? Is it an ETF? Is it, something in the consumer staple space and get some exposure on there? And then I realized I'm just going to kind of go back to the well of something I was trading not too long ago, and it's oil. So recently I had on some oil trades, and I basically, as I initially did 2 trades. I did one trade in MCL and I would trade in CL. And the CL trade was the one where it was just a long call spread, and then I had a ratio spread to the upside in MCL. Look, recently we've seen this move. It started last week from like about 72 to 80 and change in oil. There's been a discussion again. All of a sudden, we're talking about the Strait of Hormuz. We're talking about what's going on in Iran. And you can see all of a sudden there's been a price move in oil. And so you want to try to find ways to take advantage of it. Initially, I did it as a result of the move and probably was expecting about maybe a measured move towards 90. But I got the profit that I wanted and I got out of the trade. And then I decided once again, the volatility actually picked up in CL and MCL. And I decided I wanted to do the trade. So when we look at the platform, MCL is obviously the easiest way to go about this. I mean, sure, we can go to CL. And first of all, obviously, we look at the chart here and going back to the beginning of the month, it would seem as though right around the day, like about a day after the 4th of July, essentially, once that trading calmed down, we started to see this move as we came back to trading the week after. And it's just been a steady climb since then from about 72 and change here, basically around 70 to where we are now at 84. And we all know that CL is the big boy contract. And so I wanted to go to MCL. And this was actually one of the trades that I went back that I did earlier in the year. I did a strangle for here. I did a strangle in here, and it worked out really well because volatility just absolutely collapsed after the things changed, the regime change over there in Iran. There was just like a pullback in the price. And remember, volatility was in the 80s and 90s for a while there, and it really calmed down. Of course, this trade doesn't work, what I'm about to do, if we start to go back to that type of regime. But I think in the meantime, I think you're seeing a lot calmer price move in oil than we did a while ago, right? And so this is not something I want on for super long. I initially analyzed looking at maybe doing September just to get a higher volume. I wanted, higher amount of premium from these options. And so I was going, I looked initially at September. And again, the other thing you always have to remember with oil is the different contracts, right? So right now, the front month contract is U cycle, right? Which signifies September for those who don't know. As far as futures go, U is September, V is October, X is November, Z is December. Why is it like that? Nobody knows. There's a weird nomenclature to it. But when you see futures, a lot of times right now we're looking at the MCL U6, right? That's trading $84.43. The September contract is, I should say the September options are being settled to the V contract, and that's trading $82.26. This has $2 of what we call backwardation, meaning the front month future is trading over the next month future. And you usually see this in situations of a lot of demand for the current commodity. In this case, there's more of a demand for oil right now, right? Because of what's going on with the price, and it's moving a lot higher in a very fast way. And that's something that you typically see in futures. And then it's always interesting just to look across the curve. We talk about this a lot here at Tastylive, but just want to make sure those who don't see this too often kind of understand. And I'm trying to be better about thinking about those who are probably new to the space and might not necessarily fully understand all these things. You'll see this in futures from time to time. This is, again, the backwardation that we're seeing. So, for example, looking at volatility futures, and we look at the VIX, and this is something we also see quite often. Now, we don't have the futures listed here, but I do have them on the side of my panel here. You can see the front month VIX future. Q is signifying August future. So that's August VIX future. That's trading $18.40. We actually, today is the last day for the VIX options in September. These are, and this is where it gets a little confusing, but these VIX options in the July, in the end contract July, these actually stop trading today. And then tomorrow, the VIX July contract will expire, right? And so that's the July right now. That's trading $17. The Q, August, trading $18.40. September, U, trading $19.40. We call that contango because the front month is lower than the months after it. And so to go back to oil, you're seeing a backwardation situation. This is usually what happens when something is beginning to get a little bit volatile, right? And that's what we are seeing mostly in oil right now. We're seeing $84.40 for the September contract. I know it says August options, but you always got to look at the future that it's settling to. And if you can see in that small print there, it says /CLU6, which is the front contract. And so 84.40, 82.20, on down the list, you can see it starts to calm down, meaning gets lower prices as we go further out, because it's not sure that this current conflict is going to last that long. Who knows if that really ends up happening? That all depends on the rhetoric that we hear, but that's kind of one way to think about it. So back to the trade here. Like I said, I initially looked at September, but I don't know, again, how long this is going to last. I don't know how much rhetoric is going to happen. Day in and day out, we come in and we hear a little bit more different stuff. Not as much as we did 3-4 months ago, but still, it's a ever evolving situation. So as a result, I don't want to go too far out. And again, you can just adjust this any given time. You can go to all expirations, or which matters more in the big CL contract, or you can just go to regular expirations. Sometimes that weeds out the weekly contracts. So I decided I just want to stay in the 27-day cycle. Now, we've done a lot of research right here at Tasty, as a lot of you probably know, that shows that volatility declines most quickly in the 45-day cycle. And we usually try to close those positions or roll out in 21 days. Why? Because as you get closer and closer to expiration, everything ratchets up, whether it's gamma, whether it's Vega, not Vega, sorry, that becomes more of a gamma, but a delta can probably get a little bit higher and ratchet up. And so things start to move a lot more quickly as you get closer and closer to expiration. That's why a lot of times the 21 days were out. But if there were a 30 or 40-day cycle, I would rather to be in that. But I just don't want to be in this 58-day cycle. That's a little bit too long for me right now. So I'm going to go in the August cycle, and I'm going to sell a strangle here. We're going to go to this 20 delta option, this 75. I feel reasonably good that if oil starts to come back, again, we just came back from where it was down to 69.70. We could return to that. I think it would be a lot slower. I think I have a chance to withstand that move down if it were to happen within this tight cycle here. And again, I don't expect to have this trade on much longer than maybe 15 days. We'll see. So selling that 75 put there, that's about maybe 10% out of the money, a little bit more, I think, $8.04. Yeah, it's a little more than 10% out of the money, but that sounds good to me. And then I'm going to go to the upside. I'm going to go, this is where I was deliberating how far to go. And again, the interesting thing about oil, as you will see, and just to show you this, let's check it real quick. Let's look at skew. Let's look at $10 out of the money. Let's look at the 74, which is essentially where we were. I always like to check skew just a little bit and like sell the put, see what that's like. $10 out of the money. And then let's go to the 94. And I like to buy that. And you can see because there's a 143 debit, that means the call is trading over the put, right? So not surprising there, especially with oil moving to the upside. Oil tends to crash up, right? And so as a result, that's why you'll see a lot of skew to the upside in oil. So, but what I'm going to do is go $10 in either direction. So I'm going to sell the 95 and I'm going to sell the 75 put. Total premium of $4.17 here. $900 and $926 in buying power that we're using. And, when you look at this trade, let's do a little analysis on this thing going to the curve. And we'll see, like right now, this stock being here, obviously if it moves around quite a bit, this is not really a loser. You can see your P&L expiration, you can see P&L Theo. But let's just, let's see what it looks like. One, you should always take things to extreme and see what it looks like at an expiration, right? So on the 17th, obviously, if nothing were to happen, right, and we were to continue to move around a little bit, but never really get out of the range, obviously at expiration, I'd make the total amount if it stays within that 75 and 95 sort of bracket there, right? But, that's probably this thing not moving over the next 27 days, me holding this expiration, those things, neither one of those things are probably going to happen. So it's better to just sort of get an idea of going back to today. And, you can see your expiration graph right here just to give you an idea. Right now, this quarter tells you if things were to move around a lot, I could expect this. I could, say we were to get back down to 70, right? Probably looking at a loss, probably a Theo loss of around $400 just from volatility alone. It depends on what time frame in which that happens. And then P&L expiration at 70, you can see, let's go to 70 just to get an idea, because that's where we came from, about down $72, right? And if we go to the upside, say all of a sudden oil jumps and it gets back up to 100, right? And makes a big move. Even within that, my expiration P&L is about 100. But if it were to do that in the meantime, between time, I'm going to lose a lot more volatility value. And you can see I could possibly be down somewhat to $600. Now, let's just say oil stays somewhere between this 75 and 95 range. And let's just say, what I said, 15 days here. So let's go to the 4th, right? Say I'm around here. We could possibly make about half of our money here just from oil sort of chopping around this range, if you will, and not necessarily exceeding any price too high, especially going above 95. So that's kind of my hope here. That's kind of my idea. I'm going to take this down to even a 415. Well, will it fill me at 417? I don't think so. And this thing trades in pennies, right? Let's double check. Hold on, cancel. Let's go back to the table here and see. Yeah, it does trade in pennies. Maybe it'll fill me at 417. Okay, no, it doesn't. So we'll step down a little bit just to get filled on this trade. I'm only giving you a penny trade. I'm not giving you much more. Oh, God, it wants to be difficult. All right, I'm stepping down to 415. This is as low as I'll go. And I typically don't step down too often. Sometimes you got to let the trade come to you. I kind of figured 415 would possibly be the number where it would get me at anyway. Yeah, now we're cooking with gas here, guys. And so this is the trade that we decided to do in oil. Right now, volatility is in this contract is 66, as you can see. Let me just get rid of all this stuff in the analysis tab. But let's look at implied vol here. Implied vol is in the 50s right now, right? And a little bit higher on the upside, as you can see. That's why the amalgamated number is 66. But you can see on the upside, 67, 68, like we just said, skew is higher. That's your other indicator for how skew is trading in oil right now. And so I like selling a 66 vol. I like doing it in 27-day cycle. Again, I could probably hold this trade for maybe 15 days or so, and then eventually move on. Just to give you an idea of what that looks like in CL, just to show you why we're choosing MCL as opposed to CL. Let's similar trade here. I mean, this is a big boy contract here, folks. And so that's why we're, again, 10 times bigger, $9,000 of premium, $9,000 of buying power for $400 in premium. That risk reward is just not worth it to me. I would rather do something in MCL because it's just a smaller contract. It makes it a whole lot easier, a whole lot more digestible too. I could also say, and this probably won't happen for me, but let's just say you're a little bit worried about oil eventually making a big move here, right? You could also buy, the contract to protect yourself. For the most part, that short put's going to give you some long delta, minute amount. But let's just say you're a little bit worried about the move in oil and it's possibly going higher. You can easily buy one of these contracts, right? They're not that expensive from the standpoint of depending on the size of your book, right? If you're trading somewhere between $25,000 and $50,000 book, buying this one contract for $1,500 is not too bad. It can protect you a little bit, make you feel better, make you sleep better at night if you want. But that's the thing I like about trading this MCL. It's pretty nice. And again, it's very liquid too, despite the fact that it didn't fill me at 417. It filled me 2 cents lower, but it is a pretty liquid contract. And so that is the trade of the day. Now we're going to go to a special guest here in Mr. Brent Kochuba from Spot Gamma and have him come on and discuss his trade of the day. Brent Kochuba from Spot Gamma. How you doing, man?
I'm doing wonderful. How you doing?
Good to see you, my friend. I'm doing wonderful, man. Everything's pretty good here. We just had a huge bout of heat, but things are chilling out now. Speaking of heat, I'm sure you're about to bring the heat.
Yeah, I happen to be at the Money Show in Las Vegas. It's 99 degrees outside, so that's hot.
Yikes.
I got a little bit of weird background today, too, but I did push a trade of the day. I got one here.
What you got?
Queued up for you. I'm looking, and I put it in the chat here. The semi-trade is a popular one right now, and obviously there's a whole bunch of wacky things happening in the volatility market when you look at tech volatility versus index, like S&P index volatility. And what the interesting thing about the AI environment right now is that it's changing so fast, as we all know. 1 minute, the memory stocks are the best thing ever. The next minute, you got, the Kospi selling off 30% and whatever else. So it's a very dynamic situation, I will say.
Yeah.
And as someone who's fairly tech savvy, I can't make heads or tails of, what the next step is going to be and whether I need to be in, GPUs or memory or all of it or how you trade it, right?
Yep.
So what has happened now, though, is the vol has lifted a lot. And we used to be in this very call skew dominated position in the memory names, if you look at like DRAM or if you look at the semi space. And now what's happened, so we had extremely rich implied vol, rich call skew. Now we've slid across sort of a matrix, and now we have rich implied vol, but we have a put skew. And that is because obviously a lot of these names have been traded down. And so the way that I look at this is I think that what you've had over the last, call it 2 weeks with like, I'll just use DRAM or EWI as a barometer. It's down about 30%, roughly 25, 30% into yesterday. I think it's up quite a bit today and bouncing back some. But the vol is still very elevated. And that is the thing that I'm trying to isolate and kind of attack, so to speak. This may be a little bit aggressive term for the compliance part, but let's just say I want to trade that. So, sorry, compliance.
But you're right, though. Just to point out real quick, this volatility, looking at the implied volatility on the downside, it's in the hundreds. And you're right. And it's in DRAM anyway. And it's 97 on the upside in DRAM.
Yeah, absolutely. And so there's a couple of different flavors to where you want to trade this, right? And I think if you feel like you have a little bit of edge looking at a Micron or a SanDisk or a specific company. You could put the same trade on one of those names. You could go to DRAM, the trade I'm about to talk about, because that's fairly elevated. I've also been looking at EWY as well as SKHY. That's the new ADR, obviously. And so the trade I proposed here today is based on SKHY, but to be honest with you, you want to put this on an EWY or DRAM, I think it will work all right as well.
Okay.
I think with SanDisk and Micron, it does take a lot more margin to do something like this. So I sort of steer clear for this type of an audience where it's like, I'll back off a little on this. So the way that I was looking at this and the trade that I had on for the last few days here, and I added a little bit to it this morning. I did just get off a plane recently, so I haven't been able to check the numbers on this. But I did add to a little bit on a plane. It's probably not a good place to trade, but I did add a little bit when I was looking at these trades. I put on January put ratio trades. So
this is
my logic here.
SK Hynix?
Yes, yes, sir. Yep. I don't know if you can see the chat there too, but basically what I did is I sold.
Please tell me.
Yep. I bought the 125 puts and I sold the 100s.
Okay.
And I did that for a credit of about $4 is what I was able to get that off for earlier. I think it's still trading around there when I kind of glanced quickly.
So you bought one of the 125s and sold two of the 100s.
That's right. Yeah, and you should be able to do that for about a $4 credit.
That's $335 right now.
Yeah, and that's obviously bounced a little bit here today. Now, this trade, you could tweak the legs to it a little bit. And the reason I like this trade is because my target here, again, is the volatility component. I want a short vol. And the put skew, if you look at some of our data, I know to show at Spot Gamma, the put skew is registering as quite high right now, right? So if you look at the put wing, I'm trying to get myself in the frame here, it's very steep.
Yep.
And so I want to sell two options at that steep skew point, right? And so that's why I'm selling those two 100 strike options and I'm buying that 125. I think roughly SK Hynix, which is already down a lot, these DRAM names are already down a lot. I don't know. I'm not a fundamental analyst, obviously, so I don't know what the bottom is in here, but I'm thinking down around 125, we're probably pretty safe. But the reason that I went out in January for this is that I wanted to give a little bit of time because, sometimes it could be a little early. Vol could go a little bit higher here. But this trade has a negative gamma profile. It is roughly delta neutral. It's kind of flattish. There's a little bit of negative gamma in there. So if we do have another big drop down and vol does spike a little bit, the trade will go against me a little. But giving myself to January, number one, gave me a little bit more Vega. It also, if the stock rallies, that vol comes in a little bit. That'll profit. It'll generate a little bit of positive PN on here. But the other thing that's interesting to me about this from a risk perspective is if the name or the sector continues to slide lower, and as time passes, obviously January is quite a ways from now, but as time passes, that 125 put, right, if it's near the money, it will pick up in gamma. And so eventually this structure could turn into a positive gamma trade for me if we have a sort of sustained bearish move lower, right? And we kind of continue just to grind down in this space, for example. And so again, the goal here is to be short Vega and hopefully vol comes in. That's what my view is here. If we get a little bit of a rally, a little bit of recovery, things kind of playing out a little bit in the volatility space here, this trade should do well. It's on for a net credit. If I'm wrong and the name kind of grinds lower, if I give it some time here, then I think the positive P&L could pick up. Again, if vol just simply comes in because I did it for a credit. The other thing about this trade is you could add another, you could turn it into a broken wing fly if you want, right? So that's certainly an option if you wanted to hedge that out a little bit more. You could change the time frame a little more as well. So if you wanted to move it a little bit closer in time to maybe September, slide the strikes up a little bit or widen them out. You could change the profile pretty simply here based on exactly kind of what your view is. So at any rate, that's my trade of the day. Like I said, I have done a couple of these. I have a few of these on already. I have played a little bit with different time frames going out in time and near term. I've also been doing some of these similar trades in DRAM as well for full disclosure and rolling those and kind of moving those around a bit. So that's my idea of the day. I think it's a little bit of a unique view, probably a little bit something different than, well, I know you and your audience like to talk about this a lot, but you're probably not likely to hear something like this on CNBC, for example.
No doubt. None of that. You definitely won't hear it on CNBC. Are you kidding me right now? No way. You and I both know that. Good point, though, about the broken wing butterfly, because, I mean, just messing around here, I mean, if I just added the 55 and I did that because it's the closest strike that I could find where you could still get a credit, you get a 60-cent credit on that. That's one way to play it for those who might be scared off, say, from a $9,000 buying power. You could also, like Brent said, you could do this as a broken wing butterfly. You can also do it, like you said, in DRAM as well. I mean, these names are all kind of similar. So, yeah, good call, man. I like it.
here's the problem, I would say, Jermal, with adding that extra put. I mean, in this case, it's defined risk because it could go to zero, right? I mean, I don't think that this is possible that it goes to zero. I don't really know, but they're making money last I checked, and there's a lot of compute demand, right? So it's like, okay, but Enron or something could always come. But the problem with adding that broken wing option, the downside is it's expensive, right? When I say that skew is rich, right, you're just going to go down there and you're going to buy an option which has an even higher implied vol, as you can see there, right? And so in this case, I think if you are worried about the risk, just slide the entire structure down and still try to get maybe a 1x2 that can give you a credit, knowing that you have zero as a lower bound. It would be different in the case, and I wouldn't suggest one of these trades if you remember when vol was going up as these stocks were ripping into April and May, because you have unlimited risk, right? Those stocks are going up 20% a day, and there is no upside number that is as a risk level. So I would do a broken wing call fly, but in this case, what the lower bound is, right? It's zero, and so you can kind of manage your risk in that way. But I don't like, and I did present it as buying that broken wing because I just don't want to buy that more expensive, super expensive 50 strike option. Where if the vol collapses, that 50 strike option is going to be the first one to lose most of its value, right? And that dings the structure.
I'm 100% with you. If I'm going to do the trade, I would just rather do it, outright and just do the ratio as opposed to like buying this little thing down here. But I know some people are a little, warded off a little bit because of buying power, whatever, right? But again, like you said, this trade might not be for everybody. There's the similar trade, and you can do it in similar products. I mean, again, this is another one. You got any specific strikes in here? You want me to pick some?
Yeah, so actually in DRAM, what I was doing a bit more of, I was looking at just selling naked puts myself. So I was selling a lot of the 40 strike puts. I was going also into December, for example, some of the things I was doing. And the advantage
I'm with you. I'm doing the same thing.
Yeah, and in DRAM, because it's an ETF, the chances of that going to zero, because it's a basket, albeit not a big basket of stocks, but it's a basket of stocks, the odds of that going to zero is quite a bit different from a single stock or a single name going to zero, right? So there's maybe a little bit more risk in that, but again, the lower bound is zero, so I can manage my risk appropriately in that fashion. And again, the goal here is to target the volatility and betting that ball comes in, as opposed to betting that there's going to be a huge spike higher in these names, which you'd want to structure kind of differently. So if you kind of get this chop, if the memory names just sort of plane out a little bit here, cool off, and even if earnings are solid, or as earnings come off, the vol should come off in these names, right? As we get some more tech earnings coming in, that may help this structure as well. So I think there's a lot of interesting ways that you can play with these strikes, move it around based on your risk profile, keep that 1x2 structure, but slide the wings out, slide the wings down. You could do a whole bunch of interesting things here.
Are you in a similar time frame in DRAM, like January or closer in with your short puts?
I went a little bit closer in and a little bit of a higher strike in this case. So I was selling some of those September 18s in particular there. I was selling some of the 40 strikes in there, and I think they're pretty meaty. The IV rank, we have it as over 90. The put skew rank is over 90 as well, based on where we were at last night's close. And so to me, statistically, that is quite elevated, right? And so I'm playing with a little bit of that. I think in what I've found with my experience here, Jermal, and you probably the same thing, is it's hard to pick the exact right month and the exact right strike. So and rather than build one big single position, I kind of move things around a little bit based on kind of what I'm seeing out there. So kind of like you have multiple positions, I won't concentrate too much in one expiration. And I've learned this the hard way too, where sometimes you could have doing these drawdowns that are a little more sustained than you think, right? And so you don't want to kind of necessarily put your eggs in one basket in that case. But sort of the most risky position, I guess, I would have in this short ball space is that September roughly 40 strike puts is something I've been playing with, and it's been working out. I haven't really been holding them long term. When market rallies, you get a 10% rally today. I've kind of been rolling out of those, and it's been choppy, so you can get in and out, and that's been pretty profitable thus far, and hopefully that keeps going. But that chart looks pretty good right there.
Yeah, right. And I think it's a great idea, and I think it's a great point. I mean, I think you and again, this because you talk to plenty of audiences, especially ours, active traders. There's things moving around a lot. I mean, again, we got a big day in a lot of these chips. There's been that rotation we've seen in the market, whether it's between chips or the consumer staple stuff for certain days. Even within tech, we've seen the software falling down while chips are up, and vice versa. And so I think the ability to move in and out, on a day like today, I think it's the best thing. It's going to work well.
Yeah, and in this case, when you sell the puts like in DRAM, and the stock pops 10%, that's a positive delta trade, right? When you're short those puts, as opposed to the 1x2 structure, which is a little bit more of a vol trade. So, if you get the 10% pop, all right, great. I'll roll some of that off and look for another opportunity elsewhere. So a lot of possibilities now with these high vol environments, a lot of fun to trade.
Absolutely. Well, great trade with SK Hynix, man, and stay cool out there in Vegas.
Thanks so much, Jermal. Fun seeing you again, man.
Good seeing you, man. Brent Kochuba from Spot Gamma. Thanks for watching the Tastylive, folks. That's our trades of the day. We'll see you around. Watch and subscribe to all content on Tastylive. I'm Jermal Chandler. See ya.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
So you're an active trader looking to increase your return, decrease your risk, or quite possibly both. Sure, you've heard of the Greeks. Your deltas, your thetas, your vegas, your charms, your vamas, etc. And you're wondering, hey, how do I use these guys to improve my risk-return relationship? Well, join me for a 10-episode crash course, and I'll show you exactly how to do it with all the gimmies and gotchas, one Greek at a time. We'll see you there.
Tastytrade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tastytrade today.
So why are we all doing all the things that we do inside of the active trading space? Simple. To make money and generate returns. Well, inside of the Tasty universe, there are essentially 5 keys to making those returns. And in this crash course, we're going to break down all the details of each one of those keys. So I'll see you inside.
It's time to trade smart, post PDT rule elimination. Now, traders of all account sizes have more flexibility than ever before. With rapid order entry and bracket orders that let traders manage entry, profit target, and stop loss, all in one ticket. Tastytrade.
We built Tastytrade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tastytrade.
We're back. You're watching Tastylive. This is Futures Power Half Hour, sponsored by CME Group. I'm your host, Chris Vecchio. Ilya Spivak joining us in about 10 or 15 minutes' time. Interesting day today in these markets. Nice little rebound here, led by your tech stocks. Your semiconductors are surging once more. There's really nothing else to say besides that, so we can go to the chart here. We can take a look right at what's going on with our SMH, up now 4.76% here, 585.45 on the screen. Direct knock-on effect for your NASDAQ, which is seeing gains across the board, back through its 50-day, 29,348.5. That's a 570-point gain. Russell 2000, not to be left behind, is your second best performer, up 1.18%, 29.90 here as well. And volatility coming in over the course of the session is the hallmark of the day. VIX is back testing the 17, almost a 16 handle by now. 1706 here on the chart, right near session lows. Same goes for your volatility futures, which are coming in, 1845. They're just about 15 cents off the session lows here. But we're going to keep it with equities for a little bit before Ilya joins us, because there's a whole lot of things going on right now. I have some book trimming to do and some positions to look over. Importantly, something that I put on with Liz recently in ASML. Liz and I took a similar approach to this market, but for different rationale. This being one of your, semi-cap stocks, a company that makes the equipment for the semiconductor makers. In any event, we have a little 4.5% bounce here today. What we do see here is, that 50-day moving average holding. So she got the bounce immediately after the earnings report. I've stuck with it a little bit longer. It's working so far. Sitting at that short strike, 31 days to expiration. The short strike is now 1680. There's a lot of room to run here. So yes, the position could be monetized. It could be taken off today, but there's still some breathing room before we get to about 50% probability of profit. So finally doing what it should be doing, in my view, which is finding support where it should be. So ASML is working. It's one of the many tech stocks that would say is working in today's session. What else do we have going on here that's related to tech? Yeah, there's an Amazon position that we have on related to a double, we'll call it the Super Bowl right now, given the break above 250, short put spread, long call spread, using this pivot, this bullish engulfing bar from July 9th as a reference low right now. Not exactly working out the way that one would hope, but broadly speaking, it's a market that's up today. So the exposure that I have sitting in M&Q, what we're doing in the triple Qs right now, it is tentatively still hanging in there, which yesterday was looking a little bit worse for the wear. 50-day moving average seems to be important, at least from my view, because that's the level that I'm tethered around. I'm curious what Ilya thinks here, because he's finally on, and he's now here to join us. Ilya Spivak, welcome. Sure. You and I are going to chop this up for the next 25 minutes. Yesterday and Friday, you were probably feeling a little bit better about stocks. Obviously, it's not a huge rebound.
I don't feel bad about them today.
I'd say you probably don't feel bad because your short call spreads are nested around the recent all-time highs, and this is a 2% move off of a multi-month low. So first things first, is this a reasonable low to look at right now? I'm seeing chart patterns that I find appealing across the screen before we get into them.
I don't think there's any reason to think that this is anything other than a retest of the underside of the range that we broke last week. There's no confirmation of anything other than that. In the NASDAQ, it is much more dramatic than it is in the S&P, which is quite telling. The essence of the sell-off has been in tech and in the distribution around the trade that's been driving this thing, and it's been semis. And the meltdown in Korea is looking increasingly like a sort of precursor to what we're watching here. This, to me, looks like a mulligan to get short.
A mulligan to get short in the NASDAQ and the S&P. The S&P here looking a little bit better. I'm still nursing this.
It is looking a little bit better.
We didn't quite get below the 50 the past 3 sessions, which is my stop out point for my trade here, Ilya. But having top tick this on July 6th, very fortunate to top tick that. I still find myself wringing my hands. But, I'm looking at these charts here right now, and we can stick with MES business, show you the same thing as ES. 1, 2, 3. That's looking a little bit like a Morningstar candlestick pattern. And it's bringing you today in ES, at least, you're getting that against your 50-day, where you're also getting a pushback above the 1 week and the 1 month. Last time that we saw something like this, we can go here on our 50-day, which did produce a swing low to work off of, not like a push into new highs, but it was a swing low. And just for good measure, when we've seen a meaningful candlestick pattern form against the 50, here's a bullish engulfing bar or key reversal, it didn't initially provide support. So sequentially right now, Ilya, if I'm just being purely agnostic to the chart pattern, Morningstar candlestick cluster against your 50-day moving average that pulls you through your 1 week and 1 month. It's one of the reasons why I have no reason to adjust my stock long exposure right now. A lot of it's doing much better today. But when I'm looking at how the indexes are shaping up here, both in ES and then in NQ, very type of similar setup here, it does give me at least some confidence that maybe the market is trying to find some footing. And the short put spread stuff can continue to work just like your short call spread stuff can.
Yeah, basically, I'd agree with all of that. I would only caution, if we go back to ES for a second, I think this is an interesting point. So we have these candlestick patterns, and you can go back to the MES chart where you had those candlestick patterns there, because I think this is an important consideration, right? So you and I have been talking for the better part of, almost 2 decades now about what you'd call a bullish reversal candlestick pattern.
18 years as of May.
Right? So you and I have been debating this for a while. And your point is well taken. The essence of the candlestick pattern is to give you a sense of what the price action is doing, right? It doesn't matter what the candlestick is called. It doesn't matter what the rules are. All that's whatever. What matters is that there's these patterns that give you a sense of the market's underlying mood as reflected in the price action itself, which is the purest of all indicators you could possibly imagine. Okay. Typically, these patterns have a constraint on them that I'm always harping on in the most pedantic fashion possible, that they occur at the tops and bottoms of trends because what they are trend reversal signals. It's an interesting thing you see in this structure here. It's not that they don't work. They do. But what they don't have is a trend reversal component. Look at the morning star before this most recent one, it peters out. Look at the bullish engulfing before the morning star, it peters out.
Certainly an exhausted market.
These are not the kind of patterns. And by the way, again, it's not that they don't work. You can see them work in front of you. But they're only good for a day or two, maybe a few days, maybe a meander into the top of the range. What they don't give you is that thing that they're supposed to show you when they appear in their sort of intended primordial way, where you see them appear at the bottom of a long down move.
Sure.
And then you go, whoa, change of sentiment. So, yes, the
and you saw, by the way, that was
right there,
the March low.
Right
is that
there.
Is that exact?
Perfect. Perfect. So when you look at something like that and you go, wait a minute, this is different. And when that occurs and you confirm it on a break, I mean, we can see the kind of rally that follows.
Oh, for sure.
So
that was a beautiful rally.
Right.
One for the ages. One of the best rallies we've ever had, in fact.
Right. And we're not cherry picking. Sometimes these things don't work, but that's just a really good example. When you look at these most recent patterns, because they occur at the bottom of a range after a long rally, they don't have the same sort of dramatic implication. And so maybe you get a meander
there is an
into
implication.
the top of the range.
There are implications, though, right? Maybe they're not explosive implications.
We can see them. We can
but
see
the implications, if they were to follow, is today a good day to get short again? Probably not, because when we've seen this type of bottoming effort around the 50-day, the market usually has continued to bounce, which, tomorrow maybe we get a little bit more rally, but then you get to the alphabet of the Tesla earnings, which after hours could circuit the whole thing. So there's your 1 or 2 day bounce.
Right.
And then, right, you give it right back. But that does beg the question, given what we're seeing here, Ilya, we're now moving off of lows, right? Is it better to short the market, 5% away from its 50-day moving average, or after it's pulled back 5% into its 50-day moving average?
Well, here's an interesting point on that score. Let's zoom in to a 4-hour chart. So where are we here? Look at the underside of where we're testing.
Let me just clean this up a second real quick.
Yeah.
Lots of noise here. All right.
Because I think that's an important consideration here. So look at the most recent downswing, then we break it, and now we're retesting it. Right there. Yeah. Right there. So
somewhere in this zone.
Somewhere in there, yeah. So you look at this and you go, right, okay. Barring the chop that you'd normally get on a 4-hour, 8-hour, right? This is not a daily chart. There's going to be a little bit of fuzz. But you're right at the underside of where you were testing before. In fact, you're not even clearing the high of the last test. And so you go, right, is this a place where I'm going to look for a long side position? Maybe not a short side. I don't necessarily think that you have the confirmation to be at it.
Yeah,
but
no, I'm not.
Would you
I'm
be
not
buying
suggesting.
here?
No. But what it does give me, it gives me the confidence that the positions that we're in right now, right? I'm thinking of something.
I wouldn't be closing them either.
an ASML, a Google, things that are related, like even Tesla, TSM, for example. TSM's had a really nice bounce back here. That's one of the trades that we put on last week, which at 31 days to expiration, 390,400. Could you do it again today? Listen, you're still collecting $3.13 in credit for $10 wide. That's pretty much a third of the strike. But the rationale there was, and it looked like it was falling apart. We're going to hold the 50-day around here, and worst comes to worst, 385. That seems to be a swing zone down in this area right here. That's going to hold. Down there. There's seemed to be something down here. So let's see what happens. We washed out. Friday I wasn't in, so I didn't see the washout. But then yesterday we bounced back. Today we're back in it. So I'm looking at how some of these trades are shaping up.
I think that's completely valid.
And it feels like the market action is reaffirming, okay, we can keep running down the clock. We are at 31 days to expiration. Don't need to take this off today. We can go to 30. We can go to 29. We can go to 20.
I think that's completely valid.
That's kind of how I'm viewing this action today.
I think that's completely valid. I think it's important to consider sort of the difference here. And that's why I think ultimately this is sort of the harping on the candlesticks. It's not that they don't work. They do. It's not that the price action signal in a morning star is somehow not the price action signal when it doesn't appear at the bottom of a move. It is, because the psychology of what makes those candlestick patterns appear is exactly the same psychology. The difference is when they appear at the bottom of a long move in the opposite direction, it's a tectonic sentiment shift oftentimes.
Sure.
This is not that.
No. To me, it signals it's like continuation. Okay, we're going to stay within the trend.
Well,
how far that goes
maybe
to
the top of the range, let's say.
Right. Yeah. Okay, we're still on the same page.
Which is fine if you punch through the top of that range now. It's a different conversation.
If we punch the top of the range, different conversation. So in terms
I'll
of
be on the long side with you. I mean, my calculus is simple. High is holding, range is there since mid-May. That's my MO. If the range breaks, okay, then it breaks.
So I'm going to hold MES for now, and MNQ, we're still sitting above the short strike. The triple Qs, which looking for a different structure there, got better payout on the 700, 695 short put spread. That's a 24 DTE. This is going to have to be taken up by the end of the week, quite frankly. I may take this up before tomorrow's earnings just because we're so close to 21, and it's already small loss here. But again, right now, if I'm reapplying this position, it's 685 or so, 680. Seems to be a level in the triple Qs. We're rebasing above the 50-day, which is important. At 31 days to expiration, for example, if we were to look around there just to start to go fishing, as TP or Liz would say, $1.15 in credit for a $5 wide strike, not quite $1.33. $1.67, I mean. But you're getting into that neighborhood where if you start to look to recent swing lows, you can find maybe something of an appealing setup if you're looking to sell some vol, which it's still a 68.7 IVR, Ilya. You raised the point that we've already bounced back meaningfully enough, and quite frankly, between the highs and the lows, we should just pull up a Fibonacci retracement here, just to emphasize this point. We're basically at the halfway mark.
Yeah.
In the range that we've been in since the high June, low June, trading area.
Yeah.
So do you want to is this a great day to sell a put? No, it was better a few days ago. It might be more prudent if you think the chop's going to continue to look at and maybe do a short iron condor instead as we get close to that 1 month, which is 713.60. I know this is a futures program, so the NASDAQ equivalent would be 29,565, but 29,565, you're at the midway point between we'll call it the 60-day high-low range.
Mm-hmm. Yeah.
So many ways to skin a cat here, Ilya, but I'm comfortable. It feels like for the first time in days, I'm comfortable with long equity exposure because it looks like I have something that I like to hang my hat on that lets me sleep at night.
No, I think that if I were sitting on something that I was long at lower levels than here, this move today would tell me, okay, you can hold this for a while longer and see how this resolves.
To that point, Russell here, very much in that same basket. We're getting close to, taking this off, Ilya, probably a week out, but 28.50, 28.75. I think we're getting, this was initially put on July 8th. You start to get into support. You're between the 1 month and the 50. We were getting good pricing. The 50 is now at 29.29. So consistent with that. If I were thinking about this today, because again, it's a good candlestick. 30, we'll go to 41. That's pretty close. 29. 29. I'm going to 29.50. I mean, Ilya, this isn't terrible. 25 points wide, so you're collecting almost $7 in credit. That's a little bit less than you'd like, but you're sitting below the 50-day moving average for your short strike. Yeah, you know what? I like it. Let's get it working. Add more Russell in. Why not? Russell doesn't get any love around here. I'll give it some love.
That's one I am. If I was open-minded, and I am, to looking at, okay, maybe if the AI narrative has another leg in the melt-up, I could get enthused about participating there. Russell, I see such warts in the business cycle. Like, the business cycle looks so hampered to me.
It's
that
America's worst 2,000 public companies.
Yeah, something this cyclical, no thank you. I don't want to accidentally end up on the wrong end of, oh my God, this consumption number was what? I mean, we're at 7/21 here on the calendar, right? Our next GDP update is the 30th.
Sure.
Take a look at the Atlanta Fed GDP Now forecast.
We'll do that.
We haven't looked at the good old Atlanta Fed in a while. I took a look yesterday just to kind of check my sanity. My sanity's fine. You know, within bounds.
1.7% is not.
It's at baseline, let's say. It's not good, but it's at baseline.
The New York Fed nowcast is 2.8%.
Well,
between those two,
New York Fed's not very good at this, is the problem.
No. They built the New York Fed and Atlanta Fed are the two good ones. St. Louis is garbage. San Francisco's garbage. I mean, you can just look at their own forecast, right? They have the big deviations.
San Francisco Fed is not good at GDP. They're much better at forecasting inflation numbers for some reason.
Yeah, New York and Atlanta, I usually take the midpoint of the two for what, like, as I'm thinking. So 2.8, 1.7, maybe it's 2% in that neighborhood.
Right, which is about where we are now.
Not bad for an economy dealing with a war. Ilya.
Pretty bad how we got there, though.
Yeah, okay,
and that's really,
I know about the economy running
thing.
hot. Can I bring up something about the earnings here?
Yes.
If Micron and Nvidia were taken out of the contributions for Q2 S&P 500 earnings expectations, the blended earnings growth rate for the S&P 500 for Q2 would drop from 24.7 to 16.8%. Now, that seems like a steep drop. But if I recall correctly, last quarter, even with those two companies in the mix, we were only expecting 12% earnings growth year over year at the start of Q1.
Well,
so the rest of the market, I know this looks like, oh, this is so dramatic. These companies are so big and they're producing most of the numbers. It's true. But there is also a lot of money that's being made by a lot of companies out there.
Sure.
Even if you strip out the two heavyweights that are driving most of it.
Yes.
Well, can't discount that.
I don't think that's anything that the market cares about at this point, not because it's insignificant. It is very significant.
You don't care,
but because it's discounted that in the price already. Because you're very clearly seeing that. I mean, just look at, again, South Korea is obviously a dramatic example. There was a speculative frothiness there.
Retirees dissolving their pension funds to buy triple levered semiconductor stocks.
As I say,
it was obviously going to come crashing in at some point.
This was a speculative bonanza. Is it any different in philosophy than the speculative bonanza happening in SMH or SOX? No, it's exactly the same. And so,
yes.
And so you look at this and you go, okay, right. They're making a bunch of money. We know. There's a build out. Yes, we know. Sort of. There's kind of a build out. There's the intention to have the build out. There's the promise of the money. And there's manufacturers buying inputs to get ready for when it'll start in earnest. I'll see you there when the political opposition eases. But, but in the meantime, yes, of course, there's real money here. But the question is, which part of this has the market not discounted yet? Because it's not responding to the good news anymore.
We're moving on to bonds here. Rate hike odds are going up today. Again, fourth day in a row that rate hike odds have gone up
today. Especially like ZN is fine.
Notes,
ZB looks ugly.
But they're both down, dollars up, gold is still going up. So I know we want to get there in a second because you're probably very excited about how this relationship's unfolding. But ZN here.
Very excited, yes.
Unfortunately, I couldn't get filled on a ZB position earlier today as it was breaking down.
The ZB chart is very annoying.
I wanted the 111, 110. It wasn't filled. I could still do it now. It's not really great risk to reward. I'd have to keep looking. I'd have to keep reaching a little bit here. And I probably want to go out a little bit more to 66, I guess. 110, 108. That line, $800 of capital right now. I don't know. Ilya, here's the thing. This is now a lower low here in ZB.
Yes, that's the part that I don't like.
Right. So if there was ever a place...
That would be the part. That's the part, yes.
Yeah. I mean, it wouldn't have made a difference if I held the position from yesterday because I was able to flip it for max profit.
Yeah.
But the new one I wish I had been filled on because I would have caught another like 9 ticks already. I digress. Maybe I'll find something different here, but this now looks like a breakdown is the point I'm getting at, which is why I'm still fishing here. It doesn't feel like I'm late to something. I'm going to go to this 4-hour chart. I'm going to look at the recent low near 1, 10, and 12. You can see how the market's trying to defend it, but it's starting to leak through now as we get into our afternoon session here.
Yeah.
This is probably the place where you can best articulate the view. Hey, by the way, folks, inflation's still in the system. And the market recognizes that inflation is making its way through the system, even if oil's at 70 or it has a brief jump to 85 or so. Inflation's in the system.
And by the way, we did get another jump in oil today, up over 2%.
We have. Yes, we have.
Which I'm not mad at. That's cool. But I don't like what the bonds are doing here. This is not great. I still have tons of time on my call verticals, but they're at the long end. And the long end is not behaving well today.
No.
I am given pause to just go directly and take it off. There goes your Russell, Phil.
Well, you know how you feel about gold? It's like, well, if gold isn't falling when the dollar's strong and yields are up, then what happens? It's it's kind of like a beach ball underwater.
Right.
That's
I like gold, obviously.
By the way,
I like
copper
silver.
deserves some attention again after today. But that's kind of how I feel about the Russell. If oil's doing this and rates are doing that and the Russell's still going up, then what happens when those things come off?
Right. Right. I mean, I guess the key difference for me is why they come off. If they come off because we need to be talking about rate cuts because the economy is choking on the AI build out and the inflation that it's generating, I don't know if I like the Russell in that environment. But let's see. I do like that gold seems to be following the playbook that I've been working from. This idea that when gold stopped falling, even though oil was surging, that to me, as you know, I've been harping about it for a week and a half.
Days. Yeah.
That for me was a tell. And so I started buying. I started buying silver. I started buying gold, even as I stay long oil, because I think the dynamics of the war trade here are changing. And so I like this. I'm long. Let's go. I don't like that the bonds don't seem to want to play along, but I'm going to hang my hat on ZN holding and see if I can't wait this out.
I think gold is my worst thing today on the follow page right now. So it's not working for me. I'm still in Mono Z. I never got, I still haven't been able to add a third contract in here. And the position is sitting at a break even just above the 1 month moving average. Ilya, my game plan here has not changed. 41.11.47 cents is our 1 month here. If we get a close on the other side of it, that means something different has happened, which we have not seen since the middle of May. A 2 month downtrend
I'd be adding there.
I know that you're bullish on silver. I could not get in when we got that move through 58. We were talking about this on overtime yesterday, but we will talk about that more a little bit later. If we can get a pullback into 58, I might be interested. I want to talk about that beach ball phenomenon. Okay.
Yes.
For copper. Hey, have you noticed that copper here is like nowhere close to a 20% pullback from highs like gold, silver, 30, 40.
Not interested, copper.
50%. This is fact. Ilya, just name all of the bearish factors in play right now. Why on earth is copper doing this? And it kind of like, I got out of a position recently, just didn't work out. Now I'm feeling like a total idiot that I didn't roll it forward. Why is this not compelling to you? If copper is able to be at 655, despite Fed hikes, a weak Chinese economy, and the metals meltdown.
Oh God, a weak Chinese economy, so weak.
What does that say about copper? If it feels like that, maybe we've been looking past this for far too long.
Maybe. At this point, it's in the middle of this congestion that's been there basically since the beginning of the year. If you put a horizontal line at the high, you can kind of see it. And so for me, this is kind of like, okay, well, let's see. Because the risk reward, I think, is a little iffy now. If it pulls back or it breaks, I'll become much more interested.
Ilya, one last quick thought here. With those yields going up, we have a dollar that's continuing to go up here for a fourth day in a row. The stuff that we've been looking at in the Canadian dollar, the euro, looking for a weaker Canadian dollar yesterday. Yeah, it worked out really nice so far. Same thing for the euro, edging back a little bit here. We'll cover those more on overtime as we do more macro. TP and I will get more into the stock conversation. And some of these names that we're seeing, some of these moves that we're seeing in SanDisk, SK Hynix, Micron today, the semiconductors really, truly are having a great session. Micron up 12.3% right now, Ilya. Back
we got earnings in the hopper.
72. Yeah, Alphabet, Tesla, they're coming up tomorrow, but we're going to take a quick break here on Tastylive. We'll be back in about 90 seconds, 2 minutes time. More live trading ahead. Tom, Preston, TP coming up next.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too.
So what else can we say other than trade like a trader? Tasty Trade.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Putting on strategies? That's easy. Taking off strategies? That's also pretty easy. But what do you do with everything in between? Well, in our Options Crash Course Strategy Series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there.
Let's make this quick. I gotta get going. I make $4.97 every second that I work, and if I don't clear $145,000 by the end of the day, I'm gonna go crazy.
Okay.
It's a cute dress. Where'd you get it?
Oh, thank you. H&M.
$23, 10% off sale.
That's pretty good.
Probably not worth more than $4 now. That's too bad. You gotta be aware of these things. Everything has value.
Well, not everything has value.
Everything has value.
I am pretty sure I can name a couple of things that don't have value.
Go ahead, go for it.
Okay, caution.
5 cents.
Feebleness.
That's a sad one. $1.12.
I have a toughie for you.
All right.
What about us?
Me and you?
Yeah, did we have a price?
Yeah. 2 cents. We should have sold that one a long time ago.
2 cents?
Yeah, we could have made a lot of money on that one. Oops.
2 cents? I wouldn't even pick that up off the street.
Exactly. I think that's more on you than it is on me. Lord knows I'm trying. Hey, you know what, though? There's money to be made everywhere. Take you, for instance. Look at you. You're a young buck. What are you, like 37? I'm joking. How old are you?
I'm 26.
With your genetic makeup, you know, you're not putting on too much weight. I think you could sell those little lady eggs of yours and make quite a profit online. But I wouldn't wait too long. Next month, those would go down big time, especially if you keep eating the way you're eating. I gotta take off. Time is money.
Are you serious?
Yeah. Hey, look, can you get the check on this? I left my wallet in the car. I don't like to carry around bulky things. It slows me down.
Happy Tuesday afternoon, 1 p.m., and it's time to put some trades on. I'm Tom Preston, and let's see what the S&Ps are doing right now, and why do I even bother looking at this? Up $65. They were up about 38 when I was on the show with Mike and Jermal earlier today. Liz Deerking was betting on a rally. I was betting they were going to drop. I was wrong. Liz was right. Good for her. That's awesome. What I did for a trade around 9 o'clock, I put on in the 0 DTE SPXs. It was an unbalanced butterfly. I bought the 74.30 put, sold 2 of the 74.50s, and bought 1 of the 74.60s. Did that for a 60-cent credit. And I bought the embedded short 74.30, 74.40, put vertical back for 15 cents. I got partial fills. It took me a while to get the size I had it on done. It came spitting through in about 20 minutes, but I get filled total right before noon. So for 2.5 hours worth of taking risk, not bad. So what I'm left with, so I put the unbalanced butterfly on for 60, bought the embedded short put spread for 15. So I have that butterfly on for a 45-cent credit. Not bad. That butterfly is worthless right now. It's with the index at 75.09. Yeah, I mean, we have 2 hours for it to crash 60 points. Maybe that would help. That would help. Unchanged on the SPX would help that butterfly, but right now it is absolutely worthless. I'm not even going to bother putting an order in to sell it. If we're a little bit closer, I would, but it's not worth it at this point. Let's get into trading. One of the stocks that popped up on a scanner I have, where I look for the stocks with the biggest standard deviation price changes. In other words, you have a point change, stock moves up or down $1. You have percent change, stock moves up or down 1-2%. Standard deviation change moves 1, 2, 3 standard deviations. Halliburton really got smoked today, down 5.88%. It was like 2 standard deviations, I think, something like that. They had earnings before the open, and apparently they beat the number, but the market didn't like whatever their forecasts were. I really don't care. All I know is the stock did not respond positively to whatever the news was. And it goes back to this sort of when I was trading the board of trade in the bond options. You know, it's if you gave us the unemployment number the day before, we would have no idea which way bonds would move. Okay, it's like, I don't know, comes out good, they go down, comes out good, they go up, So same thing with Halliburton, same thing with earnings. And as a trader, I like to trade some earning stocks just if the opportunities present themselves, but it's not my bread and butter. That SPX stuff is how I generate most of my profits. But it's a whole mishmash of stuff that I have on. Let's take a look at what's going on in Halliburton. So Halliburton, this is a chart of Halliburton. Gap down, bounced off its lows a little bit. IV rank 40%. I wouldn't pay too much attention to that right now. The volatility came off. This is the chart of volatility, and I can zoom in a little bit here. to see a little bit closer. It came off a little bit, as to be expected. Earnings come out and they suck the vol right out of it. But 31 days, let's take a look at the liquidity. It's not bad. The 32 puts, 86.94, 6 cents wide. It's Halliburton, for Pete's sake. It's not the most. I mean, yeah, it's traded 21 million shares. That's awesome. But a lot of that has to do with, I think, with earnings. Let's go to the charts again and look at the actual volume. Yeah, volume is usually, I don't know, maybe half of what it is today. But Halliburton's a major stock, very liquid stock. The bid-ask spreads in these things, it varies. 7 cents, 13 cents. This 2,290 contracts over open interest is interesting. Stocks at 33. Let's check the skew down. Let's go down 2 points to 31 puts are at 60, up 2 points. 35 calls are at 72. Skew is pointed to the upside. For what it's worth, again, it doesn't say the stock is going up. It just means the option market is pricing risk to the upside. So let's just say we agree with that. Let me see if I get the 55 put. What are the metrics on this thing? 84% probability of making half of its $55 max profit. So about 27 bucks or something like that. Before expiration, generates $1.82 of theta versus $459 of buying power. In fact, let's take a look at 1.82 divided by 459 is equal to 0.00, let's say 0.004. So that's 0.4% return, daily return on theta return on capital. I like that. Let's see if we can get it at 57. Let's see, 57. Let's see if somebody bites. Filled to 57. All right, moving along. Watch list. So Nike is another. Nike. Do I have any Nike sneakers? I don't think I do. I don't know if I do or not. I'm not a big sports kind of clothing guy. I don't usually wear sneakers out on the ranch only because it's a little. I mean, I can. It's just a little too dangerous sometimes. A lot of heavy machinery, things that can fall on me. I don't want to lose my foot. Anyway, Nike's been pummeled. Nike had earnings last week and just get clobbered. Nobody likes Nike anymore, except it's basically been flat for the past couple of months. Let's check the volatility skew. Stocks at 43.15. It's close enough to 43. Let's go down 2 points. 41 puts are at 90. 45 calls at 120. Skew looks like it's pointed north to me. Let's see what the 40 halves, the 40 half numbers are. If I sell this at 76 cents, again, higher theta, that's pretty good. So an 87% probability of making half its max profit, about 38 bucks or so. Before 31 days. So this is the number, the P50 number is the number that I mainly base trades on, mainly. Sometimes it isn't available for a variety of technical reasons, but the 84%, I like that number. I like it over 70%. I do trades with less than 70% P50, but I like higher than 70. $2.31 of theta, $2.31 of theta divided by, so let's say $600 of buying power effect is, again, 0.0038. So almost 0.4% theta return on capital. I like that. Let's see if we get filled at 76. Again, what do I know about Nike? Nothing, but we're going to put an order and see if we get filled. See if anybody wants to play. General Motors came out with earnings today too. And I guess things are looking up for GM. I didn't really follow the news very much. They had I don't know, you guys can fill in with what is going on. I can now read the comments in YouTube if anybody has an opinion about what's going on with GM. I guess they're doing some maybe write-offs or something like that on their electric vehicles. I guess it seems to me that at least in the North American market, or at least the American market, a lot of the manufacturers are moving away from the EVs. I know that, VWs have trouble with them, and not bad cars, but, they're not selling. So GM is up on the day, 4.76%. Let's take a look at the chart for what it's worth. And by the way, this is what I like to have. I don't know if I'm not a big chart person, but to get 4 simultaneous charts, you go up in here, and this is on the web platform. You click on this thing, multi-charts, and you can choose which. I can have 8. That's a little much. I'm too old to see 8 symbols, but you can set up a bunch of different templates for charts. Kind of handy. GM bounced off of lows. That's impressive. So this would be, I don't know, bullish, bearish. I don't know. Let's take a look at the skew. So they came out with earnings this morning. Go up to 31 days. Markets are pretty tight. 7.43 million shares traded. That's pretty typical for GM. Markets are a little wide. Let's go down, I don't know, 38 days. No, those are worse. The weeklies are worse. About 17 days. I'm just fishing around here. No, these are even worse. So how about 3 days? Not bad, but, well, good. Let's see. No, that's too much. So what I'm looking at is if I sell a naked put in here, let's say the 76s, $1,250 of buying power. Do I look at the max loss? Not really. Of course, the max loss on that short put is $7,400 if GM goes to 0 in 31 days. In other words, General Motors, the company, loses its entire value in 31 days, and its stock is 0. Okay, I mean, it can happen, but the likelihood of that happening is kind of slim. So the max loss, yes, it's true, but the buying power effect is a little bit closer to what the actual risk of the position might be. So $165 max profit, 83% probability of making half that, so about $82 versus $1,200. That's too much. I don't want to be spending this. And if you have a little bit smaller account, let's say sub $10,000 or even sub $25,000, using $1,200 on a single $1,200 of capital on a single trade that's a lot. You're using up a lot of capital for a trade when, if you balance things out, if you have each trade has a relatively small amount of capital requirement, you can put on 5, 10, 15, 20 trades and do the whole trade small, trade often thing to get the odds on your side, hopefully over time. That's the goal of that strategy. But if I buy the 75 puts against it, create a short put spread, and let's see. Can I take this down one strike? Myself a little more room? No. Let's do if you're bullish, and how's the skew looking? 79.5. 79.5 is in between 79 and 80, down $2. 77 puts at the ask price is 214. 82 calls, 236. So the skew is more to the upside. Let's try to route this out. Let's try to get 63 cents on this. They're wide markets, but you know what? Let's give it a whirl. Nothing ventured, nothing gained. Filled at 63. Okay, I'll take it. How's our SPX looking, by the way? Am I getting my sell-off? No, of course not. Of course not. By the way, I can't remember the last time I actually nailed one of those butterflies. I mean, what drives those unbalanced butterflies is the embedded short vertical. Don't think it's the butterfly. I don't see it as trading a butterfly. I see it as trading a short put spread in that example. If the butterfly's a lottery ticket. That's it. And I don't play the lottery, but last time I won on an SPX butterfly has been years. Let's go into our watch list again. So Halliburton, Nike, GM, one of the symbols, one of the things going on, and I don't know if you've heard, you probably have heard, a lot of the tariffs going on with Canada. President Trump wants to put a 50% tariff on Canadian goods and stuff, and lumber and some concrete or whatever it is. All the stuff that we love from Canada, our friends to the north. It sucks, but it is what it is. I'm not president. Maybe someday I will be if you all vote for me. I would appreciate it. But until that time, we're stuck with the tariffs. Chart for 6C sold off today. Is that the reason why? Well, I guess. I mean, I don't really follow the Canadian interest rate so much. With the pressure on, I want to talk about Bitcoin after this. With the pressure on U.S. rates, the bias to the upside, it's going to make the dollar stronger. And the dollar is generally stronger today, with the exception of the Aussie dollar. Let's go to the watch list. Let's go to futures with options. So you have, where are my little currencies? Here we go. The yen is down. I'm short a put spread in the yen. That's losing money today. The Aussie dollar is up. The British pound is down. The euro is down. The Canadian dollar is down. So the dollar is generally stronger today. And if you look at bonds, let's look at ZB. ZB is down. Interest rates are climbing up in the longer term of the yield curve. Notes are down. Let's go to ZC again. Oops. Oh, not CC, 6C. Sorry. May want to take a look. I don't know. We'll see if we have time. What time is it? If I have time, I'll look at wheat or something like that. Let's go to the trade page for Canadian dollar. Let's see here. Last price, and this is going out. I'm trading the September contract. September contract 71.060. Let's take a look at the skew. 71, and it's right in between 71.70 and 71.10. Right in between here. So if I go down, let's say 2 points up here to 18, up 2 points to 713, 18. It's balanced. The skew is balanced. What do I get for a short call spread in here? I assume I don't know if it's still trading. It might not be. Might have closed. But $40 of profit versus $160 max risk. Not bad. Let's tighten it up a little bit. 50 versus 1. Let's ship it. Let's see if it's still open. Let's see if it's still open. Working. Nothing done. Nothing done on Canada. You could do an iron condor in there too, if we thought it was going to trade in a range. But I'm just kind of bearish. I just think there's downward pressure on a lot of these other currencies. Upward pressure on the dollar, for example. The tariff won't help. Interest rates rising in the U.S. won't help. So that's as much macro analysis as I actually do. Let's go back to our watch list. Let's go to the Cherry Bomb watch list. I set this up before I get on air. So Cliffs Natural Resources, or Cleveland Cliffs, excuse me, Cleveland Cliffs, CLF. Cleveland Cliff is, I believe, it's a steel company. I believe. Somebody correct me if I'm wrong on that. Oh, thank you, TP for president. Thank you very much. Yeah, and at some point, I think in the next week or so, BBB Fine said, TP, do you ever address your positions or keep trading? I'm in and out of a lot of stuff during the day, so I close some things. I can't necessarily wait until I do this segment to close positions. If I see that 50% profit, I take it and move on. But yeah, we can address it. We can look at Wolf, for example. Wolf has been a horrible loser. Did that trade 10 days ago, sold a put vertical, and they're going to sign on the short put. It's losing money, so I sold a call against it. It's a wheel trade, even though I don't necessarily think Wolf is a great stock for that. But they're coming out. CLF is coming out with earnings on July 23rd. What is this? What is CLF? Down 12 million shares traded. So it's coming out in the next couple of days. Let's check the skew. Should we do a pre-earnings trade? Let's see, 929. So it's in between 9 and 9.5. Let's go down half a point to the 850 puts, up half a point to the 10 calls. So the 850 puts are at 24. The 10 calls are at 30. So the skews point to the upside in CLF. Should we do a short-term naked short put in CLF? What does the winner trades be on follow as soon as I can? Thank you, Grumpy Mike. Yeah, steel and mining. Gotta love steel. I love steel. I'm learning how to weld, or at least I'm teaching myself how to weld. I'm not very good at it, but cheaper steel, I always appreciate it. Let's sell a naked short put in here. Let's just see what happens. Again, $228 of buying power requirement for $7.20 a theta. That's a huge number. Let's ship it. Enough talk. Less talk, more trading. Let's look at Bitcoin. This is interesting. I bet, and I have a few more minutes left here. I bet is the ETF that tracks Bitcoin. And it's been rallying a little bit. I was talking to Mike and Jermal this morning. What's interesting about Bitcoin is, when the shooting war started over in Iran back in late March, early April, Bitcoin got crushed. It was not what I thought it would. I thought it would be maybe a safe haven for wealth. It turned out not to be the case. I was wrong. And the problem with it is it doesn't earn any interest. So if interest rates in the U.S. if they do increase interest rates, that makes Bitcoin a little less attractive just in general. But they're coming out with this, what's the phrase? I think it's called the Clarify Act. I heard Bessent talking about it today. It would sort of sort out who's in charge of this crypto stuff, whether it's the SEC and CFTC and all that, and it's just the regulatory thing. Not the biggest fan of the regulatory agencies. I know why they exist. They help protect the individual investors. That's the whole point of it. Make sure that there's a fair and orderly market. I am all for that. But sometimes they're a little behind the curve. In any case, I don't really know much about this Clarify Act, but IBIT is up today. Probably because of that. That probably is the reason why. Let's go and sell, I don't know, let's check the skew. 37.5 is our price. Let's go down 2 points. 35.5 is at 80. 39.5 is 88. Skew is little pointed to the upside. How much are they charging? No, that's too high. So $1,300, too expensive. Let's do a vertical. 24, let's pull this up. I'm looking for, clear it out, 36, 35, 33 cents. Let's drag this down to the 34s, 58. Let's do this. Let's do this at 58. The other thing we could do, let's route this at 58, see if it gets filled. Bullish on IBIT. Let's look at Coin. Coin is the biggest crypto exchange. They obviously are up today on that news too, when it basically follows Bitcoin. I have a trade loaded up. I have a short put spread loaded up in here. 3 days to go. The nice thing about Coin, when are its earnings coming out? Let me minimize this. Earnings is coming out on the 30th. We can get in here before that. The 72.5, stock's trading is 78, right in between here, down 2.5, up 2.5. Skews pointed to the upside a little bit maybe. You could sell the 72.5, 75 put spread for $1 credit. Let's try it for 3 days. Ship it. So what have we done today? Let's go in activity. Filled on Coin. Nothing done yet on IBIT that I can tell. So we've Coin, working IBIT, working CLF, working Canada dollar. And I'll probably just cancel this stuff if I'm not filled. fine. They don't want to play. Filled on GM, working at Nike, and filled on Halliburton. Let's check our Nike trade. Let's see what I can get for it. 70. I'm at 76, 73. Let's offer it at 74. See if somebody bites. Did I get filled? Filled to 74. All right, that's not bad. All right, so that's, let me do a quick count. So filled on one Nike, Coin, GM, Halliburton. We did 4 trades. We might get filled on a couple other of these things. IBIT might get filled. CLF might get filled. I may work that trade on CLF a little bit. But that is the process I use to find trades and the speed with which I go through symbols. Am I an expert on any of these things? No, but I know option markets. Anyway, none of this is a trade recommendation. If you do decide to trade this on your own, that's fine. But please don't take any more risk than you are comfortable with.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the Tuesday edition of what it is that we are trying to do. I'm so glad that you guys are here because it is a Taco Tuesday, right? I'm having tacos. You're having tacos. We're all having tacos, and the market loves it. So welcome to the show. I'm glad that you are here. If you're watching over on the Tastylive network, I would actually bounce on over to YouTube because you can join the conversation and join the discussion and communicate with your brethren who are also watching the program. Man, you can celebrate if you are a taco fan. You can celebrate if you're an enchilada fan. You can celebrate if you are indeed a bull. But if you are a bear, you can commiserate with your fellow brethren. But I can assure you, whichever side of the fence you might be on, it will be a good time had by some. And don't forget, your most important job today is to pop into the chat and pump that algo, man. Questions, comments, stories, and jokes. Put them all in there because I want to know, and the algorithm is dying to know. So go ahead, Ben. Bring us into the market. Man, let's have a little look-see at what's happening out there. The S&P is up 59. There you go. Risk-free instrument, also known as the NASDAQ futures, extremely high-risk product, up 541 on a day like today. You got the boomers doing some boomer things, up 355. And then you've got the Russell 3000, almost back to 3,000, up 37 on the day. Technically, of course, it's the Russell 2000, but not on the streets. It's definitely the Russell 3000. Bonds down 11. Notes down 8. Got oil up a couple of bucks. You got UB40 down a little bit. You got the shifties out there, man. Let's celebrate like it's 1999. Oh, I'm sorry. Let's party like it's 1999. I definitely botched that one. Gold up 71. Hunt Brothers out there. I got to imagine they're doing pretty well. Yeah, up $2.15, back up to 59. So silver is up. Gold is up. The shifties are excited. The Hunt Brothers are excited. You got the British pound is down. Got the euro is down. You got volatility futures down 47 cents. You got spot volatility. The old VIX down $1.52. I mean, it's still at 17. So being down $1.52 as a volatility premium seller, not necessarily amazing for your new positions. Obviously, for your current positions that are short Vega, a volatility collapse like this today is going to help those positions. But this is not necessarily going to give you a ton of new opportunity down the chutes for any new trades that you might be looking to do. But still, dropping to 17 is really not that bad. Like, again, it wasn't that long ago. I mean, it was back to 15. I think, did we get to 14? Did we get to a 14 handle on the VIX in the last couple of weeks? Let's have a little look-see. And let's consult the daily VIX chart. So if I look at the VIX, I got all the way down to a low. Oh, look at that. We did it, guys. I'm going to leave my mouse right there. This is not my opinion. This is not subjective conjecture. This is an objectifiable? No. Objective and verifiable. And I went with objectifiable. This is an objectifiable fact that you can see on the daily VIX chart. We got down to 1496 about a week and a half ago on July 10th. And so, man, being down $1.50 to 1710 is really, really not too bad when it could be a whole lot worse. And so, okay, so let's go ahead and let's see how the portfolio is doing today. The market commentary phase of the show is over. Did it make you a better trader? No. Was it fun that we did it? Not really, but at least it's over and we can move on. And so if I look at my positions here in the portfolio, and I see you guys already putting in work. Man, you guys are doing it. John Covington is here. Emmett Morrison is here. Prop trader. Sam L. Griffin Jones, Ranch, Ashfin, E Media, Point B, Ryan LP, Ryan ZN3. Man, I see all you guys. Wolf is here. Ordenu is here. Man, the core position is in the house. And so, all right, so let's go. Let's take a look at what's going on in the portfolio. So number 1 and number 2, you know, I mean, we could take a couple of victory laps on MES and MNQ, I think, right? I mean, this isn't like a Boston Red Sox 14-game winning streak type of victory lap, but it's a victory lap in its own right, going for number 15 here tonight. And, I mean, my Autumn was asking me, like, what do we do today? I'm like, is that a serious question? She said, what are we doing today? Like, would you have anything going on? I said, I have a lot going on. From 7 to 10, I'm going to be unavailable. And by unavailable, I mean zero communication. I don't want to hear a whisper. I don't want to hear a single thing. I'm going to be locked in going for number 15 tonight against the Baltimore Orioles. You got Ranger Suarez coming off the DL or the IL, whatever they call it these days. I think he's coming off the IL, coming from the DL, the down low, and maybe he'll get us to number 15 there. But anyway, that'll be tonight. But if you look at MNQ and MES, it may not be Red Sox worthy, but it's a victory lap in its own right. You can see MES, we're back to about a scratch. Nobody takes a victory lap on a scratch position better than a Dr. J. And so we are actually I thought it was up more when I was getting ready for the show. And as I was just saying that, I'm like, that is like a legitimate scratch. And here we are, like, just rounding the bases, man. And not even quickly. Like, this is a slow trot around the bases on a green scratch. Nobody does it better, man. Nobody does it better. When it comes to taking victory laps on trades you should not be even talking about, nobody does it better. And so MES, we're actually up. We're up a little bit on the trade. Having a nice day today, obviously. The Taco Tuesday has saved us. It has saved us before. It will save us again, I'm sure, next Tuesday. And so, yeah, so MES, we'll sit tight, we'll do nothing because we have a lot of room between, you know, a strike price of 73.50, the stock price of 75.45, and we're in a really, really good spot. When it comes to this position. So we sit tight, we do nothing, and then that is that. Okay, so that's MES. So now MNQ. If I go to MNQ, give me 1 second here. If I go to MNQ, let's see here. Give me 1 second. Okay, there we go. If I go to MNQ, this guy we're doing much better on. So this is actually potentially victory lap worthy. Right now, again, have we closed the position? No, of course not. But we're going to get 2, 3, maybe 7 days of content out of this one position before it's even closed. And so right here, MNQ, you can see our strike is 28,400 and the stock is at 29,300. So we have about 900 points of room between where the stock is and where the strike is. And so what are we going to do? You guys already know the answer to this question. What is our number one favorite strategy? What is our default setting strategy? What do we do better than anybody else? Nothing at all. Not a single thing. We are not going to do anything with this position. There's no reason to, in my opinion. It's already doing what you have politely asked it to do. So just let it cook, let it simmer, and just go live your life. Right? The glutes aren't going to pump themselves. Right? They're going to need you to take an active role in getting that pump done. So go get it done, and let this guy just kind of sit and work in your favor. So for MES, we sit tight. For MNQ, we sit tight. And now if I go to let's see. Oh, thank you there, Laura. I do see I got a couple of questions coming in. We'll do the surprise and delight first, and then we'll get to the questions that Laura is bringing in. So Laura has, man, Laura, you guys are amazing. Laura's added a whole new element to the show. So we have me surprising and delighting you guys, but we also have, speaking of coming up from the down low, we also have Laura surprising and delighting me. And so now, because if you followed the show for any length of time, you know that when I get to the questions portion of the show, I typically go back to the beginning and I move through them sequentially. And again, you can check Polymarket yourself. This is not my opinion. This is not subjective conjecture. The expected move on the number of questions I get to per show is between 0.8 and 0.85. And so if you happen to like catch the show late or tune in late or whatever, and just put your question kind of downstream, you might feel like the delta that I'm going to get to your question is very, very low. And it may still be somewhat low, but now it's a lot further above zero than it was because of Laura coming up clutch with the reverse inverted surprise and delight. And there you go. All right. So there's MES. There's MNQ. Oh man. Wow. We have so much to do, guys. Wow. This is crazy, man. How long is this show again? We're not even halfway through the intro. Like this is not good. So first and foremost, Alcoa. So for Alcoa, we are in a situation where we have a winning trade on our hands. We actually did it, guys. We cheated death and we sold a naked call, and we're going to be able to take this guy off for a little bit of a profit. Now, it's not a huge profit. We're only talking about $1.22. All right. But that's $1.22 in the options world, which is $122 in the actual world. So that's not too bad. And we are beyond 50% of max profit. So when it comes to just kind of, relativizing everything and standardizing everything in terms of, what you sold it for, and, it has to have economic significance in an absolute sense, of course. But if we just kind of remove that for a second and just say, hey, when I sell something for $2, I'm not looking to take that thing to expiration and get the full $2. Like I'm pretty happy if I get $1 out of it. If I get $1.20, $1.25, I'm super happy with that trade. I'm not going to go for any more than that. So for Alcoa here, we're going to take this guy off and move on. So this is actually the only official victory lap that we should take on the show. And of course, it will be our shortest amount of commentary. So if I go ahead and I close this guy down, because it's over, man. It's over and done with Alcoa. That is all she wrote. So if I go to Alcoa, let's see if I can buy it back for $1.03. All right, we got filled at $1.03. So there you go. Perfect. Okay, so there is $1.03 Alcoa. Okay. Number two, I do want to point out that we bought a put diagonal spread this morning on Inside the Trade. So again, Inside the Trade, 10 o'clock Eastern, 9 o'clock Central. You get to see Dr. Jim putting on a trade right after the market opens. And again, it's earnings season, so not doing a ton of individual stocks, not yet at least. Tomorrow, we are going to have obviously lots of earnings trades. I think Google and hold on, let's just look. It's Google for sure. But then who else is tomorrow? It's somebody else too. Let me go to, it's Google and a couple others that you maybe have heard of before. A little IBM, small little company out of Silicon Valley, IBM. And then Tesla, maybe you've heard of Tesla, TSLA. I think they're doing some pretty incredible things in terms of our voyage to Mars one day. And so Google, IBM, Tesla, those guys are all going to be tomorrow after the bell. So inside the trade, man, tomorrow's going to have to be inside the trades, right? I think we're going to have a few coming on down the chutes for these earnings. Well, actually, I don't want to do that because I don't want to front run myself, right? Because I've got inside the trade in the morning, I've got from theory to practice in the afternoon. And so we'll probably do one in the morning for inside the trade, and then we'll do the other two in the afternoon for from theory to practice. Because again, every single day, your boy needs that watch time, right? Morning, noon, and night. I got to have it. Like I'm desperate for it. And so inside the trade from theory to practice, we'll probably splice it up with one earnings trade in the morning and then a couple in the afternoon. So anyway, we did this trade earlier today. I'm not going to rehash this because you can go back and check that guy out from this morning, but I just want to point it out just in case you haven't seen inside the trade or you didn't see it this morning. This was kind of the newcomer in the portfolio that appears to be the latest trade on the books, because it is the latest trade on the books. So that is the diamonds, I meant to say. But guys, look, it finally happened. So look at Netflix. Guys, look what happened. We did it. And by we did it, I mean it got done to us. We finally got assigned. So it finally happened. So we were holding that in the money short put in Netflix, right? We've had this trade on for, it's been probably maybe a month or maybe even longer than that. And I've said all along, because we sold the in the money put. And when we sold it, it was only like a couple dollars in the money. It was like a 90 put or whatever. And I want to say Netflix was like, maybe 88 or 87 or something like that. Like it wasn't anything crazy. Like it was right there kind of on the razor's edge. But then Netflix just crashed, boom, banged, went down beneath our put, and it's been in the money the entire time. And so, when we put this trade on, like everything was just, all fine and all dandy. But now the put was, significantly in the money for most of the life of this trade. And so when you have an in the money option, the likelihood that you are assigned rises. Right? Whenever you sell any option, the probability that you are assigned on that option is never zero. It's always some positive number. But the reality is, if it's out of the money, the likelihood that you're assigned is very, very low, because if the other side assigns you on an out of the money option, like you just got a windfall profit. Like you just got a true, legitimate arbitrage situation that was just handed to you, dropped in your lap. So that's not going to happen that often. But once it goes in the money, it's a different ballgame now. Now, all of a sudden, it's like, hey, the Red Sox have won 7 in a row. The Red Sox have won 10 in a row. The Red Sox have won 14 in a row. Things are very different now. And so for our Netflix in the money short put, we've been in the money for probably 3 or 4 weeks now. But the entire time, we've been monitoring the extrinsic value. And I've been saying, hey, we've got enough extrinsic value. I'm not worried about it. I don't really think we're going to be assigned A. But also B, this is so deep in the money, it's basically long stock at this point. So I'm not really too worried about assignment because, yeah, it'll cost me a little bit more buying power or whatever. But it's like I'm going to have the same risk parameters on the position after assignment as to what I have on the position right now before assignment. The risk in the trade is literally not going to be changed. Well, I think just the other day, I think it was just yesterday actually, we were looking at this Netflix position to kind of, make some sense of what happened after earnings, the super butterfly and all the other things that we did, and all the cash that we just set ablaze there for Friday. The extrinsic value in this Netflix in the money short put was essentially zero. In fact, I think if you go back and check the tapes, it was quite literally zero. And so all of a sudden, the extrinsic value shield is gone. The extrinsic value, kind of defense mechanism to ward off the potential long side exercising is just not there. And so whenever the extrinsic value runs down to zero, or let's say if it's under 10 cents or under a nickel, let's say, anything between zero and a nickel, we'll call that zero. That obviously raises the likelihood that you're going to be assigned even more, because now if the long side chooses to exercise and assign you that option, they're not losing out on anything. Because remember, what do they lose in the event of an assignment? They lose the extrinsic value. Well, if there is no extrinsic value, they're literally not losing anything. And so that's why when you get deep in the money, the likelihood of assignment starts to climb and rise with just how deep in the money you might be. And so we are now long 100 shares of Netflix. Now, what am I going to do? And you can even see right here that we were assigned at 90. So it was a 90 short put. The memory is on point. The blueberry intake is incredibly consistent right now. We're doing the frozen stuff. We're doing the fresh stuff. We're doing the organic stuff. We're doing the jet fuel laden stuff. We're hitting it from all angles. And so we got assigned at 90. We bought the shares at 90. It is currently sitting at 67. What am I going to do? I'm not going to do anything. I'm going to sit tight. Because again, I mean, think about, and this may have to be our new evolution of Starbucks, right? We had Starbucks, and then Friday it went away because I had to ghost y'all because of Eli's Ninja Tournament, Amelia being sick, and all that kind of stuff. And so we let the Starbucks thing kind of slip under the radar. So that thing is gone and just floating off into the ether. Well, now Netflix may have to be the new Starbucks. And so what do you do when you sell a put in a stock? This is going to be a situation that has happened to many of you or will happen to many of you. You sell a put in a stock that you actually don't mind the long-term prospects of the stock. Okay. You sell a put, crash, boom, bang. You sell a put, it falls through the floor. So what do? Well, you just hold the put. You hold the put for a while. You know, you got long bias. It's just like stock, blah, 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 all the things we've already said. Okay. Finally, the moment comes, the day comes, you've been assigned. Now what do? Well, a lot of times in this situation, there's effectively two pathways forward through the forest. Number one, you kind of do the wheel type of strategy where now it's like, okay, I'm selling puts. Once I get assigned, I take the stock. I start selling calls against the stock. Once it rallies back and it goes away, I start the process over again. And it just goes round and round like a wheel, hence the name, the wheel strategy. That's a great approach. That's a great strategy for longer term holdings, blah, 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 blah. Love that strategy. Love the idea of that strategy. I don't necessarily do wheels too often myself, but I love the structure and I love the, you know, the bullish nature of it and just using premium in a very strategic way. But one thing you want to be a little bit careful about, and I'll even show you guys this right now. When you go to wheel something, you need to be very mindful of what is my basis on the trade. Like for instance, if I go into the August cycle, I'm just going to choose August because I already have a position on in October. And I don't really want to muddy the waters for the purposes of what we're doing right here. But if I go into August, so we know because the trade page told us so, that I was assigned at 90 on this trade. Generally speaking, especially for something longer term, right? Again, the key here is longer term. Want to sell calls above my basis. I want to sell calls that are above whatever my basis is on the position. Now, the basis could be your just legitimate purchase price. That's fine. It could also be your purchase price, you know, with any credits or debits that you've kind of, you know, premium you've collected or paid along the way. If you've improved that basis or reduced that basis, and you're like, yeah, I bought the stock for 90, you know, 3.5 years ago or in 1989, but now I've collected, you know, $40 worth of premium. So it's like I've only, you know, paid $50 for the stock or whatever. You can go either way. I think it's fine to effectively look at your basis on the trade in either capacity. But for us here, it's actually pretty simple because there's only one basis. We just haven't had this trade on for long enough to accumulate lots of credits and debits, kind of like the Starbucks situation. So for Netflix here, I know that my basis is 90. In fact, the platform even helps me. Look at that. They even tell us, Jim, this is where your basis is. Again, if you didn't even know what my position was, if you just looked at the option chain and you said, man, that's a really bad position to have, that's my position. If you looked at the option chain, you're like, man, I'm really glad I don't have that position, that's my position. And so if you look at Netflix here, I'm long at the 90 strike. Effectively, and I bought the shares at 90. So if I'm going to sell something above 90, then I'm in a situation where I'm selling a 93 strike for 7 cents. I'm selling a 91 strike for 8 cents. I'm not going to do that. That doesn't make any sense. Why would I cap my upside for literally nothing in return? That doesn't make any sense. I don't want to sell it below my basis because then if it does rally back, now I'm really in the lurch. And I don't really want to do that. So then what is the option? Well, it's the other pathway forward through the forest, which in my opinion, you can just hold the shares. There is no rule against that. Like there is no, you know, guideline that you are violating. Like you can just hold the naked, long, crusty old shares and just put them in your sock drawer and go live your life. Like keep the clean delta to the upside. Keep the clean exposure to the upside. So that way, if Netflix does rally back, you get that move 1-for-1 with the rally. And then if Netflix climbs out of the cellar and it's, you know, 73 or 77 or heaven forbid 80, 82, now maybe we look to sell some premium. And so that's my general playbook when it comes to short puts that go in the money. You know, we could roll out and down. Actually, we can't do that with shares, but we already did that with the other position. And yeah, so that's how I think about this Netflix assignment, and hopefully that helps a little bit for you guys out there. Okay, so let's go ahead and let me see here, man. Laura's got these surprises and delights, man. That is some good stuff. So let's go ahead and Let me go ahead and surprise and delight somebody in the chat. So, okay, I see my man, too much delta in the middle. Here's too much delta. Hey, Dr. Jim, an IBM earnings call butterfly, question mark, or kind of pondering face emoji style. And the answer is you got to watch tomorrow. But I'm not going to do that today. I'm not going to front run myself again, right? You got to watch Inside the Trade and or, i.e. both, from theory to practice, because it could come your way in the morning. It could come your way in the afternoon. You really just don't know. And so there's a surprise and delight there for too much delta. But let me go to the surprises and delights from Laura first. So Laura says she sent something in from E-Media. What's going on there, E-Media? I appreciate you very, very much. Hey, Dr. J, why is it difficult to analyze a calendar spread by September till August? And do you plan to have a long-term trade we can follow like Starbucks? Okay, well, I'll answer the second one. First, it looks like it might be Netflix, and so you got to stay tuned for that. But the calendar spread, so I think you mean like if you go to the actual analysis page, like if I go to the trade bar, like if I go to, I actually just did, so you're not going to want, man, I mean, we are well beyond the too much Dr. Jim level. I just want to make that very clear to everyone. Like we are, I mean, we were in the red zone a couple of days ago. Now we are in like the Planet Fitness, Lunk Alarm, like all the sirens are going off because I actually just did a calculated risk today. Like you'll know it when you see the magenta shirt. I just did a calculated risk today, which I'm probably going to air it tonight, about calendar spreads. And so E-Media, man, we are like right there. We are in tune. So definitely give that guy a look. But I did not address the analysis tab. I actually did a calendar spread in United Healthcare or United Health Group, whatever. And so let me set this up in here. This may not be the exact same one, but actually it may be. Well, no, I don't want to give away my secrets. Let me pick something else. Let me do like Meta. I mean, obviously the IV rank in Meta is astronomically high, so this is not a great candidate for a calendar spread. But for illustrative purposes, this will be fine. So let's go to September. If I buy a 645 put and then I go to August and I sell a 645 put, man, that's actually a really good looking calendar, even though the IV rank is 88. I mean, look at that calendar. You're paying $8 for that guy when you're collecting $37 in premium in the front month. That's pretty wild stuff. But the reason why the analysis tab can't really keep up with the calendar spread is there's multiple expiration cycles. So whenever you set up any strategy with multiple expiration cycles, calendar, diagonal, poor man's covered call, poor man's covered put, whatever, you're going to be in a situation where you're not going to see your pops. You're not going to see your maximum profits. You're not going to see your maximum losses. Zero is not correct. I don't really love the zero there. I'd much prefer like an NA. That would be better. I mean, I would even be happy with a TBD, right? I mean, I would definitely be tickled pink if they just put BEU down there, right? Any of those would be acceptable in my opinion. But the reason why you don't see anything there is simply because with multiple expiration cycles, it's impossible for the option pricing models to know, what are these numbers with precision. And so that's why you don't see them show up. So hopefully that helps you there, E-Media. And so, but Ranch is in the house with a second surprise and delight coming from Laura. It has been Amazon primed right to my doorstep. Doc, I have a winning vertical in USO, 108, 103, 831 expiration. It's right at 50%. What would you do as far as rolling goes? Should I just take my money and be done with it? 100%. I would not roll this thing at all. I would 100% take this guy off. If you're at 50% of max profit, book the winner and then move on. If you want to trade it again like tomorrow or whatever, or maybe do a different strategy or whatever, I personally like to, if I have a winning trade, I book the trade. And then if I want to get back in that same underlying, this is just a personal thing. I don't have any hard stats to back this up. Like I can't give you a market measures. I can't give you a skinny. I can't give you an options jive. I like to wait at least a day before I get back in that underlying. Now, some traders like to press when it's actually working. Like they actually kind of, they have a short put or a short put spread and the market's rallying and they'll roll up with the actual instrument. I really like that because I'm more of a contrarian trader. And so looking at things through a contrarian lens, I don't really love that strategy. And speaking of contrarian lens, is there anything more contrarian than TP rolling with the light platform on the show? I have never seen a better real-time illustration of contrarian behavior than TP rolling strong with that light platform on the platform, or on the show, I should say. And yeah, but if I go ahead and if I want to take off a trade because it's worked, then I would 100% just take off the trade, and I would not press it. I would not continue to try to dip into the old dip there again, George Costanza style. And so hopefully that helps you there, Ranch. But let's see. Let's go back. Man, we're like done with the show. That's unbelievable. That's really, really crazy. Let's go all the way to the beginning. Man, you guys, the work you guys are getting done, man, you guys must be draining banana natties left and right. Left and right. Ordenu in the house. What is up? Hello, Dr. Dream. What is up? Second dose of Dr. Jim. What a great day. A banana natty to finish a great trading day. You are the greatest. I appreciate you. And the fact that you are cracking open a banana natty, because we all know that they're coming in cans. That's a strong move on your part. That is 100% a strong move on your part. And so good job there, Ordenu. Let's see. P.E. Leonard, thank you to TP. Yes, TP does a great job on the show before this one. Really, really awesome job. And he's just putting in work, man. Putting in work. Point B, Rise and Grind, Dr. J, from PhD to AM, trade of the day. This man's putting in more reps than my trading account this week. Let's hear that blue breakdown. Doc, what's cooking today? Yeah, man. I mean, today, we did the IBM trade earlier, and then, or not the IBM trade, but the DIA trade. I mean, when I think of Boomer, I think IBM, obviously. And so that was kind of a Freudian slip there. But yeah, and then we did our Netflix trade. We did our Alcoa trade. I don't really see anything new because again, I'm loading the boats for tomorrow. Like we got to go ahead. We got to get the troops ready for battle tomorrow. Like today is a rest day. Like today is an off day just to kind of get your mental game right, I think. So tomorrow we'll do lots of Google. We'll do lots of IBM and lots of whatever that other one was. We'll do that one too. And so Sam L's in the house, but thank you there, Point B. I appreciate you. Sam L, happy Taco Tuesday, Doc. The most important economic report of the day, taco supply, that's correct, is stable. The ghost inventory is adequate, and the algo behavior is completely irrational. That is 100% correct across the board. Apparently, that taco supply is pretty stable. And it is kind of funny because we actually are having tacos tonight. So typically on like Sunday, Autumn and I will talk about like the weekly schedule, and she'll be like, hey, what do you want to have for dinner? Like, here's what I was thinking, whatever. And so it doesn't always work out this way, but this week it happened to be Taco Tuesday on Tuesday. And I'm like, well, it's nothing if not feng shui. And so there you go. But BBB Fine is there. What's going on there, BBB Fine? I appreciate you, my friend. Wolf is in the house. Doc, offer my kids Taco Bell or Chick-fil-A for dinner. Man, you want to talk about a gotcha and a gimme. Man, let's go. Their decision will let me know if they're going to be 10 Delta option sellers or 35 Delta option sellers. Easy to see where they sit on the risk scale. That's true, but I'm curious how you're interpreting that. So I'm very curious. Like the way you wrote that, are you suggesting that the 10 Delta is safer than the 35 Delta? That's not necessarily wrong, but I actually think that your little Taco Bell Chick-fil-A scenario, it can get pretty deep, man. Like we can get to some inception levels of understanding here, I think. I would actually say that the 10 Delta is riskier than the 35 Delta. And I know that that's crazy, and you may look at the probabilities, you may look at whatever and say that, Jim, that doesn't make any sense. But I think 10 Delta might still be okay. You get to 5, 6 Delta, I definitely feel that way. But yeah, I would actually kind of say in your little fictitious world, 35 Delta is the Chick-fil-A and 10 Delta is the Taco Bell. Maybe that's what you meant. I'm actually curious. Let me know in the chat because the algo really, really wants to know. Point B, will Netflix be your new Starbucks? It will be. The trade that you clearly explained the mechanics behind it. The explanation you gave throughout the Theory to Practice show on Starbucks was instrumental for me on how to manage and trade short puts. Man, look at you, Point B. Man, Ordenu, Point B. I'm going to send you guys all that cash that we talked about for you guys planting these comments on the stream at this very time. I've got plants everywhere, man, everywhere. Now, I wouldn't necessarily wait by the mailbox, but it is en route. It is in transit. And so, yes, Netflix will be the new Starbucks. Market's moving, things change, man. And so Ryan is in the house. What's going on there, Ryan? Day 5, Dr. Jim, I think I know what a put is. Thanks, man. You're welcome. If you're kind of new there, Ryan, man, you're in a good spot. You are 100% in a good spot. And so stick around and, from Theory to Practice, Inside the Trade, whatever else might be coming on down the chutes, calculated risk, of course. Yeah, I appreciate you, man, so very much. And if I can ever help, please reach out to me personally. It's my pleasure to help you however I can. You can find me on the Twitter or the X, whatever they call it. I'm J Schultz F3, or you can shoot me an email. I'm just jschultz@tastylive.com. Ryan LP in the house for the algo favorite ghost energy flavor, Dr. J, man, just serving me up the softballs, man. Just serving me up the wiffle balls. it's very clearly a 1 and a 2. I go back and forth. Well, it's like a 1, 2, and a 3. I go back and forth between which one of these three is in the top slot, but they're all clearly head and shoulders above the rest. Sour pink lemonade, sour green apple, and the original. Now, the 7-Up is an honorable mention, but it doesn't have the longevity yet. It hasn't put in the reps yet. Like, it's the new kid with the high velo that everybody's excited about, but I'm like, I got to kind of go with the tried and true. Like, I got to dance with who's brung me here. All right, so sour pink lemonade and sour green apple, and then original, you can go with any one of the three, and they will be absolutely amazing. And so point B, also, how do you trade your account based on the account Greeks? And what do you like to keep the ratio between delta, theta, and extrinsic of your account? Can you explain? I actually can, but I'm actually setting up to do something like that in the very near future. And so just hang tight for a bit longer there, point B, and we can talk about that in fine detail. And so Grumpy Mike, Dr. Jim, as the DIY professional you've proven yourself to be, that's correct. I sodded my whole front yard, my whole front lawn about 3 years ago. It's all dirt now. It's all dirt and sand. There's no grass left. No, the grass is gone. It's just dirt and sand. Like, it's amazing what actually happened out there. And I'm like, this is really, really amazing. We're going to be like, do I need to pull a vacuum when adding R134A to a sealed system refrigerator, or just let it fly? Come on, man. Just let it fly. The do nothing strategy is universal. Just let it go. Just let it fly. It'll fix itself. E-Media. Oh, the calendar spread. I got back to a Laura surprise and delight. That's good. Brian Rakuten is here. What's up there, Brian Rakuten? Point B, hello, Laura. Yes, there you go. Laura's in the house, in for Dr. Jim and the Algo. Man, I appreciate you so very much. E-Media for the Algo. I'm celebrating. Appreciate you. Ash Finn. Dr. Jim, let's go, man. I appreciate you so very much. Prop Trader, AK Dr. Jim for president. He uses dark mode. Yeah, that's a power move by TP, man. I hope he keeps it up. I really do. Because he brands himself as a contrarian, right? He brands himself as kind of fading, the Johnny Public and the crowd. There's no better way to do that than go with the light mode on the Tasty Trade platform. Sure, nobody can see anything, but you got to stand alone, man. Like, don't let them tear us apart. And so let's see. Yeah, Emmett Morrison is in the house. Emmett Morrison. What's up, Dr. Jim? It's been a minute since I've been able to tune in. I missed the B- humor. Well, it's back, man. It's back, and it's consistent. Like, we're back to mid-season form, right around that 80 to 83% level. That's typically where we oscillate. John Covington is here. Dr. Jim, thanks for the B- humor. Always look forward to it every day, man. I appreciate you so very much. So very much. E-Media, commiserating with you all. Yes, Ash Finn is here. Dr. Jim, with the Bondolini's taking it on the chin a little, should we put on a ZB trade? Man, are we doing a little ZB action now? I mean, I might do a little something. Down to 110, man. Do you really think on a Taco Tuesday such as this that the administration is going to let this thing persist? There's no way. Now, I haven't traded bond options. It's been a minute. But if I remember correctly, the quotes on bond options are in half ticks. So, like, when you look, I'm pretty sure this is right. And by pretty sure, I mean it's 60-40. If you look at like a 109, like if we sold a 109 put right here, which I think we will, this should be kind of fun. This 37-39 quote, those are half ticks. So every full tick of the bond quote is 31 and a quarter. So $31.25. So that means a half tick. Ooh, man, that's tricky. 15.60 something, give or take. And so that's about $15.60, give or take. And so understand that when you're selling this, that's what you're looking at. So if I go in here and I sell the 109 put, my maximum profit is, let's see here. It's going to be 37 half ticks. Is that right? For $578? I might not be right about that. Maximum loss is $108,000. I mean, that would be if bonds go to zero. I would suggest we might have bigger problems if that were to happen. Buying power effect. Ooh, that's a little bit too big for my account. Yeah, that's about 8.5% of the account. And so I have to think. I don't think I'm doing this right. I don't think that it is a half a tick. And so wait, no, actually, I think it is right. Huh? Yeah, if you do 40, yeah, actually, I think I am doing it right. And so it is half a tick. Yeah, I think so. And it's about 8%. Yeah, let's ship it. Let's ship it, as TP would say. Let's do it. And not to mention, let me write this down, keeping receipts again. ZB equals Ash Finn. Got it. Done. Okay, let's put this guy on. It's a little higher from a position sizing standpoint, but it's not crazy. And so we've done crazier things before. And so there you go, a little bond action. So thank you there, Ashman. That's a really good looking trade. Griffin Jones is here. NQ slowly covering short cash covered puts during this up move. Nicely done, my friend. Don't let Griffin Jones fool you guys, man. This guy is a rock solid trader. This guy is a superstar trader. Do not let him fool you, man. He is putting in some work. So Ranch is here. Behind on the feed. No, you're here, man, and you got in with the Laura surprise and delight. Grumpy Mike, not me, no tacos in my freezer, and everything is slowly defrosting. So it's either tamales or brats, whichever seems to be more thawed. There you go. Samuel, shout out to Laura. Laura, the favorite moderator. That's correct. The community gets happier. The comments start flowing. The algo starts pumping. That's 100% correct. Trade idea from Griffin Jones. Make a moving crowd. Whew, man, I don't know. Crowd? Down $7? Well, they've got earnings on August 26th. I think I'll probably wait because I don't want to do, well, maybe we could do a defined risk trading crowd. Maybe. Let's see here. Down $7. I mean, I'm bullish in crowd. I mean, everybody should be bullish in crowd, obviously. And so if we go in here, if I sell 87 and, yeah, I don't like that, man. That's just not great pricing. And so, yeah, that's real bad. Yeah. And so let me unpack my thoughts here. Because if you're brand new, you're like, what do you mean? What do you mean? What is so bad about this? Let's take, and it'll be no more than 7 minutes. And by no more, I mean no less. If I look at this crowd short put spread, I'm selling a 190 strike. I'm buying a 185 strike. It's $5 wide. I am collecting. Oh, actually, it's not too bad. For some reason, I thought it was $10 wide. That's actually okay. And so it's selling for $235. And so when I originally thought, oh my gosh, that's not good, I'm not going to do that, I thought we were $10 wide and only collecting $2.35. But now I'm looking at it at $5 wide. That's actually not too bad at all. In fact, we can even move the strikes down a little bit. And so if you are brand new, the reason why I balked initially is I want to be at least at 1/3 the width of the strikes, if not, closer to maybe 40% the width of the strikes. And so $235 on a $10 wide, that's not going to work, but $235 on a $5 wide, that is going to work. So let's do, what if I do an 85.80 for 210? That's actually not too bad. Whose trade is this now? Griffin Jones? Yeah, Griffin Jones, man. Griffin Jones ain't going to take me down. Nah, crowd. But I got it down now. We got our receipts. There they are. So 213. We'll just do something kind of defined risk, nothing super crazy. We have a lot of undefined risk kind of floating out there in the ether. So I think this is good. 210. Let's do 207, maybe. I don't know. Wow, CrowdStrike, man. Liquidity is it liquid? Griffin, what are you doing to me, man? 3 stars. I mean, that's not too bad. It's not amazing, but it's not awful either. We should be getting filled there pretty soon. 205, I think it'll do it. Didn't do it. Wow. Okay. Well, now it's personal. 202. I think it should work. Filled at 202. There you go. So we got filled at 202. So we gave up about 10 cents there on the price discovery. So that wasn't great. And that's another thing, honestly, with, multiple leg strategies, defined risk spreads and such. The price discovery can be a little bit more tricky because you have multiple markets that you're negotiating at the same time. And so that is going to factor in 100%. Jackie W is here. Sam L is here. Perfectly normal Tuesday at the VIX HQ. That's correct. Right. But be looking out for the tweets, man, because again, you got to know from VIX HQ if we can count the VIX prints, because you can't always count them. You guys know this, though. So E-Media, any trade idea for tomorrow morning? Nah, man, I'm bursting at the seams now. We're going to pass on that, but I appreciate you, E-Media. Ashman, get the core position here. That's correct. Sam L. Surprise and delight, Doc. Quick question. How many stories can one man fit into a single market commentary? I don't know. I'm not sure, but check Polymarket. There'll be a number for me tomorrow for sure. Ranch. There's ranches. Oh, we got to the second Laura surprise and delight. Man, that's pretty good. We got to that one too. Point B, did Doc say the Boston Red? Oh, no. This is a family show. And that's 14 in a row, my friend. Point B, that's 14 in a row. Right. And so we're going to get 15 tonight. I don't know, but I'll be watching every single pitch. And so let's see. Randall, what are your portfolio deltas? Yeah, I mean, my portfolio, I haven't looked at my portfolio deltas in a while. I mean, I'll scan them here from time to time, and you guys can even say, hey, not doing too bad, doing okay. And so there's a little something for you guys. But the portfolio delta is 82. I'm a little bit positive. And so that's, I mean, the account's about 37,000 these days. And so at 82, we're a little bit, that's okay. I mean, that's totally fine. We're a little bit, a little bit leveraged to the upside. We're at about 1.5x or so. I'd prefer to be a little bit more short right now, but I'm not chomping at the middle, I'm not jumping out of my shoes to get there. And so right now this is fine, and we can just let it kind of, just kind of meander forward. But yeah, we're right at about 1.5x leverage there to the upside. And so, but Randall, thank you for being here, my friend. I appreciate you. Jackie W is here. Sam L is here. Griffin Jones. Let's see. Ranch. I'm thinking I want to stay in USO. It's like a finger on the pulse. Yeah. Well, like I said, I got to go. Wow. But like I said, I mean, taking off that winning trade seems to make a lot of sense to me personally. But again, it's up to you, man. You are the judge, jury, and executioner of your portfolio. So it is your decision at the end of the day. But I appreciate you guys, man. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I am jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
It's time to trade smart, post PDT rule elimination. Now, traders of all account sizes have more flexibility than ever before. With rapid order entry and bracket orders that let traders manage entry, profit target, and stop loss, all in one ticket. Tasty Trade.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Pay for backtesting? Nah. Trade that capital instead. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Check out Tasty Trade.
Hello, everybody. Tim Knight here, and happy Tuesday to you. We have a green day on our hands. Like yesterday, I got stopped out of a bunch of stuff at the opening bell. Unlike yesterday, I did not rush right back into it, half an hour later. My trust of this market has been diminished a little bit today. Don't take too much from that, but I've definitely cranked risk down somewhat. Still purely short, and a lot of different positions, but took off the big ones. Took my profits on my diamond short this morning, got stopped out of my EFA short right away. So although my risk has dropped precipitously from like 250% down to about 95%, it was done mostly by way of a few big ETFs. So it's a green day, as I said. ES, NQ, RTYYM, all green, with tech stocks in particular being strong. The NQ's up over 500 points, almost 2%. So let us tiptoe into the tulips here, check out the charts together, and get a better sense of where things are up to date. So the diamonds have been monkeying around for 3 days now. We had a nice tumble on Friday, and it looked like that would be exacerbated by yesterday's action. We had a nice bearish engulfing pattern. But this illustrates nicely that candlesticks aren't particularly predictive because they're based on like 1 or 2 price bars. And today, it's just shrugging. The price range we've been in is roughly similar to yesterday's, although the bar is green instead of red. So as I said, I got out of my entire diamond short, and I'm just kind of waiting. This could rally back up to the trend line perhaps, or it could tumble away based on some nasty earnings, or it could just sit there. It's not clear enough for me to bother sticking around with that particular one. What I'm watching especially closely, of course, is semiconductors. Now, this is kind of an exaggerated view of it. This is SOXL, which is the leveraged bullish instrument on semiconductors. And you can see here for a while, from the end of March until pretty much here, the start of June, so basically all of April and all of May, it was essentially just blasting higher. And the first big shot across the bow was here, big plunge, and then it shook that right off for a couple of weeks and blasted to its lifetime peak on June 22nd. And that was kind of it, because from there we went from $302 down to $116. So just in a few weeks lost almost 2/3 of the value. And what's been happening recently is on Friday and today and yesterday, we've been recovering. So as you can see here, we bottomed on Friday. And so we opened weak, closed strong. Yesterday, opened strong, closed weak, but still had a net gain. And today, opened strong and are currently still strong. We're up on this one, a hearty 15.3%. I emphasize again, this is a leveraged instrument, triple, I think. But you can see from the pattern, this does not exactly scream new bull market. To me, it screams get out while you can. So because we've basically done the easy part, we've bounced right back to the pattern. So we'll see. I'm lighter on semis than I was because they move rather violently. And the aforementioned stop outs were largely in that zone. And I really haven't wanted to get back into them again. So if we plunge tomorrow in semis, great, but I won't partake of it as heavily as I would have. Although I did, based on today's strength, get a little more aggressive on my SMH September puts. EWY is sort of a different flavor of the same argument. This is South Korea, very, very similar in setup. Different drawings here. We broke this uptrend a while ago, and on the whole have been in this descending channel for the past couple of months. You can see just you can imagine in your mind's eye a parallel lines just plunging right through there. XME, which is metals, is like a lot of metals having a much needed bounce today. There were so many sectors that were terribly sold off. Gold, silver, miners, platinum, palladium, Bitcoin. Well, Bitcoin's been recovering recently, but almost all assets really sank hard with the semiconductor slipperiness, and that's bouncing to some degree. And of course, the more badly things are beaten, like to take an extreme example, like American Bitcoin, something like that, it can easily bounce 7, 8, 9% when it opens, because they've been just mushed. So here's XME, which is up about 3.5%. And it's a really tough read because this thing is slogged down for months now. It's not something I would trade. But I don't suspect any of these counter-trend rallies are going to yield any lasting difference any more than, say, this last one did. But if forced, I would rather be long this than short right now because metals have been so badly busted. Here's another one, GLD, gold. On the one hand, we've got a big old right triangle pattern there, very bearish. And on the other hand, we've got room to bounce here, plenty of room to bounce. So I could see it maybe fighting its way back to the baseline of that right triangle, perhaps. The miners, GDX, are along for the ride, definitely, up about 4 1/3%. Here again, a huge overhead supply, but it's a little ways away. We could rally on this I haven't calculated the percentage or anything, but if you said it was another 10% or more, absolutely could believe that because it's so deeply sold off. And just one last metal example, silver tends to be more volatile than gold, and it's showing that here too, up over 4.25%, and plenty of potential upside. Not as clear sort of where the line in the sand is, maybe as low as roundabout there. So the mania is definitely busted. And a lot of people are comparing the metals mania that terminated late in January and plunged thereafter with the semiconductor mania. I've tried to line those up in some kind of analog. It doesn't really work for me. I don't, from a narrative perspective, I get it. Yeah, big run up, everyone's buying it once, and then it breaks, then it falls a lot. Okay, it's easy to say in a sentence, but when you actually overlay the charts, and I love analogs more than anybody, I really wanted to see some kind of tick by tick tracking. It didn't happen, but you do see that in terms of just the psyche of people getting all wrapped up in that, like they did with SpaceX, for example. But in SpaceX is getting a rare green day here. I think of the prior, if my count's right, of the prior 13 trading days, 2 were green, and the other 11 were red. And of course, red and green don't necessarily mean the change is up or down for the day. That's just the color of the candle based on the relationship between the open price and the closing price. But red usually is not good. But it's interesting because I noticed earlier today they had undone yesterday's drop, and we're actually pushing toward Friday's high, but it's not sticking around. We're up 2.73% right now, and if we change the granularity of this to say 5 minutes, you can see there was this burst of buying excitement. The drop's finally over, and it stalled out and then started to waterfall down again. I also noticed, like moments before the camera clicked on, I was curious, have they mentioned when they were going to have earnings? Just came out. Not the earnings, but the announcement. They're going to release earnings in, I think, 2 Tuesdays from now, August 4. So that should be interesting. And there'll definitely be a lot of people listening to that one. So we've got a real rock'em sock'em early August for SpaceX, because as I say on a daily basis, August 11 is the first release, and then now we know August 4 is going to be the first earnings announcement as a public company. So let's just say between August 4 and August 12, SpaceX is going to be a very interesting critter. Because it's done so poorly, the whole space sector has been quite weak, although like a lot of other stuff today, it's been so badly battered, like 70 and 80% drops, that they're getting a little bit of a pop just because at some point someone's going to buy. Here we see Firefly Aerospace up over 6%, and Planet Labs up over 3%. That's nice, from a kind of, if you get your blinders on to the rest, but it's really immaterial in the grand scheme of the chart. And I've also noticed that the chilly aftermath of the SpaceX IPO has completely cooled interest in these sort of pre-IPO funds that are traded. One in particular, 21 Capital, which has the Roman numeral XXI as their ticker symbol, lifetime low. Even though SpaceX is a little bit up today, it's not especially germane because it's not like this is really more devoted to all the things that haven't gone public yet. It's just a hodgepodge of probably things like, Anthropic and Databricks, things like that. But the peak excitement on that terminated apparently on May 5th. And we've slipped on this from 9 down to like 4.4. Oh, incidentally, I meant to mention regarding SpaceX, and I sort of joke a little bit about these YouTube headlines. I noticed yesterday's YouTube title was something like, Tim says $90 is next for SpaceX. No, I mentioned just off the cuff that, wow, if earnings don't go great and the lockup release has a lot of sellers, you could see 90 next. I mean, it was just like pulled out of nowhere. I'm a chartist. I'm not making any kind of projection about where the price is going to go. Could it go to 90? Absolutely, which is why I said it. But the chart, there's nothing to go on. I'm happy to state specific prices if there's some rationale for it, but I just threw a double-digit number out there that seemed plausible as a maybe. So please don't take it as like, I'm projecting $90. I have no basis for that. They could have earnings that blow people's socks into the air and go flying higher for all I know. So there's from a charting perspective, I mean, it's based on history. There's very little history to go on. Happy to talk to you about Walmart, which has decades of history, but not SpaceX. I just sort of like look at it bug-eyed as it goes down every day. I still have puts on Costco. I sold half of them today just because there's other fish to fry. It's doing fine, sold at a profit, and of course the remaining position is still profitable, but it's kind of a meandering little critter, but still short Costco by way of those puts. Carvana is recovering a bit today. I sold a little bit of those today, those September, January. No, they are September, I beg your pardon, puts. They're doing well, but there's kind of two patterns cooking here. One of them is this huge diamond, which is complete, but the other is this trading range we've been banging around within. So we're kind of at the lower end of that range. I think what will snap this out of its stupor will be its own earnings report, which I think is, the memory serves, the 29th. FXI is a much needed bright spot for me today because it's taken a nice tumble down more than 1%. It's my biggest options position. Those are also September's. Those are $36 put, so that's going the right way. I appreciate that, FXI. Lennar, also short this, down more than 1%. I mentioned this one yesterday because of this tremendous head and shoulders top. But, it's really all about SMH at this point. As I said earlier, we've got support here, which was tagged on Friday, and we've got resistance here, and it's not to the penny. I mean, it's in this vicinity. If we keep going up, I'll get more and more reluctant to keep moving this line, but this isn't a bad approximation of resistance right now. The easy part of the bounce, I think, is kind of done. I mentioned China doing the right thing. It's some very welcome red on the screen today. Alibaba's down 1 2/3%. Baidu's down a bit more than 1%, so those are both going the right direction. And there's some other items that I'm short that are behaving themselves. We got Shopify, which has a big triple-digit PE ratio. This is down 1 1/4%. I like the exchanges right now. Chicago Mercantile's down over 2% and sort of J-curving the right direction here. New one I don't think I mentioned is Dynatrace, DT, which is down. I shorted this one yesterday, or the day before. It's down a bit more than 4%. And another exchange, Intercontinental Exchange, ICE. This is down about 1.5% below that big pattern right there. So as I say, the exchanges, for whatever reason, are looking real good. One last individual item I like on the short side, which I shorted about a week or so ago, MongoDB, MDB. And this is down almost 5%. It's a sloppy chart, really no pattern to speak of. Very, very sloppy, but behaving itself nicely. Just to wrap things up real quick, here's the ES, inscrutable. We've been banging around this range for months. It was big down Friday. It was all over the map yesterday and closed basically unchanged, and it's big up today, undoing Friday's damage. It's just whiplashing and whipsawing, and as I said, tough read. A little easier to read, I think, and more important for my own purposes is the NQ, where we've got these kind of chapters of a book, these different chunks of range, which, as with the ES, we've banged around Friday, yesterday, today, but we're at least close to that important resistance level beneath all this range that we were trapped within. So hopefully tomorrow we'll get some selling to resume and undo this. Okay, so I'll see you tomorrow. Thanks for swinging by. Good night.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity,
and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
So I see you're taking an interest in open interest. Open interest, open trades. It's right there. Imagine all the trades are in XYZ at the same strike and expiration. Day 1, Brittany buys 4 options to open a trade. Dean also opens, but he only buys 2 options. And then, closing bell. Day 2, open interest is 6 because of yesterday's trades. Now, Jessica gets in on XYZ, and she buys 2 options. Day 3, since no one has closed any trades yet, open interest is at 8. Watch this. Brittany closes her trades, Dean closes his, and Jessica keeps her eyes open. On day 4, open interest is now down to 2. That's because Brittany and Dean closed their positions and there are only 2 still left open. That's how open interest is different from volume, and both of them are parts of liquidity, which is something we look for before we enter into any trade. Pretty simple.
Explain pot odds.
Pot odds is my favorite term, but pot odds in the poker world or gambling world refers to having a greater payout than your implied odds would suggest. So let's say I have 3-to-1 odds to win a pot, but the pot is giving me 4-to-1 odds to make that bet. I would have a positive expected value over time. So in trading, let's say you have a defined risk debit or credit spread that's currently at a max loss, and let's say there's 30 days left to go. There's not really a reason to close that position because you're already at max loss. You can only go up from there. So in that scenario, that would be a positive pot odds scenario, or something that would give us pot odds to stay in.
We're back. You're watching Tastylive. Final 30 minutes of the trading day, so that means it's time for last call. I'm Chris Vecchio. He's Tom Preston. TP is what his friends call him. Hey, TP, what's up?
Together, Chris and I form the Pro-America team. We were just commenting about how nice it is to be American and not, and be free from the British thumb, as it were. Chris,
sorry, did I get that right? Our parent company is a British conglomerate?
Yeah, but that's okay.
Not quite so free yet, TP.
That's okay. Money's green. But the point is, what did you say? 65 countries. Once every 6 days, a country celebrates its independence from Great Britain. That's less impressive for them than it is the scope of the British Empire. That's really what it is. I mean, they were everywhere.
Yeah. They're still in the Falklands, as we come forward from the recent games between England and Argentina. Yeah.
So, all right. So I was frustrated by the rally today. My big trade was doing the unbalanced butterfly in the SPX 0DTs, bought the 47.30, sold the 47.50. Bought the 47.60, so a 10-point butterfly with a 10-point short put spread attached to it. As I described back in my 1 p.m. segment, I put that on for a 60-cent credit, took the embedded vertical off for 15 cents. So I locked in 45 cents per spread. And I thought maybe, just maybe, Chris, we'd get a sell-off. And once I would nail the middle strike of the butterfly. Alas, it doesn't seem to be the case today.
No, it does not seem to be the case today. The market kind of just jumped up here and then stayed pinned all day. When I was last on, we were up around 2%, so we've slouched off a little bit in the NASDAQ, maybe 0.1% here. I don't know if that's really anything to write home about, TP. But it's been a really strong tape for most of the session. It's been led by our semis here, which have had a really, really nice bounce back, up 4.4%. Curious, I mean, I have some action going on in TSM, ASML, SMH itself, but how are you handling this move? Because it's been a nice little, we'll call it 2-3 day correction after that gap opened lower on Friday.
So I'm doing pretty, just in spite of myself. Long Apple, Apple's making money. Just going down the list of my positions, there's CMCSA making money, CMG making money, Coinbase is losing money right now. I got long Bitcoin. I sold some put spreads in iBit and Coin, COIN. The making money in Hewlett Packard, a little bit of money in Halliburton, losing a little bit of money in Google. It's just a mishmash, but overall, this is a pretty good day. Still short I'm still short the call spread, the 662 half call spread in Meta with 6 days. So what is that, next week? And I'm down, actually, no, I'm up a couple of bucks on that trade, but I would like to see Meta win. As we talked about, like, you know, can you show me on the chart where Meta hurt you? I would like to strike a blow for option traders everywhere, and make a little bit of money on Meta.
Yeah, I'm with you. I mean, I jumped into a Meta position yesterday. It's here on the follow page, 31 DTE, the 615, 610 short put spread, which, you know, could still put it back on for maybe what's still an appealing setup right now. 189 in credit for $5 wide on that strike. Better, maybe risking 3 to make 2, close to 60% probability of profit. Why those strikes? 615 sits below the 50-day moving average. TP, it also fits the taste and mechanics criteria. I like when those two things sit on top of each other and they can hold hands and walk into the sunset.
Right. And the whole point is you look for where, or I look for where, and granted, I don't use charts very much, but you look for where everything sort of comes together. There are a lot of symbols out there, especially with the earnings coming up this week, that just, the products aren't tradable. I mean, tomorrow we have Tesla and Google. Those are the big ones. And those are pretty liquid. You can trade those. But aside from that, I sold a put in CLF, Cliffs Natural Resources. GM reported this morning. Halliburton reported this morning. GM, hey, Chris, I don't know what the stories are, but I guess Halliburton beat estimates and the stock was down. GM, I guess, beat estimates and took a write-off in electric vehicles or something. I didn't read the story very closely.
They raised their 2026 profit outlook by $500 million, and their Q2 core profit rose 30%.
So General Motors is up 5%. Halliburton, HAL, is down 5%. I sold a put in Halliburton. Did I do a trade in, filled. I sold a put spread 31 days in GM, sold the 75.77 in the August expiration, took in 63 cents of credit on that GM put spread. It's not like I'm giving up. I mean, but this rally, I was completely wrong about crude oil. I'm still bearish on crude oil. Didn't
Ilya help you there?
Yeah, well, Ilya, so last week when I did the last call with Ilya, we had just enough time, 2:30 to 3. The market was still open. He was, yes, I am bullish on, and I can't do a Russian accent anymore, but yes, I am bullish on oil. I said, okay, fine. I think the CL options were closed, so I just went into USO, sold some put spreads in USO, took them off today for a nice little profit. Thank you, Ilya. However, now I think this whole, the intensity of the bombing in Iran and the rally in crude oil, I understand that. But the concurrent rally in the S&Ps and the NASDAQ, for example, it doesn't make sense. I mean, whatever. Nobody seems to care. AI is going to make money. AI is going to be our salvation. And if you're in the AI business or making the chips for the data centers that run it, you're going to be fine.
Yeah, TP. I mean, yesterday I put on the short iron condor, but what I'm sitting at in 27 days right now from a while back when the market was still figuring out whether or not it wanted to fall over, I had on a long put spread, which perhaps I should have monetized a bit sooner. But I also have 2 short put spreads on here. So I'm a long put spread sitting in roughly like the 97, 96, and then 2 short put spreads. So I'm comfortable as long as the market stays below, we'll call it what, $97. So I got some wiggle room here. I got some wiggle room both on the upside and the downside right now. The market can just chop around here. I really don't give 2 hoots what happens. But if we get a bigger break to the upside, maybe we have a reconsideration.
So the question is, do I trade Google and or Tesla? I like to, instead of saying Tesla.
Can I tell you what I'm doing there? Yeah,
what's that? I'm sorry?
Tesla. Tesla, not Tesla Q, just Tesla.
No, I like saying Tesla. Because, in Massachusetts, we don't pronounce ER. It's everything's right? So if it were Tesla, we would pronounce it Tesla. So I just go backwards and call it Tesla. But if Tesla announces tomorrow morning, which way is the skew? The stock's at 377.82. So right around 377.50, down $5, up $5. So the skew is pointed to the upside. Chris, expected move is $21. Help me with the math here. 377 minus 21 is what,
356.
So the 352 half, 355, it would be right there. I can sell that for maybe 48 cents. It's not enough money. I would like to see a bigger credit, but I have to push it up beyond that expected move. And by the way, just so long as everybody knows what that, if you're looking in the upper right-hand corner, that plus minus 21.41, that's a weighted average of the at-the-money strangles. So it's the trick we used to use on the floor before we had computers. So we just used to take an average of the at-the-money strangle prices, and that's what that number is. It's best in situations like this, where there are 1, 2, 3, 4 days until expiration. So I'm going to just do this. I'm going to sell. I'm going to try 49. The mid price is 49. Let's lock it in at 49. Ship it. Filled at 49.
Yeah, TP, I know the market's right now pricing at about a 5.6% move, at least when we were looking at it earlier today. Similar pricing right now. But there have been bigger swings here in Tesla.
Oh, yeah.
Someone pointed out in today's Confirm and Send, we've seen gaps 8, 10, 12%. So if you're thinking that the market can move a little bit beyond that, you have to give yourself more wiggle room, even if you want to play the earnings for a bit of an inside move here. And that's exactly what I did. I went out. I went to the 355, 350, and then also the 410, 415 here, which again, $5 wide. It was a little bit healthier before when I got in, but around $1.50 a credit or so. And you're risking 354 to make around 150, near 66% probability of profit. So I took a little bit less upside potential to go out to the 1 standard deviation instead of just the expected move.
Yeah.
Tesla can be jumpy like
that. Makes sense.
Right? Tesla is not just an Elon Musk stock, it's also AI right now. Yeah. And there's these merger rumors with SpaceX. So I almost feel like I don't want to do this now that I'm speaking about it, but I'm in.
Well, no, but you know what? The point is, it's, I do one of these, okay? I sell one put spread. Worst case scenario, I lose a couple of $100. I don't want to lose a couple of $100. That stinks. I don't want to. But I understand that's part of how a trader makes money. You have to take risks to make money. Okay, whatever. So you got to be comfortable with that. One of the things I want to point out to folks, Chris, is if you look at Google right now. So Google, the earnings come out on the 22nd. We have a 1 day. We have options expiring tomorrow. 1 day. And the expected move for that 1 day is 24.71. As we go past that earnings line, that purple line in the on the option grid, the 3 day expected move is $20. In this case, I'm going to use the 24 point expected move from the 1 days, because that's going to be a little bit more sensitive to what the earnings might be, in my opinion. I would take that extra $4 of room to do a trade in here. So if I went into 3 days and 24, let's say make it 25. What's 348 minus 25 is 23. So I have the 220s. Markets are so wide in here. I can't do this. No, I can't do this. I'm sorry. I was looking at the wrong one. I'm sorry. I was looking at the wrong one. I was looking at the 200 handle. So 320, what did we say? 325?
323.
323. So the 322 half.
Days, are you getting the price 77 cents a credit on a $5 wide strike?
Well, no, I'm doing a 2.5 point. No, I'm doing 2.5 point. So I'm buying the 320, selling the 322 half with 3 days to go. 35 cents. That's really not enough credit. I don't necessarily like that. Unless I'm doing something wrong here. No, I am right. So 349 minus 25 would be 24. If I want to give myself a little bit more, I could go up to the 25s. It's not really it. I don't know. I don't like the credits in Google right now. I like the credit better in Tesla. I don't like Google. I'm going to walk away from Google. I already have a position on in Google. I already have the in the August expiration. I'm short the 325, 330 put spread. I'm down.
That's what I'm doing too. That's exactly what I'm doing too. And I found that to be more appealing last week when I was looking through this. And today, is there a reason to take this off or maybe shift durations, shift cycles? I don't really think so.
No.
I'd rather just keep this on. And like you, I found myself putting on this directionally neutral short iron condor in Tesla right now going into tomorrow's trade. So TP, real quick, I think the production team should have it lined up. We have a quick refer a friend. Can we do a quick refer a friend? That allowed? That illegal? I think that's allowed. We'll get that going here on the screen. As we do, just reminder, tastytrade.com/refer a friend, tastytrade.com/refer a friend. TP, $100 for you, $100 for your friend. It's a pretty good deal. Obviously, has to be a new account, so there's that. Tastytrade.com / I should say, refer a friend. TP, speaking of friends here, one thing that's been a good friend to me recent sessions has been that 50-day moving average in a bunch of names. If it's been ASML, if it's been a TSM, today it's the NASDAQ we're trying to climb back through there. Some of these dips that I've been buying recently have turned out well so far.
Chris, in his 50-day moving average. Is that how you convinced your wife to marry you? Was that the line? Was that the line?
Pretty close, because it involved Gilead and their hepatitis C drug. And when that went to market, some options that I had that were out of the money, that rang a bell. So one of my favorite trades I've ever had in the books. TP.
There you go.
Certainly not a tasty trade. Let me tell you, when a stock's at $60 and you're buying $90 calls, it's not a tasty trade.
Well, see, right. Anyway, all right. So the 50-day moving average, we are. What are you doing in TSM, Chris?
Well, TSM, when we had that initial pullback last week, I got in at the 400, 390 short put spread here. I still think, considering its $10 wide strike, even with today's move, there's so much volatility still pumped into this product. You can get about $3.05 on credit. So maybe you adjust that, maybe you pull it forward a little bit. But we bounced at an area where the market has been holding up since early May. I mean, I just drew a straight line at 385 here on my screen, TP. Market doesn't seem to want to go below there. And today we've had this really nice, healthy rebound, past two sessions, really. I think this is definitely worth riding out into, and probably a position I'm going to start rolling forward if we continue to see this upward price movement, because quite frankly, the semiconductor story hasn't changed. It's just the fact that you have a bunch of leveraged junkies who are over trading this stuff and are getting blown up on the way out.
Oh, well, yeah, the leverage is a growing problem, and packaging crappy debt into bonds and selling to the public as bonds is another growing problem. Here's what I see in TSM though, Chris. And I'm not disagreeing with your 50-day moving average. Don't think this is a personal attack on the 50-day moving average. But
personal attacks.
The skew is pointed towards the put side. A little bit. Not dramatically. Not like, oh my gosh, look at those puts, they're 2.5 times what the calls are. That's not what it is. This is, compare, let's say, go out to August, look at the 420 puts, 22, they're at 22.90, 430 calls, 23. Actually, no, you know what? No, I'm wrong. Chris, I'm wrong. I was looking at 10 points. I was doing 10 points, not 5 points. My mistake. The skew is pointed towards the north. So, yeah.
Ever so slightly.
Chris has got his 50-day. I've got my skew.
Maybe we're there.
I'm looking at 31 days. If I sell the 395, 397 half, so 2.5 points divided by 3 is about 80 cents. Yeah, I can sell this. I can get 80. Markets are wide, but I can try it. 87 cents. Let's ship it. TSM. Nothing done yet. Nothing done. Okay, fine. I'll work that order. I have 9 minutes.
Yeah, and something away from the semiconductor space today. I know it got slammed the other day on Friday. Some hack related to Coca-Cola. Who cares? Fits a criteria for a dip. I mean, I've been looking at this little thing for the past few months, TP. There's your 50, right? April, June, mid-June, now here again. Maybe it's worth a swing. I'm in at 31 days. There's not a ton of premium out there, but at the 80.78 short put spread, again, $2 wide, looking for around 67 cents. I got it a little bit under 60. Close enough for me. Good enough for me.
Yeah.
The criteria, move on.
Yeah, I tried to sell some puts in Coca-Cola last week. Nothing done. Didn't get filled. The problem, I'm looking at some naked short puts in there. It's an $82 stock, so the margin requirements on plain naked short options are expensive. It's like $1,500. And if you have larger accounts, not a problem. But if you're just kind of starting out in this, it makes it a little expensive. I think verticals going out to 31 days, maybe the 76, 78. No, that doesn't give me enough. Let's go up to the 80, 78. No, I got to fiddle around with this. I got to get my price for Coca-Cola.
It might be something like the 79.81. But I'm just sprinkling out different bets that are uncorrelated to each other. I don't think Coca-Cola's next turn, higher or lower, is going to be contingent upon whether or not another over-leveraged South Korean trader is going to blow up a semiconductor holding. But TP, that is just astounding. Not 1 in 30 traders in Korea. Not 1 in 30 traders. 1 in 30 residents of the entire country have been margin called as a result of that we just saw. That's just traders. 3% of the population. That's wild.
Nice.
That's a wild statistic.
You know what? They are firing. Good for them. Good for them. They're taking risks. They're doing it. You only live once. And now they know what a margin call's like.
Oh, God. It's just
it sucks. It sucks. It sucks. I've done back in a previous life in previous companies that we've created. I wore a lot of hats. One of which was sorting out the margin problems after every expiration. And so, we'd offer, we'd try to get people to send in money. A lot of times they would just send in money. And most of the time it wasn't huge. There weren't huge debits. There weren't huge margin problems. So they were slightly negative. Like they had negative option buying power, but as long as they closed out a stock position or something like that, or covered some naked short options, they'd be fine. But yeah, if you don't really understand the markets or trading, or you get wacky positions and you get a margin call, you don't know what to do. What do? You sell a kidney? I don't know.
No.
Is that on Kalshi? Can you do that on Kalshi?
Donate plasma. That's how you do it. Your body makes plasma.
I don't know if there's enough money on plasma. It depends on the size of the call. So anyway, where are SP? What's the SPX? Am I going to get a little sell-off? No.
No, you're not. No, you're not. We're both trapped in hell. I'm still top ticking my 7,600 MES position. Although, a lot of the exposure that I've put on recently is having a nice little turn today. The worst thing that I've got going for me today, I think, is actually gold here. Yeah, gold's been a dog today. I mean, I'm trying to make sense of this. Maybe I have too much macro on the brain, which is always a problem for me. But Ilya has too much macro on the brain, and he's been doing this right. So I think it's just a me problem.
Well, what's Ilya? Is he long or short gold?
he started getting long gold a few days ago, and he's like, look, oil keeps going up, yields keep going up, the dollar's going up, gold isn't doing anything.
Yeah.
And today's another day. Yields up, oil up, dollar up, and gold finds itself trading higher here. So, regimes change in the markets all the time. Relationships, correlations, they tighten, they loosen up, they break apart. Maybe something's changing here. But do you have any good read on gold? I mean, I'm taking a look at the volatility in the space. It doesn't feel like there's a great deal, and vol has continued to come in, which to me does not make it alluring for how I look at gold.
I'm short an iron condor in GLD. Where is that? I got to find it in my positions. I got to dig through it. Anyway, I'm short an iron condor in GLD. And I think that was, I did a cherry bomb on that last week or the week prior. And I just think gold, it's been noodling around for the past month or so. It's probably going to continue to that. I would sell an iron condor in either GLD if you want an ETF, or GC if you want to trade the futures, or the minis.
That was actually your Friday, believe it or not. It was your Friday cherry bomb from July 10th.
Yeah.
There you have it.
Right. The futures cheat sheet. So the micros, what is that?
359.
M or 10ZQ6.
M10ZQ6. Too much. Too many
symbols.
Too many symbols. Hold on, I'm just putting on your trade here, the 398-400. This was the trade that you had on from your cherry bomb the other day, by the way. Short iron condor. So you're still riding this out at 10 days to expiration. Even now it's inside the move for what it's worth. The plus or minus $9.91 is inside both of your short strikes right now.
Yeah, I'll hang on to it. I mean, it's a defined risk trade. I'm okay with that.
Do you ride this into the ground, or are you past 50% profit threshold at this point? How are you managing it?
No, I'm going to hang on to this stupid trade. I don't have a reason to roll it yet. I suppose I could. I'm just kind of letting it go. I just have a hunch. That's it.
Okay.
It's a defined risk trade. I'm not worried about it.
Got to trust your gut. TP, we have less than 2 minutes to go until the market closes here. The NASDAQ is trying to close near session highs. I know that you've been kvetching here a little bit about SPX not giving you a sell-off, but does today's movement change your perspective at all? It feels like today is a nothing day. I know it's a rally here, but where the heck are the traders? We're not going to cross 1 million contracts here in ES. Is this just all pre-earnings calm before the storm?
The liquidity stinks. The liquidity in this stuff stinks. And what I'm seeing is what I saw earlier today, Chris, in my heat map was that there was a lot of red. A lot of little stocks were red. There were a few stocks, like I think it was Google, Nvidia was unchanged, Apple was up, I think. There were a few big stocks propping up the market with the S&Ps up about $38. And then it slowly started to get green for the rest of the day. So, yeah, I mean, if you're bullish on this stuff, if you think that we're going to ride through 82 or 83 or higher dollar, barrel oil, and think that, the market's just going to keep moving higher, yeah, you can sell put spreads in the SPX, Solomon SPY. Just get in there and trade. That's my point. I have no idea which way the stocks are going to go. I have a hunch. Whatever. I was betting on a sell-off. Didn't happen, but I still made money. So what do I care? I'd rather make money than be right.
That's all that matters in this business. I mean, you got to think of yourself like a baseball player. Best baseball players, TP, they hit 300. They got to hit 3 out of every 10 times.
Right.
You don't need to be more right than wrong. S&P 500 slinks into the close because there's no one trading this market today. 954,000 contracts traded, 75.45, good for 62 points. Higher. All the big earnings are coming out tomorrow, but that gives us a VIX reading. Did we close under 17? We did 1693. Folks, we are out of time here on Last Call, which means it's overtime next. TP, we'll catch you tomorrow.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today. Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Stocks jump. No idea who pushed them there because this was one of the lightest volume days that we've seen in a long time. It is still Tuesday, July 21st, 2026. This is Overtime. I'm your host, Chris Vecchio in New York. He's Ilya Spivak in San Francisco. We're here for the next 30 minutes as we wind down this trading day. A trading day that is remarkable for many reasons. Oil is up, yields are up, and gold does not care whatsoever, of course. Nor does silver or copper, which, Ilya, we promised a conversation earlier about that.
Yes, we did.
It's a beach ball. We also have to talk about the dollar, which continues to run here as our U.S. Treasury yields go up and rate hike odds continue to rise back. But all that seems to be tied to oil, which, Ilya, we have the sweet nectar of earnings ahead. Who cares what's happening in the Strait of Hormuz? Does that remind you of where we were 3 months ago? Who cares about war headlines when we have money to count? Ilya. So today, the market focused perhaps tomorrow on Alphabet, on Tesla, on the earnings that are coming here henceforth, because folks were just painting, well, the windows today. Window dressing, I think is the expression. It is. I'm not guessing. 968,000 contracts here. So no one Nothing. This is usually
Nothing.
good volume for like noon. This is not good volume on the course.
This is why, I mean, you, needless to say, you're absolutely right. And this is why I don't really put a whole lot of stock into anything I'm seeing in these markets today, because this just looks like dispersion, like the kids were left to wander in the playroom without the teacher, and they just dispersed into various corners. Somebody's eating Play-Doh over here. Someone is trying to bang their head against the wall over there. There's no rhyme or reason to any of this.
It's so demeaning. That's what you make of the market. Just sitting around eating Play-Doh.
I mean, the volumes are non-existent. Market relationships, even versus where they were yesterday, are not holding up. There was no data. There were no headlines to inspire any of this. And there's obviously no conviction. Yeah, I'd say we're just eating Play-Doh today.
Sure. Yeah, maybe. But we're certainly not moving anywhere, whatever we're doing with this market. It definitely feels like this is a market that got a little bit of a good news tailwind out of China. They're trying to take more steps to stabilize their markets, Ilya.
Well, we've heard this song before. They haven't done anything since before they exited COVID lockdowns to do anything meaningful to this economy that's actually worked. So, Godspeed. Godspeed,
of course. But if they're doing things to shore up the market so that the semiconductor pullback doesn't drag down the rest of the financial sector, which is one of their concerns apparently.
That could be something.
Semis do get a nice little tailwind off of it today, 4.5% higher. I'm just thinking about what I'm trading here with respect to that, Ilya. There are a few positions that I have on in this space. I'm going to just alphabetize this so I can find them easier. ASML, for example. This was put on with Liz on a confirm and send a while back. The 1680, 1640 short put spread. That still means that we are looking at a short strike nestled below not just recent swing lows, but also that 50-day moving average. So I'm going to hang on to this here. It's a nice little bit of a winner today. I'm also thinking about Google heading into tomorrow's results. That's a short put spread sitting at 325, 330 TP&I. Both have discussed that here today on last call. I'm not going to put on something related to the earnings itself because just the pricing and the options chain through the end of the week. It's not exactly the mechanics that you want to stick to if you do things the tasty way. Other than that, Meta here had a nice, a little bit of a jostle here today, but we've had that rebound, 615, 610, still sitting in, still see no reason to get out of it. And then I suppose TSM and WDC. TSM's had a really nice run here the past few sessions.
Yeah.
So a lot of the things that I've had on the last week before that I was looking into getting into and, the initial pullbacks to the 50, we definitely overshot that. But now we're back to them, and if we were at this level the whole time, I'd be fine. You think, though, that someone like me, who maybe has turned a buck or two trying to buy that dip initially, we've run off the clock even if prices haven't moved up substantially higher, this is a good place to get out. Take the money and run. You see this as a sell the rally move today across the board in NQ and ES, no matter where you look, I think.
Yeah, I mean, pretty much. I think NQ is a great kind of stand-in for what this looks like. In my mind, it's sort of like this. Either this is a turn or it isn't, and we don't have any confirmation that it is. And until it is, the path of least resistance is we got a break of a range last week, and now we're testing the underside of where that break occurred. Maybe we'll overcome it. Possible, certainly, but maybe we won't. And we just don't know. And until we do, the status quo before is where I'm at. Now, of course, I wasn't trading the break. I was trading the topping going back to the beginning of June.
Sure.
And so I'm sitting short call verticals, basically just on the premise that as long as this thing doesn't have a scorching rally, I'm going to pick up premium and keep it moving. And if it falls off and there's a more significant sell-off, well, that's just a nice pound of icing on the cake. But that doesn't have to happen. But that's just the way I want to be leaning because I think the risk is tilted that way. But I don't think I would be looking at this as anything other at this point than a retracement with the bias favoring weakness. Now, tomorrow we might find something else. But today, especially with volume non-existent, I think that's where my head is.
In terms of expiry, I mean, how far do you have to go? So the way that I'm structured here, right? Let's see. There's M and Q, which is sitting at 41. That's got some time to go. There's triple Q Nasdaq exposure, which is at 24. So maybe I roll that this week. RTY double barreled and at 31 and 41. Of course, the long MES position. So that's kind of open ended until at least September 18th, in terms of when that would be expiring. When are you running into your consideration for whether or not you should roll any of your positions? Because you being in,
I got
like if you're
at this point.
If you're like 24 DTE here, right, and we can go into the technical discussion again about how the market, you and I think the daily chart here, about how maybe we're seeing hints of a turn higher. Maybe it's not a turn higher into new highs, but when you see bottoming patterns against the 50 recently, it's been
could be. No, I
there.
think your point is well taken there.
So like if you're at 24 days to expiration, you're handling it differently than if you're at like 45 because you have a little bit more of a room to burn. If you're at 2 days to expiration and you're sitting short the 7,600 puts, that's a very different consideration. So
you're
that's
thinking
why I'm
about
asking
this completely differently. You're right.
What's the time scale?
I mean, for me, so just to kind of start at the beginning, my sweet spot for the way that I approach markets is a few weeks in a trade. The ones that work typically are 4 to 5 weeks. The ones that don't work are typically 2 weeks or so, where usually within 2 weeks, the trade will either do something that violates the trade parameters, or it'll do something that looks bad enough to where I go, you know what, I don't want to have this exposure. Goodbye. So when I look at the current situation, I don't really have much of a forcing function. The soonest expiry I have is the silver, which has 31 days to go. Everything else is pushed out further. Crude oil also 31 days to go, which, by the way, I will happily, at this rate, I'll happily keep rolling it out. This is minting money so far. So if it keeps going, cool. It's the position for me that's working best right now. So as I look at all of this, then, I mean, as far as the indexes, I have 38 days, 41 days, depending on where. So in the Qs, 41 days, in TLT, 38 days. I mean, some positions I have, like, for example, EWZ, 59 days, and I've already been in it for 78 days. So these are sort of things that exist on a different time scale. But, my MSOS position has 178 days, and I've been in it for 252. So these are different ideas.
No, there
but
are.
The active stuff, I got time. I'm not doing anything.
So I was, looking for uncorrelated positions to things. One chart that stuck out to me, just this is totally removed from anything, but like Live Nation.
Yeah.
Which they are a monopoly.
They just had a big win. That Jay-Z show in New York was apparently quite the thing.
Let's do this. Let's just do the automated channel here, the regression channel from the bottom to the top here. Okay, that's a pretty nice looking channel. It's a pretty clean looking channel, Ilya, that we've seen since last November. And to that point, the market's coming into an area near 175 where it hit a high on September 11th, 2025. Hit there again in mid-June, bounced back, and then since then has pulled up. So I'm thinking 175 tomorrow. They have earnings coming up at the end of July, which is the only thing that throws me for a loop. It's next Thursday. So if you're sitting out at 10 days to expiration, you do have to worry about that risk. But it does mean that you're getting compensated a little bit here if you take risk around that level. So like 172.5, 170 here, building around, you're going to find appealing pricing is the point I'm getting at. Because if you're going 5 points wide or $2.50 wide, you're going to get to somewhere in the neighborhood of that 1/3 of the width of the strike. The 172.5, 175, in fact, is going to bring you right there and a little bit healthier. You want to get more than 80 cents or so. 83 cents would actually be your third of the width. So getting to 93 fits the criteria. But this is one of the things I'm going to be looking at tomorrow morning. I have my little watch list here. I like to go through in the morning, first through the mega cap names, stocks that are below their 1 month moving average, but still above their 50. And then I broaden that out to just any large cap stocks with market caps north of $10 billion, and just see if there's something I could pick up or trade around. Live Nation was one of those stocks that caught my eye today, even though it's down in an up tape.
Mm-hmm. Yeah, I mean, it's something to keep an eye on. I worry, as ever, that if there is some sort of a distribution that occurs in the AI story that really starts to take hold for U.S. markets, the way, maybe not even the way that it's taken hold in Korea, that's a much more liquid market, so of course it's getting rattled aggressively, but something that's a little bit more directional for U.S. markets, which has started to happen a little bit, but I would say is not really confirmed as a larger move. If that occurs, correlations are going to go to one, and these distinctions between, Live Nation or Schlumberger won't matter.
Correlations have been rising, by the way. I don't know if you caught this, but according to the Cboe's Core 1M index, I believe... Oh, never mind. That came back in. So much for that. Friday...
It depends on which correlations, right? Like rolling what?
Well, this is just their Core 1M index over the month.
Right.
There's Core 3M. So correlations had typed in on Friday. The Core 1M index was up at 7.57. It's now back down to 4.98. All right. Yeah, there's still high degree of dispersion in the market, which, we're in the middle of earnings season. That kind of makes sense. You'd expect idiosyncratic drivers to force stocks to kind of do things on their own terms.
Yes.
Yeah. Can we talk about the currencies, though, and what's happening with gold and silver? Because bonds took another dip to the downside today. They're off the low, but we did hit a new relative low considering where we've been in recent weeks when we tried to bottom in the middle of May. You see it in ZB. You see it in ZN here. ZN doesn't quite break down to a new cycle low just yet, but it's pretty darn close. A lot of this does feel like it's hinging upon what's going on with oil, which, I've been trading this across expirations here, Ilya, CLU, V, Z, long deltas. So maybe I have the same position on right now. I got back into a ZB position towards the end of the day. Why are you so confident right now that gold is able to shoo away these two factors? Is gold looking around the corner to a world that because energy's been so high, because inflation's so high, that we're actually teetering into demand destruction?
Yes.
And so gold can see that. It's like, yeah. You guys and your higher inflation. You remember my role historically? I protect your purchasing power. Remember when I had outperformed the S&P 500 since the year 2000? That was me. Why are you confident that now's the turning point? Because I love a good gold story. I could get on board again very easily. I'm only trading it short through 10Z because I have my longer-term bullish biases, and I don't want to get caught with a big loss being short because I'll hate myself for it. So tell me, Ilya, why is now the time that gold's turning the corner with yields up and oil up? What makes today different? Because today's starting to feel a little bit different.
I think it's the price action. And I think for me, it's always the price action first. I love my macro narrative, but if the macro narrative comes before the price action, you're liable to get your head caved in. I point out that the descending trend line here from the high that we had in the middle of May is broken, but that doesn't mean anything. It's a diagonal line, right? Right. But I mean, I think you could see it in the price action before you started to take out any levels, which is why I started to kind of nibble on the long side here and in silver. Because we've had crude oil surging for a while now, a couple of weeks. And gold and silver couldn't be bothered. Neither could the bonds, for that matter. They ultimately didn't really sell off. They're a little bit heavier today. They're heavier within their range today. ZB looks a little ugly. And I'm tempted to write it off, at least until I get a day of confirmation from ZN, which didn't break down today. But ZB does look a little dicey. And I got to be careful about that.
I want to buy into this, but I'm thinking about 22 and 23 when we had higher inflation. You're effectively making depending upon your window, right? If you're going to be long, just swing long gold the rest of the year, then you're certainly making a different bet than if you're shorting, selling a put spread that expires next week. But you're also effectively making a bet that the Fed's not going to hike. If you want to start building into a longer-term gold position, are you not?
I'm making the case that the Fed is expected to hike with near certainty now, and that probability is going to come down. And maybe the Fed will still hike, maybe it won't.
Are they hiking before midterms?
I don't think so. But again, it doesn't matter what I think. What matters is, what does the market think? And the market thinks that we're going to get a hike. The market thinks we might get one before the midterms at this point. I think the larger, and I'm not here to argue with the market. To me, what seems apparent is two things. The first is that raising rates will not solve the inflation issue coming from oil, because there is nothing that interest rate hikes are going to do to change what's happening in the Strait of Hormuz or how the president is interacting with the leaders in Tehran. None of that becomes better, worse, different, otherwise, if you raise rates by 25 basis points. It doesn't matter. It's useless. And everybody understands that. The only reason you would do
hurt
that,
oil production if you raise rates.
How much would you have to raise them?
Not much.
Does 25 basis points do anything there?
Did you see the Halliburton results? These companies are like, we're not expanding production outside of the Middle East. Our Middle East sales are down. We have no plans to start new operations.
25 basis points is going to change that calculus?
No, but I think it just going to make the cost of capital that much more expensive.
No,
for firms
sure.
That are already not interested in opening new operations.
Sure, I agree with you. I mean, I'm still long crude oil. I think the Fed's calculus, forget the oil majors for a second. The Fed's calculus is, why would I, the Federal Reserve, do this? What am I going to achieve with this rate hike? I would maybe check the slide in inflation expectations and tell them, hey, we need to stay anchored. But that's not a problem that we have. Inflation expectations are down. They're not up. If we look at break evens, we don't have an issue here. And so the question then becomes, okay, well, so what are you solving with a rate hike? What are you doing? Nothing. Unless you hike so many times that you crush the economy.
Can I just point out that we did have inflation expectations tumbling again by the end of June, but they are up.
Well, crude oil has popped back up. But we're by no means rallying.
No, we've stabilized. I mean, and 2.2% for long-term five-year inflation swap forward. So a five-year inflation swap forward. It's like 5 years from now, what are you betting on inflation will look like 5 years there henceforth?
Yes.
Why you would make this trade, I've never found a practical reason to do so from a retail perspective. There's lots of perhaps hedging reasons that a bank or institution, it's not something that a trade that any retail trader
It's why I like
consider.
break-even rates. I think they're a little bit, for me at least, more intuitive.
But this range here, Ilya, over the past 5 years, 1.9 up to 2.7, we're effectively sitting at the midpoint of it. And a lot of this is post-COVID, so it's a little bit higher inflation than we had typically seen. But even so, we can go back, right? 10 years, we can go back as much as you want. We're actually sitting in the midpoint of a lower range than we were for much of the 2000s. And I don't think anyone wants to go back to the second half of the 2010s when there was just no volatility, no inflation, low yield. I mean, that was a mess for the market.
Well, no, and look at the break-even rates, the 5-year break-even, the 10-year break-even.
They're fine.
They're not going anywhere. And by the way, it's not like they weren't responsive. They were very responsive. When crude oil started to rally at the start of the war, the break-even surged.
They jumped.
They surged almost tick for tick, especially the 5-year, almost tick for tick with crude oil. Since this crude oil rebound, though, they are not going back up. They've stopped falling, but they're not going back up. And that's telling you, hang on a minute now, there's something else that's going on here. The dynamics in these markets are changing. Now, of course, this is a very low volume day, so who knows what knuckleheads are running around behind this volume, knocking into each other today. This is not conviction. But at the same time, this has been happening for a few weeks now. So there is a pivot that's starting to creep here. Who knows what it is, but something is changing. And that's why I'm long gold. It's why I'm short dollar. It's why I'm long the bonds. I think the market is about to learn that it doesn't actually think quite so convincingly about these rate hikes.
Yeah, one's priced for September, 53% chance that we get a second one by December of this year, directly tied to what's happening in oil right now. So oil keeps climbing, those rate hike odds keep climbing.
Yes.
I don't know if we could separate the two. The correlations seem to be tight, Ilya. In fact, just for the sake of this conversation, I'm just going to run the correlation coefficient. Oil will set as the base, and we'll just slap on the ZQZ 2026 and the 1 week moving average rolling correlation between these two. Negative 0.96. So yeah, near perfect. As oil prices are going up, you're seeing the rate hike odds go up, or I should say the SR3 Z6 contract price goes down, which means higher rate hike odds.
Yeah. I mean, clearly there is a reaction function. And then you look at what's actually going on in ZT, ZN, you go, okay, but does anybody buy any of this? Or is this just speculative capital spinning? Because, again, like, okay, so they hike rates, and what? I mean, if you want to do demand destruction, okay, do what Powell did. Give us some 75 basis point back-to-back hikes. Yeah, you'll have an effect.
It could have an effect. Ilya, my favorite thing that I got working that I put on in the last 2 days is probably the Canadian dollar position, which yesterday decided to get
hats
short.
off on that one. That was clean, and it happened without the other the other pairs really participating, which is very telling.
Bounce at the 50 above a former major swing level from end of March, beginning of April, bullish engulfing bar. Decent pricing on the 71.5, 72 for 6C. I still think it's viable. What was really fascinating to me was that you get this inflation report juxtaposed against all the BOC commentary, where these policymakers have been all like, "Oh, we're real tough. We're gonna have to hike rates," and then inflation comes in, negative 0.4% versus negative 0.2 expected, and it's like, okay, guys, all right, tough guy, you're not hiking rates anytime soon with that attitude. You're getting a little bit of a playthrough here. The dollar index as we go into the close, still holding that former swing level, and now 4 days of gains off of that return to former resistance turn support. So today was broadly speaking a good day for me. Gold was the worst thing I had on the board in the follow account, which is still a profitable position, but it's not great. One final thought: someone did ask if I'm still holding long the end of year S&P 500 calls sitting out at 8,000. Yeah, 8,000 to 8,200 call spread. We could monetize this for a gain right now. This was predicated on the market after the rebound that we saw going through the middle of April, Ilya, right? Market had typically added on another 14% in years where we had seen those kind of rallies. So I just added 14% to where we were and found the 8,000 call. So I'm not taking this off until something proves me wrong, but I trust the history and the data to have put this position on.
I mean, there's nothing wrong with the history or the data. We're just going to have to see if if the sentiment situation remains the same. I mean, I think since mid-May we've seen maybe it's changing.
Maybe. Lots of grind the past few months since mid-May to that point, but to another point, overtime's out of time. So we'll be back tomorrow, same time, same place, 4 Eastern, 3 Central, right after last call. For Ilya Spivak, I'm in Chris Vecchio. Good luck trading. Stick around. Ilya's sticking around. He's here with Macro Money coming up next. You're watching Tasty Live.
See you there, everybody.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
How many trades must a man roll down before you say that he's afraid? How many times must we be stopped out before our portfolio's decayed? Yes, and how many times will our positions get too big before our minds can be forever swayed? The answer, my friends, is found at Tasty Trade. The answer is here at Tasty Trade. Yes, and how many days to expiration is best? And do I have the right chart? What's the right number of trades to put on to make my probabilities be smart? Yes, and how many episodes will it take before I know where do I start? The answer, my friends, is found at Tasty Trade. The answer is here at Tasty Trade.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
What are these markets trying to tell us? It's a quiet day. We have a kind of melt up in the stock market for no reason and on really thin volume. So, should we take it at face value, or are we setting up for something else? That's what we're going to try to explore here on Macro Money. This is Ilya Spivak, head of Global Macro here at Tasty Live. And we are going to get into the price action right away because we need to understand what the markets seem to be saying here and really start from that as a sort of first principle. Because when we look at the positioning here, and we'll start with the S&P 500 as we always do, it's not readily apparent that we're looking at something that really has changed very much, even as we have had this move in markets today on the top side. So we're basically still within the same congestion where we've been sitting. Today, we get a little bit of an upswing within that congestion. Perhaps most interestingly, we are touching the underside of the trend that we ostensibly tried to break down last week. We're testing the underside of where the congestion was before that break, and we're pointedly not making headway beyond that. Moreover, the volumes here are comically low. I mean, we're looking at some of the lowest volumes that we'd seen tracked on the continuous contract here since basically back here at the turn of the calendar year. So this is not exactly a rally with a whole lot of convincing momentum behind it, if only because the money is not there to tell us that it's pouring in to drive this move higher. So we get a bounce. We're getting closer to some sort of meaningful event risk. There was none of it really over the past 24 hours. As we get further down into the week, more of it is drawing closer. So perhaps we're getting a bit of portfolio rebalancing at the sort of speculative, more active, hands-on corner of where market participants sit. But as far as the kind of conviction you need to make a trend and really secure a break this way or that, that is not what this looks like. It's an even more dramatic picture for the NASDAQ, where the break of the congestive range last week was more clear, more definitive, and the retest today was more obvious and looking even more corrective than what's going on in the S&P. Perhaps most critically for NASDAQ, the most recent series of lower highs here continues to cap and define the price action. So if anything, what this looks like is congestion, breakdown, retest. It's difficult to want to short right here in this very spot, but gun to the head, if there was something to do here, it might be on the short side, because this looks like a breakdown that was confirmed today, if only by resisting a rebound back through its bounds. Now, it's all very tenuous again, and there's not a lot of conviction, so it's difficult to read into this or that thing when volumes are this low, and so the commitment that people have to this or that reading of the narrative is implied at relatively low levels. So there is still seemingly a big decision that these markets need to make before this looks like a directional move with legs, this or that way. Now, there's no shortage of conviction in crude oil. It continues to power higher. So we get this gap at the start of the week. The markets attempt to close it. That ultimately does not suffer so much, but also does not give us the unclenching that we might have wanted. We erase all of this attempt to take us back through the opening gap. We don't get upside follow through, and then today we do. So oil is seemingly trying to find its path of least resistance here and resolving that path is higher. What's interesting in that environment is if yesterday we thought, oh, well, maybe the sogginess in the S&P was related to crude oil having gapped higher and then held, well, today we get oil and stocks up in tandem. And again, these cross-market relationships are fraught when volumes are this low and conviction this weak. So read this all with a very large grain of salt. But it is certainly the case that if there was some kind of a war trade dynamic, this was not the day for it. Because we, again, see the relationship between stocks and oil is tenuous at best, and has been really until or really after the initial war trade from the start of the year. So here was where that began. This was where the war kicked off, and you can see stocks initially sell off with bonds, with gold, as the dollar is rallying, as crude oil is spiking, and all of this makes very clear sense until you get to here. That's the start of the previous earnings season. Obviously, we're just getting going on another one now, and stocks go off and do their own thing. And of course, that's not what we see in the bonds. It's not what we see in gold. It's not what we see in the dollar. It's not what we see really anywhere other than stocks. And just when we thought we were maybe getting those dynamics a little bit more consistent, the example from today is, well, just because crude oil is up does not mean stocks need to be down, or for that matter, vice versa. Where we are seemingly seeing a knock-on effect from oil is, again, in the bonds. There's a little bit of weakness here, so yields are a little bit higher. And what's interesting is we are still not breaking the lows that we've had here, going all the way back to mid-May. Now, this is the 10-year note. It looks a little bit more precarious if we go out on maturities to the long bond, ZB, the 30-year bond future. It looks a little bit worse for the wear. But again, on a low volume day like this, it's tough to make the determination that this is something to be firmly convinced of when you see the price action and you go, okay, yes, this is definitely telling me XYZ thing about relationships across markets or about what expectations are doing. Instead, it looks more like the markets are better given a little bit of room to reconsider what they're thinking day in, day out, because on volume days like this, on thin days like this, it's tough to ask the markets to look convincing. And if they then do something that seems incongruous, in my mind, it's probably not a bad thing if it can be made to make sense from a risk-reward perspective, to give things a little bit of time to figure themselves out. Because on a day like this, it's not clear that anything that we see in the cross-market relationships is necessarily something we can still count on when we get into tomorrow's session. Never mind even just the overnight. So as we look at then what's going on here, I think the path of least resistance might be to say, well, if the 10-year and the 30 don't agree, let's go with the status quo until proven otherwise. And that status quo is we're holding here for now. So the bonds are responsive to some extent to the higher reading on crude oil, but that's not necessarily something that you can take with you and take to the bank as a trade idea for now, or at least so it would seem. Now, gold really underscores that idea because of all things, what do we get with higher bonds and higher oil today? We get higher gold, which again, in the context of a war trade makes absolutely no sense because we can see how gold has responded to this war trade so far. Here's where the war starts. And really, is it any wonder? The markets, from the very beginning, approach the oil shock that comes with the start of the US-Iran war as an inflation risk. They drive up interest rates, they sink the bonds, they boost the US dollar. Of course, that is a toxic mix for gold, the perennial anti-fiat, non-interest bearing kind of asset. And so to see that gold, and by the way, silver too, is rallying today in this environment really starts to get you questioning, wait a second, do I really read this right? That the bonds are going to care here and extrapolate more rate hikes as a consequence of oil going up here? Or is that just a reflexive thing that's happening at the long end of the curve, and apparently only at the long end of the curve, in this thin environment where conviction can't be taken as given? The US dollar is attempting to kind of mirror what the bonds are doing. It's a little bit stronger today, and it's trying to re-engage the up move from late April, early May. We can see we tried to kind of take this out yesterday and over the prior several days. So far, it looks like we're trying to catch on this support, former range top resistance turned support. And of course, that range top was very significant. It held for the better part of a year until it broke right here. We're retesting it here. Maybe this is the start of a push higher. Maybe this is still congestion. We still have lower highs here going into this test. So we haven't crossed any Rubicons yet to the top side. And again, when you see all of this together, it kind of has you scratching your head, or at least it has me scratching mine, the same way that what's happening at the long end of the curve does. I'm not sure I believe it. And it's because you don't get this convincing story from oil to stocks to bonds, and frankly, never mind stocks. Let's leave them aside. They've got an earnings season coming up. Maybe they want to wander off by themselves again. But when you don't see conviction across oil to gold to bonds to the dollar, and it all kind of starts looking like a bit of a hodgepodge, the directional thread on a low volume day doesn't look like it can really be counted on one way or another. Now, not surprisingly, we don't really have much of a lead from the data today. A bit of relatively baseline UK jobs growth isn't going to really move the needle here. We have a little bit more event risk over the next 24 hours, but again, this is event risk outside of the US, and so outside of the kind of main sentiment narrative. We're going to get UK inflation data. We're going to get Australian jobs data that could factor into the conversation somewhat, but it doesn't seem like that's the kind of thing that we need to really move the dial on overall sentiment. Thursday, things get a little bit spicier. We get Japanese CPI. We get an ECB rate decision. But again, it seems like the big story now with what these markets are trying to tell us in the price action has to do with whether all of this fire and fury with crude oil has already created demand destruction at a time when global economies were already being squeezed by the contradictions of the AI boom and the inflation that was coming from that corner of the macro universe. And so if that's where the markets are going, then the big story is going to be less about what all of these things are, although, again, depending on what happens, they could factor into the conversation, and more about what's happening with the global business cycle. Because this is where bonds trying to find a bottom, gold attempting to turn, all while crude oil continues to power higher, would start to paint a story and would start to make sense. Because it could very well be that crude oil still has whatever geopolitical risk premium makes sense to add into the price because the US and Iran continue to lob projectiles at each other. But the story that the markets might be thinking in their ever forward-looking nature is we've got a turn in the business cycle that's maybe starting to ripen here. And all of this back and forth on crude oil is not going to mean a whole lot if demand falls out through the floor. And so when we look at then what's coming up, we've got S&P Global survey data for July. This is a timely approximation of GDP that's on the menu. Thursday, it starts with Australia and Japan, but the two main events are going to be on Friday with the Eurozone and the US because collectively they make up a huge chunk of global GDP. And the contrast here between the two is fairly clear. In the US, you've got an economy that's still growing at a reasonable speed. As ever, of course, these numbers are structured around a center line of 50, where that's neutral. Above 50 is growth. Below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. Take a look, for example, then at the US, where manufacturing is growing much faster than services. But of course, services is much bigger than manufacturing as a share of the economy. And so you distill to a growth rate a little bit better than services, thanks to this boost from manufacturing. And that's where you land. In the case of the euro area, you still get a pretty buoyant manufacturing sector. In fact, manufacturing is going to be relatively well supported across these major economies because all of it is catching the AI data center build out tailwind to various extents. Obviously, in the US, that exposure is greater. In Japan, it's bigger. In the Eurozone, in Australia, in the UK, it's smaller. So in the euro area, you get this really clean setup where manufacturing is growing. The service sector at 49.4 is in contraction mode and expected to stay there in July. And so the net result for the economy is standstill, nothing. Nobody's going anywhere. And that's the kind of thing you worry about occurring in the US if you were to have a situation where the service sector were to get meaningfully weaker. It is, of course, the dominant part of the economy. It's also where consumers primarily shop and where consumer demand primarily lives. Whereas manufacturing at this point is where the AI boom seems to be. Now, in the first quarter, as we've talked about at length here, the economy was almost single-handedly powered by this investment boom. Meanwhile, the contribution from consumption was, in relative terms, almost non-existent. In fact, in prior quarters where we've recently had similarly weak consumption, first quarter of last year, first quarter of 2022, GDP for that quarter was actually negative. So the AI boom was really the difference maker this time. And we already see that when that rapidly growing manufacturing boom, in addition, of course, to the inflationary impetus from the oil spike, starts to bear down on consumers and they retrench, service sectors slow into contraction mode. We see that already in the EU, as we've just said, and in the UK as well, for that matter. If that happens, that overpowers the AI boom because consumption is so much bigger as a share of GDP. The danger is that the same thing happens in the US and more broadly. Now, looking at this economic surprise index from the Citigroup set of indicators here, this one captures the whole world. And of course, there's nuances here, but you can already see there's a little bit of sogginess emerging here since the beginning of July. Now, the trend has been higher, and maybe that's around expectations beating relative to what those expectations were when the war started. I mean, we can clearly see here expectations for economic growth were higher, and then the numbers started to look soggier as we started to get into the war, especially deeper into it. And it seems like we've recovered some, not unlike what crude oil has done, but now we've started to pull back. And so maybe we're starting to sniff something out here cyclically. If these worries about crude oil were in fact stoking inflation, that might help to revive the war trade, but they're not. Break-even inflation expectations priced into bond markets are pointedly not going up here. They've stopped falling, but they're kind of anchoring here even as crude oil rebounds, as if to say that they're worried about something else, that they're not just taking this oil jump as inflation because something else they see is bearing down on that inflation, which might again explain why gold is anchoring, why the bonds won't sell off more aggressively in this environment where crude oil is once again on the march. and by a meaningful margin, too. Looking at the Atlanta Fed's GDP Now forecast here, we can see growth expectations are retrenching significantly. And we're now looking at 1.7% growth in the second quarter, down from the 2.1% in the first quarter. Now, that's a number that's going to change until we get those second quarter numbers actually reported. But most importantly, the direction of travel in this model, and so the tone of the economic data going into this model, that's been deteriorating since mid-May. Now, explosive tech earnings wouldn't tell us that. Back and forth headlines on the Strait of Hormuz wouldn't tell us that. But if this is how we are going to look after the kind of quarter we had in the first quarter, where we barely managed growth, and only really because of the AI boom and the pregame for it by manufacturers, if consumption is meaningfully weaker again, well, then this economy is going to look like it's on weak footing, and the kind of template that we see in the euro area is going to start to look much more plausible for the U.S., which is perhaps why we get a little bit of an uptick on rate hike expectations here today with this latest move in oil and in the bonds. But we're still in the same range where we've been basically since mid-June. So yes, now we're looking at almost 35 basis points. So that's at least one hike and maybe 50-50 chance of a second this year. But whether this holds up against what seem to be emerging cyclical concerns, that's still unclear. And so there's going to be lots to watch here, because the markets seem to be starting to show that they are turning. And they're not doing it all at the same time. But what's going on in gold, and to some extent in the bonds, relative to what's going on in the situation for stocks and, of course, for oil, does seem to suggest that something is starting to brew around the corner here. With that in mind, we go to where we have our exposure here. And there really was not major changes here that I made over the recent days. I've, for the most part, kept things unchanged. So now I'm just watching how this develops. So I'm still long gold. I am still outright short the micro futures dollar, so long Aussie, long pound, long euro. I still have a call vertical on in Bitcoin, which is working a little bit. All of that a part of this rates rethinks that I think it is coming. I'm still short the headline indexes, but through short call verticals. So I've collected the premium there up front, and the way that the vol was structured because of the call skew that we had here was you could get off a short call vertical with better than one-to-one risk reward, which of course just means you're receiving more premium up front than the max loss on the trade, which is of course excellent risk reward. So I've got plenty of time on this, 40 odd days to go. So I'm just going to let that sit. And as long as there's not an explosion higher, these ideas should work. And of course, if there is an explosion lower, they'll work that much better. I'm still holding on to this long calls vertical in TLT. I don't quite buy what's happening at the long end of the bonds here today, as we've said. I'm willing to give it another day to think about things. And of course, I'm still long crude oil. That continues to march higher, and long silver through a call vertical there. And that is macro money for today. As ever, we are here Monday through Thursday. That's right after Overtime, a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm also writing for the News and Insights portion of Tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money returns tomorrow. Happy trading.